pike is a definitely glitch. We're crushing already down to
Yeah,
15.
yeah, I looked at the fixed future, so it would normalize. Hey, real quick, so the
Bang.
decline was so the pressure that was taken off of this number was actually due to energy, as we talked about before the print. Diesel prices really didn't elevate as much as gasoline prices, right? So that also then helped this number. And actually, one of the leading things that actually pushed the number up was actually securities brokerage, dealing, investment advice, and related services, which rose 3.1%. So that's actually a good sign because that can fluctuate, right? And so that's not a really sticky area of this number. So I think the partial decline that you have for diesel prices for a lot of these manufacturers and producers is a good thing to see. The biggest pressure has been something that was on the security side and services side. I think that's also good to see. It's very volatile to say the least. We know that there's a lot of trade notes going on and taking place too. So once again, under the hood, this is actually a decent print. This is a welcoming sign for those that had that. CPI is still a bigger deal on the grand scheme of things, but this is a good trend to be able to see, at least for now, for this month for PPI. I think this is a decent print, and the areas that we saw a lot of pressure in were the ones that were actually deflationary in this print for the most part.
Appreciate that, Mr. Kevin. I'm continuing to look around this market, continue to watch everything. I'm digging through my I like to use the Seeking Alpha kind of news feed just for the morning. It's not so great for like breaking the news and being the first person with it, but when you get up in the morning and you want to just look through the stories, it's pretty solid. So I'm just scrolling through looking at some of the stuff that we got on here. There's a story around Nvidia, and I'm sure it looks like Raymond James. Nvidia slips even as James says spending concerns are unwarranted. So it feels like they are actually raising their price target at Nvidia up to 1100 from 850. It's a little bit of an interesting one there from them. Micron expects impact on DRAM supply from Taiwan earthquake. A little bit of an unexpected headline. I thought that there would be nothing from that one, but interesting one there. I'm also, if you guys can hear it in the background, I am listening to the Andy Jassy interview. And then also, I like to kind of tell you where you guys can get the news stories that we're looking at yourself. And Emperador brought up that he's looking at the PDF. This is actually kind of the thing that I like to do with the Twitter subscription thing or whatever. I don't want to put news behind the headline, but saying like, here's how you can find the news is something I've enjoyed doing there. So if there's any piece of data that you ever want to need help getting or don't know where it is, just let me know and I will send it your way and post it in there as well. But for the PPI and CPI, they're both in the Bureau of Labor Statistics website, BLS. So if you just type in bls.gov and then /PPI, you will find this release, and it's released at the same place every single month. And if you replace the /PPI with /CPI, that will bring you there as well. And they post in the exact same place every single month. So if you're looking for this report yourself, that's where you can go find it. But Emperador, I saw you on mute for a second.
Yeah,
10-year,
Kevin
10-year
mentioned.
down 25 bips.
There you go. Yeah, Kevin and AJ both mentioned they were looking at the 10-year and the dollar. Watching the dollar here pretty closely, Dixie came down close to the 105 area. It does have a little bit of support here. I'm hoping that this isn't going to be maybe a back test in the 105, like the lower 105, 105.1 area. And hopefully we accept back in, get below 105. Really need to see that happen if we want some strength to continue in the market, just in my opinion.
Yep, appreciate that.
Sorry, I was going to add one more thing because what we really don't want to see here, and what is trying to happen, also in watching the levels I was talking about earlier, I noticed SPY and ES never did clear yesterday's high. Tech QQQ briefly did, and it's starting to fall back into it just a little bit. Really needs to hold on to this move right here. Just from a technical standpoint, trading this, we really want to stay about where we're at here. If we start to accept back in, we could easily end up back in that box of yesterday or traverse this move back to the downside. So really watching these key levels here as we come in, what about 45 minutes or so until the bell?
Good morning. Okay, here we go. First of all, we haven't said it at all. I want to make sure you guys are following the amazing speakers up here. I really appreciate Kevin for coming up here and sharing so much knowledge on these mornings, and AJ, the architect, and Emperador also up here. Make sure you're checking out, giving both of them a follow. All three of them a follow. Definitely would very much appreciate that. I'm looking forward on what we have coming forward in this day. There's a couple Fed presidents that we should be getting ready to speak. We have Bowman, who should be going right now. We have Williams, who is speaking right now. Fed's Williams just said the outlook is uncertain. The Fed must be data dependent. I'll be keeping an eye on if he says anything, he or she, sorry. Susan Collins at 12. Chicago Fed President Goolsby speaking again today at 12:45. And then Bostic speaking again today at 1:30. There also is a Marvell, ticker MRVL. They have like an AI type conference. I believe that starts at 2 p.m. Eastern today. So definitely keep an eye out on that one. Let me see if there's any other major catalysts that I'm looking for. We also
The
have
30-year.
Oh yeah, that's a big one. Thank you. 30-year auction coming out at 1 p.m. Eastern today. Feds Williams saying the job market remains strong. Kevin, 30-year auction. What are you watching on this one? I know we had the 10-year yesterday. Fed Williams expects U.S. GDP to hit 2% this year. There was also a story from Goldman this morning saying that they still expect inflation to come down. Goldman still expects US CPI to get down to 2.4% this year. Fed's Williams says the Fed forecast rate cuts starting this year. Okay, so just staying in line. All right, I got distracted there, Kevin. I would love to throw it over to you and hear your thoughts on that 30-year auction that we have today. I know the traders in the chat will definitely be keeping an eye on this one at 1 p.m. Eastern, seeing how it moves the market. Kevin, what are you watching for that 30-year yield today and 30-year auction?
Yeah, we just got to look for the demand. Like I said, the 10-year wasn't that great, but the 30-year actually has been doing pretty well. For the most part, when it comes to seeing demand there. So if we actually do see strength in that auction, I think that also could give us a little bit more of a boost to the upside here in the near term. I will try to pull up my numbers here for you all real quick if anybody's just writing something down, but I can give you what we had in the past, and then we can kind of go for there. So the 30-year auction that we saw for March, the bid to cover was at 2.47. So you want to see a number that matches that or goes higher than that. For bid to cover. Dealer takedown was at 13.9%. And it's actually the lowest dealer takedown on pretty much all of the curve, for the most part, all of the curve right now, outside of like say the 2-year or anything shorter than that. So 13.93% for the dealer takedown. That's what it was the last month. And then I don't focus on the high yield. Just look at whatever the 10-year is doing, or not the 10-year, the 30-year is doing, whatever is trading at in the secondary market, match that to whatever the high yield is going to be, meaning the high print in order to be able to clear the auction. And that's going to give you a sign if the secondary market was off sides, either to the upside or downside. Yesterday, there was a situation where the high yield was actually higher than what the secondary market was trading at, which is why then we saw, additional selling in treasuries. So you want to kind of see that opposite effect here today. But once again, they have been fairly strong on a relative basis compared to others. So those are the numbers that I'm looking out for. And if you want those, shameless plug, if you want those, I do a weekly prep little report. So if you go to my page, you can click on it's pinned at the top. You can click on that, and I actually have a chart that has those auction results that we had from last month, so you can utilize them in your trading as the number comes out. So shameless plug there, but it's a really decent resource.
Kevin, will you
Yeah.
repeat that bid to cover, the previous bid to cover one last time for me?
Sure. Bid to cover was 2.47.
Great. Thank you.
Yep. Dealer takedown,
I had the dealer
13.93.
takedown. Yeah. 13.93. Gotcha.
Yeah, while you're clicking into Kevin's profile to see all that previous stuff, make sure you go in and hit that follow button. Getting really close to 5K there, eh?
6K now, yeah.
Oh, damn,
Slowly
I'm
moving up.
shortchanging you.
It's moving on up, yeah.
We shorted him by
and that's criminally underfollowed still.
Still, yeah, I 100% agree with that, man. 100% agree with that. You should definitely follow
Appreciate
Kat.
that.
And we appreciate you, Evan, for always hosting and allowing us to give us a panel to speak on. So shout out to the
Yeah,
host
no,
as
no
well.
worries. I enjoy these morning spaces. If I think I want to keep doing them. It makes it easier when we have these headlines, but we'll see how it does on some of the other days. But definitely enjoy doing these and sharing some information and just having a good chill chat in the morning and just kind of getting ready for the day. So definitely that 1 p.m. auction, a lot of Fed presidents speaking. The Marvell conference, MRVL, should give probably mostly for that name, but should give some volatility to a couple of the other semiconductor slash AI names that are coming today. Those are the majority of the known headlines that I'll be watching. And obviously we get the start of earnings season tomorrow morning, really with JP Morgan and BlackRock, etc reporting earnings. So definitely keep the whole banking sector on watch. And if you're trading more than the intraday, you definitely want to keep that in mind. I'm looking at the market and still kind of hanging out around that push after the PPI print. It had a little bit of a pullback, but it's coming back up. Some looks like we're gonna have a strong open today. ECB Lagarde saying the economy remains weak. Fed's William, commercial real estate is an area of concern, will take time to resolve. That seems like the most popular headline that he's said. Fed forecast rate cuts starting this year also is getting a lot of juice behind it. So definitely some stuff to keep an eye on. I want to make sure we're staying live until that 9 a.m. news dump. That's when a lot of stuff can come out. So definitely hang with us until then. And then I know our friends like to hang out live throughout the trading day, so we'll go into some other spaces at some point. Um, Any other big news stories from this morning that we haven't talked about yet? I'm
I
looking
would just
through all these price target increases and
I would just
stuff.
keep I would just keep your eye out on energy. There's a lot of stuff that's happening overseas from a geopolitical standpoint. So we did see a little bit of a spike for crude yesterday when it was trying to actually reverse a little bit. It was a little bit overextended at around that $87.50 level. We had some EIA data that came in a little hot. And when I mean hot, it came in where inventory levels were higher than the street's expectations. So you would have thought that the market would have moved down. And then we had some of that news around an imminent strike from Iran to Israel. And that's where we saw about $1 spike in crude. So just keep your eye out on that. And then also for natural gas, we did have Russia is attacked. Well, it sounds like they did attack and took a power plant offline. And then they're also striking, I believe, two of the largest natural gas underground reserves as well. I'm not sure what the result of that is, but that could also kind of move energy prices as well. Now, we don't the Freeport LNG plant is still kind of trying to get back to full capacity. So that also has put some pressure to the downside for natural gas, but it seems like they're close. The next couple of weeks, they should be back at full capacity, hopefully. That could also provide a bid if we continue to see this infrastructure getting hit in the Ukraine. And it's not just the Ukraine. There's a major pipeline that goes through the Ukraine that does fuel the EU with Russian natural gas, which they are still buying that. I think that's a misconception that they're not. So that's where I'm kind of keeping my eye out on. I think there's definitely war risk over the weekend. So I'm not providing any type of advice, but make sure you got your risk parameters put in place. Just know that things are kind of heating up. Sounds like some movement from Iran when it comes to the Red Sea as well. There's a lot of stuff that's going on that can impact the energy side. And so that's really my focal point for today. I mean, obviously we're going to focus on equities and all the Fed speakers, but a lot of this stuff the market has been able to digest and be able to push higher, or at least remain in a consolidation level. The black swan-ish type of events, it seems like the market's not going to respond unless it's something geopolitical, something that's outside of the market's control from a financial system standpoint. So that's what I'm keeping my eye on there.
Yeah, that's a
Yesterday
great
was
point.
go for that.
So I was gonna say that's a great point, Kevin. I am very attentive to any tape bombs, is what I call them, when these news stories drop, especially on the geopolitical side right now. All of the unrest over in the Middle East, and you can see, like CL, the oil futures. You could really see that what happened yesterday when we got that the news that the U.S. sees an imminent strike that Iran was talking about. So a lot of uncertainty over there right now, and sometimes your trades can look really good, but you have to have your stops in place over the weekend. I think that was a very good point as well, Kevin. You be careful holding things over the weekend when you do have a lot of this geopolitical unrest, because a bad headline or two can really take out some of your technical analysts as well. So really good points there. See AJ's hand up. I'll let him tackle it as well.
Oh no, I gotta hop off. I just want to say thank you for hosting Evan and Kevin and Imp, and just have a great day, y'all. I just wanted to say that before I leave. So
You
thank
too,
you.
AJ.
Yep, appreciate you, man. Have a good one as
Hey,
well.
it's, man.
Sure, we'll talk at some point today.
Yes, sir. Have a good one.
But yeah, yesterday was yesterday was a little bit of a weird day in that we had just had so many of those news bombs or whatever we want to call it. Just so many random stories moving the market and kind of wicking us around in the range. Whether it was Biden saying that yeah, this rate cut might have been delayed a month, but they're still cutting this year. We had some commentary around some Fed presidents all speaking at once that pushed the market higher. At one point, we had that 10-year yield, which pushed us lower. And then obviously we had that Iran and Israel headline, which pushed us lower as well. But there was like 4 or 5 just different random news headlines and catalysts that came out between, let's say, 1 to 2, 3 p.m. that was just pushing us up, down, up, down, up, down. And I wouldn't be surprised if we get something similar to that today. And I do want to preface this next comment with I am stupid. I am not a war commentator or anything like that. I actually have probably put in more time to learning this stuff than the average person, but still definitely not nearly enough to actually be the person you're listening to with opinions. But with that said, here is my opinion. I feel as if the further away we get from the initial Israel striking Iran and Iran retaliation, the longer they take to retaliate, I think the more time and thought that will be put into it. As in, I don't think it will be a very big provocation. Why can't I say it? Sometimes I know I'm not going to get the word out, but for spaces, I still try and do it. Provocation. We still know what's happening here. You know what I'm trying to say. I basically think that they're not going to provoke Israel more than expected. I do not think the strike will come directly from Iran. I think it's obviously going to happen. That's how this has always gone, but it will come from the proxies or from Iran outside of Iran. And I don't think it will be escalatory. I think the longer that they take and they sit on it, the more they're going to think about it, and the more the move will be calculated. So I think that if we would have gotten the strike last week, I think we would have had a higher chance of actually being escalatory than a strike that we get this weekend. So we'll see. Obviously, like I said, I preface this. I actually couldn't even get one of the words out too, and I preface this with saying I'm kind of stupid in this area. But I don't know. That's just my thinking around it when I'm thinking about this. We shall see. Look at the viewers dropping off for like 50 people when I'm talking about is struggling to get a word out. Good times on the spaces. But yeah, that's definitely what I'm focused on. We got about 2 minutes until this 9 a.m. news dump. For those who don't know, in the mornings, every single 30 minutes or so, with emphasis on the hour, so 8, 7, and 9 a.m. are when a lot of news comes out. 9 a.m. is the biggest time for news in the morning, I think. So we might get a story today. If we're gonna get one, we're probably gonna get it in the next minute or two. And we're definitely gonna stay on the spaces for that one. Feds Williams and ECB Lagarde are still speaking, by the way. Williams saying, I see a great deal of uncertainty over the economy. The U.S. economy has benefited from positive supply shocks. ECB Lagarde, risks to growth are tilted to the downside for Europe.
I just heard a news squawk that who's the guy from Amazon?
Andy Jassy.
He just mentioned another name being added to the board. Saw something else about them changing up the developer program for Alexa. So just a reminder, you mentioned it a while ago that Amazon does have some news stories coming out right now as well. With that, is it an interview that he's doing?
Yeah, it's an interview on CNBC. He just
There
got
you go.
asked if he'd want to acquire Paramount, and he said he's pretty comfortable with their bundle and Prime that they have right now. So kind of ruling out a Amazon acquiring Paramount right there.
We seem to get a news headline about once or twice a week on Paramount right now. I keep hearing yesterday there was one that came out midday somewhere about Sundance involved in that as well. Um, you mentioned it yesterday. There was a whole bunch of squawk that happened on a multitude of tickers and sectors uh, all at once, and it was really interesting. It was a lot more than what normally happens. So I see we're getting this news dump here, so I'll let you dig through some of the stuff, see what you find.
No, I appreciate you talking and looking through, but uh, Workday just got us something small. T-Mobile upgrading smartphone quality. So far nothing that's going to be moving the stock, any stock. All right, a boring 9 a.m. news dump. It looks like it's shaping up today.
We are continuing higher here. The good news on that is when we were taking that little bit of a dip back test, it looks like we came back. The initial candle reaction, a lot of times, is something I like to look at. If you do go to maybe your NQ futures, or even you can go look around at QQQ or SPY as well. But I really like to watch the futures, especially when it comes to the news and data release type of trades. If you go just even to a 1 minute chart, it's very simple. Look at the initial reaction candle and then see if we hold on to that. We did just that on both NQ and ES futures. Very good sign there that we didn't accept back into that reaction candle and start to kind of retrace it. You know, sometimes we see either a V-shaped recovery on the bottom or an inverse V, if you want to call it that, on the top, and we start to see that move retrace. We held almost exactly on top of that 1 minute candle reaction on both ES and NQ here. So another good sign. We haven't been able to go a whole lot higher, but we are hanging out up here. So this will make the opening very interesting. The dollar still above 105. Basically came back to the area that it was holding before the news and rejected there, but did make a second little bit of a higher low. So watching that as well. Several things to watch here going into the open. It's going to be an interesting day to see how they digest this. I know Kevin was making some really good points about it earlier. So really interested to see how we continue here, if we even go anywhere at all, or if we continue to kind of be range bound, maybe wait for the next catalyst, which will be a lot of those earnings you mentioned.
Awesome. That was a pretty good impromptu wrap up there, but we are going to go into here. Was there anything else you want to add on top of that, Emperador, you're watching for today?
Uh, Not really, to be honest, other than what I mentioned a while ago. I just want to see what we do compared to yesterday's range. That's the main watch for me today. So we'll see what happens. Hope everybody has a great trading day out there. Appreciate Evan for hosting, and Kevin always bringing amazing information and insight. So make sure you follow both of those two guys 100%.
Appreciate
Appreciate
that.
you guys.
Definitely make sure you're following Kevin and Emperador, and I know AJ was up here as well. I appreciate them for joining in and hanging out on these morning spaces. Definitely go in and check out their pages. You heard in these spaces why they're so smart. I feel like spaces like it's talking is much more difficult than just tweeting and preparing and all that stuff. So I really use these spaces to figure out the accounts that I really enjoy and follow. And these are two of them for sure. But Kevin, anything you want to add in here? Anything that you're watching for the market today? Any closing remarks on this space as we're getting ready for the day to start?
Yeah, Christine Lagarde actually did just make a comment saying we will get a lot more data by June, and that kind of signals that maybe they won't cut in June. It sounds like by June might be the time that they actually make that decision, and you are seeing the euro retrace back to the downside. Dollar is starting to strengthen. So continue to keep your eye out on her commentary. The equity market, just because of the data, might be a little bit shielded in the near term, like in the next like 30 minutes to an hour from any type of dollar reaction. But tread lightly with that dollar up at 105. Markets are still thin, guys. I just want to emphasize that. I mean, I'm looking at it. I'm only seeing 20 on the bid, 20 on the ask. When you're looking at the E-mini S&P futures, that's kind of a big deal. And Tuesday of last week, we were sitting at around 65 contracts on the bid and ask. So a significant drop in liquidity, which can create these large moves to the upside or downside. So it doesn't mean that something's going to happen. I'm just saying that does usually tend to lead to more volatility in the market. So be prepared for that. Evan, I appreciate you, and I appreciate you. I'm about to drop as well. I hope you all have a good rest of your day, and I'll talk to you guys during Power Hour.
Yes, sir. Looking forward to it. Appreciate you joining us, and we'll talk on the back end on when the next one of these are tomorrow, if it's sometime next week. One more time, make sure you're following the speakers. Appreciate them. Hey, follow myself. Why not? Posting free stock market news all day, every day, trying to keep you guys up to date. Trying to get up to 500K. The slow grind up. We're about 80, 90K away from it right now. So we'll hopefully be there soon. Follow their speakers. One thing I did want to also shout out. I don't know how many of you guys know I have a data visualization newsletter. So I pretty much the only newsletters that I personally look into. I'm sure you see get me guys post a lot of these graphics and charts just showing stuff. I love good data, good information shown through a chart or graph, shown visually. It's how I tend to learn the best. So I decided I want to start my own one. So if you guys see pinned up in the nest above, there is a tweet with a link that you can go in and once a week, once every other week, I am posting out a couple charts, whether it's analyzing an earnings that just came out or doing different stuff around Costco and a bunch of other names, Amazon, etc. That we just make a couple visuals for. It's a free newsletter. It's honestly a really great time, and we're still in the starting stages of it. And I can tell you, this thing is going to be awesome. So up in the nest above, my free newsletter, pretty much all visuals, easy read, and I know you guys will enjoy it. So definitely go check in the nest above, get subscribed to that newsletter, get it directly into your inbox, and I know that you will enjoy that. So I appreciate everyone. I hope you guys have a good day. And I'm gonna probably go over and hang out on Jordan's Spaces for a little bit. I see that he's live. H the Kid, TA. And yeah, appreciate you guys. Hope you have a great one. And I will catch you all later today, hopefully on all these other spaces, but maybe tomorrow morning with one going live. So have a good one, everyone. Follow
only one question because all the other ones were already asked, and it refers on budgetary policies. As you know, Germany is already pursuing a restrictive budgetary policy, and Italy and for sure France will also have to do, given their public deficits larger than expected. So it's a bit different question than the previous one, but would this situation of restrictive policy offer a reason for the ECB to maybe accelerate future rate cuts? It is my question.
Well, thank you so much for your question. And on fiscal affairs, I'm going to limit myself to the comments that we included in the monetary policy statement, where we indicate that government should continue to roll back energy-related support measures so that disinflation can proceed sustainably. And of course, we then say that implementing the EU's revised economic governance framework fully and without delay will help government bring down budget deficit and debt ratio on a sustained basis. We had the privilege of Valdis Dombrovskis being with us during the Governing Council meeting this morning. And I think all governors were very pleased to hear him confirm that the revised economic governance framework will be put to a vote to the European Parliament before the end of the session, which I think has another 2 weeks to go. So this is good news to the extent that there will be a framework within which governments are expected to operate and which will be guiding principles and helpful from our monetary policy standpoint. Thank you.
Thank you, Madame Lagarde. And the next question goes to Carlo Boffa of Politico. Carlo, please.
Thank you very much for taking my question. Good afternoon. First question I wanted to ask you is the services inflation is still very sticky. That's flatline for the last 5 months, and the underlying momentum is now accelerating. So would you say that the ECB could theoretically still go ahead with a cut in June if services inflation sticks at around 4%? And my second question is if you can give us a bit of color of the discussion within the Governing Council around the balance of risk surrounding inflation. Some of your colleagues have suggested that the balance of risk are now more balanced. Where do you stand? Thank you.
So thank you for the two questions. On your first question, you are right, and I think we point out very clearly in the monetary policy statement that services inflation is still holding at high levels. It has been at 4% for the last 5 months. Domestic inflation, which comprises a lot of services as well, is at 4.5 and has been there for the last 3 months, if I recall. And this is a segment, and those are numbers and indicators that we're going to monitor very carefully, that we will look at very carefully. The momentum is something that we will be also very attentive to. But we are not going to wait until everything goes back to 2% to make the decisions that will be necessary in order to make sure that inflation returns to 2% sustainably at target in a timely manner. So it's inevitable that some items will be slightly higher. And we know that, for instance, if you look at the disaggregation of items, goods, for instance, are at, I forgot whether it's 1.7 or 1.1, but it has gone down. It's 1.1, it was 1.6 in February. So it's inevitable that some items and some segments will be at higher levels. And we will look at all of them to make our determination and to decide whether, on the basis of that assessment, we are confident enough. So that's the first point. Look, on the balance of risk, I know one or two governors who are keen on this balance of risk concerning inflation. But we've always tried to stay away from that in relation to inflation, historically. Historically, we have determined whether it was to the upside, to the downside, or broadly balanced or broadly balanced, in relation to activity, not in relation to inflation. And what we prefer to do, as a matter of principle, is identify those components that will be bringing an upside to the risk and those that will bring a downside to the risk. That's what we have done repeatedly in the monetary policy statement. We do that yet again. And, when you look at the level of uncertainty around, it's probably the right approach to do so in relation to inflation.
Thank you, President. And the next question goes to the executives of Handelsblatt, Stefan, please.
Thank you for the floor. One question is a follow-up on the oil prices. How much of an upward concern is that when it comes to inflation going forward? And my second question is on the BLS, the bank lending survey that you mentioned. What is your main takeaway from that? Is it that there is less demand by companies, or is it more that mortgages and consumer credit has picked up a bit? Thanks.
Well, thank you very much for your two questions. On the oil prices, it has increased, as was said by one of your colleagues, by 10% in the most recent weeks. And it's obviously an item which matters a lot. We have learned from the recent shocks that energy costs play a significant role, and we are very attentive to those evolutions. We are largely informing our assessment on the basis of futures. So we look at how futures evolve as well. It's not just the price of the barrel of Brent that we look at. We also anticipate, try to anticipate as well as is possible, and it's not perfect, but we try to use futures as an indicator of where the markets are seeing prices of oil for the future. Thank you for your second question, because the bank lending survey is always informative, but it's a survey, and it indicates what the banks assess, assume, expect from their customers, both the corporate customers and the households, the people, predominantly mortgage and a bit on consumption, but predominantly mortgage. So we have that. And we also have the hard data, which is interest rates that are offered to those customers. And you have the volume of loans on an annual basis. So if you only look at the bank lending survey, what you see is the anticipation by the banks that demand will be slightly lower, both on the corporate and on the household side. If you look at volume, there is a slight, not a major, but a slight uptick in the volume of loans to corporates, and a slight stable compared with the last month uptick in the volume of loans offered to households. And final point, on both corporate loans and loans to households, we have a slight decline in the interest rate that is offered to the borrowers. So you can deduct from that the financial sector is expecting that financing costs are likely to be smaller in the future. It's the beginning. In many of those numbers, data, indicators that we have, we see positive development, but it's the beginning of developments. And we, as I said earlier, in response to the first question, we want to reinforce that confidence that things are going in the right direction, both in terms of growth, but more importantly, in terms of inflation decline.
Thank you very much, Madame Lagarde. And the last question today goes
Good morning, everybody, and welcome on into today's space. Excited to be chatting with INX and Republic. I see we got Quigley already up here on stage. My friend Gandalf coming up on stage. Let's see. David, how's it going?
There we go. What's happening? It's a pleasure to be on your show again after an absence that was too long. I missed this place.
I love it. I appreciate you coming back on with us. Looking forward to the convo this morning. I do see the Republic account as well in the audience. Going to go ahead and shoot them an invite to get them up on stage. Also, thank you to Paulina, who sent over some of the topics, which we're going to go ahead and we're going to be covering today and just running through. Looking forward to this one. Main topic, by the way, is going to be around RWAs. I can probably update that title as well from the topic that they gave us, which was how to trade RWAs and predictions for RWAs in private markets. So I'll go ahead and update that since that is the one that she sent over to me. Perfect. Okay. I see the Republic crypto account in the audience. If you want to go ahead and request up, we'll get you on stage. And then, yeah, I think there's going to be some cool stuff here, some security token talk, some RWA talk. There is a few items to go over. So David, I'll give it a minute. I think we're going to have Andrew and Alan joining us on stage as well. Once they're in, we'll go ahead and we'll get started. Quick update for everyone while we are just hanging out here this morning on the markets. It's a good market this morning for Bitcoin, which is back over $70,000 a coin, trading at 70,700. Ethereum is over 3,500 as well, looking pretty solid here this morning. Even Solana, let's see, I think Solana poking its head up here and moving these last few minutes, a couple percent up at $173 per coin. All right, I see we got the Republic account up here. I'm gonna go ahead, I'm gonna drop you a co-host. David, I'm gonna go ahead, I'm gonna shoot you the other co-host here. I see the WolfWeb3 account coming in. Not sure if we're gonna have the INX group account coming on. We'll give it a minute though. David, we got Alan and Andrew joining us, or is someone already behind the Republic crypto account?
I think you need to ask the Republic crypto account to introduce itself.
Hello. Yes, Andrew's here. Can you hear me?
Beautiful. Yes, Andrew, how's it going?
Good. Going great.
Perfect. Okay. Well then, David, are we just waiting on Alan to get started? Or should we get rolling? Oh, there we go. Alan coming in now. Perfect. Okay. All right. Thank you, everybody, for coming on into the space. We are going to get started here in about a minute. Topic for this morning is how to trade RWAs and predictions for RWAs in private markets. Big celebration happening. So we're shining light here on Republic's Space Week initiative. And there's actually a big giveaway that's going on hosted by Republic Note. So just to note, this campaign is celebrating the 5-year anniversary of the Republic Note Community Program. A lot of you are probably familiar with Republic. You can see a few of their accounts that are in here. Very large company. And we also have Republic Crypto up on stage. You're also probably familiar with INX if you've been on some of my spaces and that security token market. So I think we've given it a few minutes to get people in here. So we're going to go ahead and we're just going to get some introductions going. Then we'll talk through some of the current state of RWAs. And then we'll go through Note's big vision. Let's start with that introduction. Andrew, actually, if you want to kick us off, brief introduction of yourself and Republic Crypto.
Yeah, happy to. And happy to be here. Good morning, everybody. My name's Andrew Durgan. I'm the president of Republic. I've been in the Web3 space since early 2010. I was CEO and co-founder of a company called The Coin Tree. We were the first doing multi-sig security and storage for Bitcoin 2011, 2012, and 2013. Following that, I was in the hedge fund space running due diligence and fundamental analysis engineering teams for hedge funds, most of which was crypto specific. I became a partner at TLDR Capital, which was the #1 ICO advisory firm globally, 2016, 17, and 18. So total wild, wild west. It was a wild time. And I joined Republic in early 2019 to build out what was meant to be the first vertically integrated crypto investment bank. We finished the integration about 3 years ago and now moved to a larger digital merchant bank evolution. Republic is really a nose to tail integration of capital formation, advisory, tokenization, token sale, infrastructure, wallet products, and treasury management. And those things are all vertically integrated. And we're deepening our relationship here with INX towards a inevitable acquisition, which is all public. And very, very, very excited to be here with Alan and team.
Beautiful. Speaking of Alan, would you like to introduce yourself?
Yeah, sure thing. Thanks for having me. Glad to be here. Alan Silbert. I'm the CEO of North America for INX. My background is in traditional banking. Worked for Merrill Lynch Capital, GE Capital, Capital One Bank. Did venture debt and commercial lending for 20 years. And about 2013, went down the Bitcoin rabbit hole and got fully immersed in the space, launched a Bitcoin luxury marketplace around then. We actually had the claim at the time of being the largest real estate asset to be sold for Bitcoin. We sold a villa in Bali for I think it was when Bitcoin was $600. We sold a villa in Bali. I'm sure the adjusted return now, I'm sure that villa is worth tens of millions of dollars. But and then got joined by INX 6 years ago. When we were first getting started, we were starting down the process of doing the first and to date the only SEC cleared security token IPO. And then 6 years later, we have a fully regulated, very broad-based asset in INX, having licenses to trade cryptos in 48 U.S. states and territories in the U.S. We have a broker-dealer and ATS to trade security tokens in the entire U.S. and territories, and we have a primary raise platform for security token primary raises as well. Also have a transfer agent license. So, yeah, everything under one roof shop for everything in the crypto and security token space.
Perfect. Thank you, Alan. And David, please introduce yourself.
Yes, I'm David. I'm Wolf's best friend, and I will be here to ask some questions and mostly learn from our established and experienced and esteemed speakers on the stage. I do marketing and business development at INX, and also educating people about tokenization, real world assets, and how they can take advantage of it, both as investors and as business owners, asset allocators, across the spectrum. And super excited for the discussion. So let's get it going.
Perfect. Yeah, so we're going to jump into it. We also do have on stage with us, we're very lucky to have my good friends Kyle Sondland, Gandalf, and Quigley, as well as the Wolfweb 3 account and the Republic Note account joining us up here on stage. So let's dive into it. I'm going to kick it off with Andrew and Alan here talking about the current state of RWAs as seen by the experts. Andrew, can you roll us into this with your vision of everything that's happening here, as well as some predictions?
Yeah, absolutely. So I think RWAs have definitely found itself in the spotlight this year. RWAs and security tokens have always been around, probably much longer than people realize. It's really only recently that they have found themselves somewhat center stage, and that's really because of a mixture of technologies, the evolution of the technology, as well as the evolution of the integration of those technologies, where now it's really viable to actually tokenize these assets because there's avenues for them to be stored, traded, sold in a way that's not overly encumbering. So what do I mean by that? Well, previously, if you wanted to engage with a security token, whether you were an issuer or even an investor, you had to deal with multiple different parties with different goals and initiatives. So if you're an issuer, you'd have to deal with a tokenization platform, you'd have to deal with a wallet product, you'd have to deal with a primary issuance platform, you'd have to deal with a custodian, you'd have to deal with a transfer agent, you'd have to deal with a exchange, and so on and so forth. And if you had to deal with 5 or 6 different parties to buy an iPhone, you just simply of those services and technologies that make this actually viable, not only from a cost and efficiency standpoint, but just purely from a logistical and onboarding standpoint. So right now, I think is where you're going to see a lot more interest turn on to this asset class. Obviously, having that in the institutional side. But what I'm more interested in is what that looks like on the retail side. And that's where Republic likes to put a lot of his attention. We do have exposure heavily on the institutional side, but the retail side ultimately is what's going to probably change how we socially look at this asset class. And for us, our big focus this year is around culture assets and the tokenization of culture assets. So we believe that will be kind of the tip of spear for what will be a fundamental change of how we look at not just digital assets, but just how assets are interpreted as a whole.
Super interesting. And we'll have to dig a little bit farther into the culture asset side before we do that. Alan, do you want to jump in and give us some of the things that have been exciting you about this space and anything that you have thoughts on what Andrew just shared there?
Yeah, sure thing. I mean, I think really the most exciting thing to me about RWAs and what it can unlock is really the access to the public. So you just have a lot of asset classes that were really just for rich folks and institutions, and all of a sudden it's we can open these up to the general public, and somebody can own a piece of a building, or can own a piece of art, or can own a piece of a classic car, or intellectual property of a drug, or it goes on and on. So this is the beauty of the space is that starting with with Bitcoin as like democratized money, you now have tokenization and RWA, and it's just further democratizing access to investments, different options for investors. It's really exciting how it broadens access to the whole world, really. And yeah, if you have a phone or a computer, yeah, sure, you can own a piece of a building or something, and that's really one of the main exciting things for me.
That's great, Alan. Appreciate the insights there. And then David, if you want to weigh in here, and then we can dive a little bit further into some of the note vision, and then we can also get some insights from other panelists.
Yeah, I think everyone said top-notch information here being shared, and for me, it's about when I got into crypto, it was with the idea that I look at 20-something-year-old old me can now invest in early-stage startups like I'm a modern-day Mark Andreessen, but that wasn't really the reality. The ICO bubble, as Andrew mentioned, crazy days. Like those days were, the days where you could have you invested in these vehicles and these tokens that masqueraded as sort of an investment contract. That's like, oh, I'm getting some exposure to an early stage crypto startup. It's very exciting, but in reality, all you did was buy a promise, on some white paper will eventually make it to mainnet, and that those dreams eventually sort of dissipated into thin air. And real world asset tokenization. I'm talking about the startup niche specifically, but there's many different niches, and we're talking about private market specifically. Something like private credit is also comes to mind, where institutional investors could get double-digit yields on their money when the mom and pops need to go and max out at 5% if they're buying treasuries in a high interest rate environment, or get even less from the bank, or when interest rates are zero, they don't really have yield earning opportunities. So for me, it's about maximizing the opportunity for helping people reach the level of financial freedom that VC investors can get to, but typically that retail has been off limits. And the one example then is the note, where that's holding a portfolio that includes names like SpaceX and Gumroad, like massive companies. And SpaceX is a famously large, massive private company, and if you're not a massive, well-known VC, it's very hard to get SpaceX exposure. And over here, there's a way to do that legally on chain, 24/7, and that for me, that's everything else is secondary to the potential and the promise that trillions of dollars of wealth will come on chain and open itself up to the retail masses, and eventually free people from the shackles of debt slavery.
Yeah, that's a great point there. All right, so let's roll a little bit further in here so we can start to flesh it out. And again, if anybody has thoughts on the panel they ever want to get in, you can always use that raise hand feature that you can find through the little emoji button. But I want to talk about the main topic for today, which is Note's big vision and what they want to achieve here, and really this launch of Republic Digital. And Andrew, I'll turn it over to you to start covering that.
Yeah, so a lot of topics there. Let me start on the note side ultimately. So the note for us has always been a solution to allow retail to participate in an asset class that they've previously been gated from. So in the United States, there's something called accreditation laws, which basically means that unless you are making over $200,000 a year or have $1 million in net wealth, that you cannot participate in private markets. And it's created a wealth gap that we find to be very troubling from not only a financial standpoint, but a social standpoint. And the fact that someone could go to Vegas, mortgage their house, and put it all on black, but they didn't have the ability to invest in pre-IPO SpaceX is very confusing to us. So we worked on a solution to kind of creatively bypass that in a way that would allow your mom, single mom of two in Iowa, the ability to participate in those markets, and that was really the birth of the note. So, for us, when Republic participates in, and it's Space Week now, so we can touch on that, but participate in investing in SpaceX or Relativity or Axiom or Firefly. These are all different space companies that the Republic has invested in and worked with. Now, a portion of our upside is then distributed to the note holders. So now anyone that holds Republic Note now has access to the upside of that asset class that they otherwise wouldn't never be able to touch due to U.S. regulatory frameworks. So that creates a really, really first of its kind and really unique opportunity for those individuals. So we're really excited about that, and it's really basically an evergreen asset, because as we continue to add and work and participate with more and more companies, we just continue to add more and more companies into that portfolio. So just continually ever growing. One of the things you touched on was Republic Digital. Well, so if you follow Republic, you may have seen in the news recently that we had a big acquisition. We acquired Republic. We acquired Golden Chain, which was the digital asset arm of Golden Tree. Golden Tree is a $60 billion traditional asset management firm out of New York City. You're a really kind of traditional credit shop. Really, really great firm, extremely high efficacy, very strong performance. We've known them for quite some time. They are investors in Republic, Golden Tree itself. And we had an opportunity to pull the digital asset arm from Golden Tree and put it under the Republic umbrella, which was an incredibly complicated acquisition. But we did get that done and closed. And now we have converted what was Golden Chain into Republic Digital. And right now it's a liquid fund with liquid strategies with depending on the day, $130, $150 million AUM starting with. And we'll be growing that, targeting around 400 million AUM relatively soon. Incredible team led by Joe Nager, who's a good friend of mine, but has had optimal maximum performance at Golden Tree as well as at Morgan Stanley. So not only does it just up the overall talent at Republic itself, but now we have an entirely new offering that we can leverage into all these other vertically integrated aspects of Republic. We also plan to roll out other funds under Republic Digital, market neutral fund, long only, some fun meme coin strategy stuff as well. It's really, really great group, and we couldn't be more excited to have them with the Republic Shield now. So, and happy to answer any questions on that if anyone wants to dig deeper. But yeah, that was a big moment for us.
Love it. Let's go to Kyle first.
Hey, Republic team. Thank you so much for being here. It's good to see a ton of familiar faces with David and Alan and Jason and Quigley. And everybody here. Always a pleasure. Unfortunately, I am going to have to bounce at 10, so I wanted to just hop in and ask a question. I just wanted to hear, I saw with the acquisition, you are kind of spinning up a new vertical of Republic Digital, and I was just interested to hear the difference between how you see Republic Crypto positioned versus Republic Digital and how those companies could work together.
Yeah, so Republic Crypto is the Web3 arm, or was the Web3 arm of Republic. So when I joined Republic in early 2019, it was to build Republic Crypto. So we built out our advisory arm, our tokenization arm, our token sale arm, wallets, treasury management infrastructure. And we built that in parallel to Republic, which was more of a Web2 centric business. But over time, we started to merge those things together. So Republic Crypto is still a brand, but ultimately Republic itself is now a Web3 first firm. Kind of what we say is last year we were Web3 leaning, and now Republic itself is Web3 native. And so we'll start to sunset that Republic Crypto concept more and more, as Republic itself really is just Republic Crypto. Where Republic Digital sits is that comes in as our really kind of investment and liquid strategy arm. So they'll be managing our liquid strategies, liquid funds, and a variety of other funds that will spin under it. For those, the regulatory hat, they're currently an ERA, but will inevitably become an RIA as their AUM grows. And you know, that then becomes that registered investment advisor that will sit here at Republic. So that's something we're very comfortable with. We have a number of different funds and fund strategies and RA already sitting at Republic. So we know that business really well. But to have a business that's now entirely focused on funds that are specifically Web3 native is, with that, the talent that comes with it is a huge step up for us.
That makes a lot of sense. And so, you know, just to clarify, and I know you gave a great explanation there, but just so that I can kind of align it all in my head. So, you know, you see a lot of the roles, like in terms of you saying, you know, in some respects sunsetting Republic Crypto with that kind of going underneath Republic. Do you see some of those traditional tokenization roles actually changing to the Republic Digital responsibility, or is Republic Digital really going to start representing some of the business practices that the acquisition company was doing in terms of more capital market stuff?
Yeah, definitely sitting, at least initially, sitting as more capital market stuff. You know, we do everything in steps generally, so it's very hard to eat the elephant in one bite. So initially coming in, and continuing the services that it was doing at Golden Tree. So like one of the really big focuses for me was I didn't want to interrupt any trading operations throughout the transaction, and I actually want to increase the momentum because of the market conditions. We started that transaction in November. That's before the market turned around, and we, when I say Joe and myself, were anticipating this type of market turn, which is why we kind of kept the foot on the gas through that transactional process. But anyway, phase one will be very much focused on providing the services that they were already doing, and maybe an additional parallel and ancillary services such as market neutral, long only, etc. As time grows and we do deeper and deeper integrations, then we'll start to wrap that more into kind of the Republic mothership further, and you'll see even further overlap and synergies that take place. So, but you got to walk before you run ultimately, and so we're going through phase one right now.
Awesome. Thanks for the transparency. Really appreciate you being here. I see that Gandalf has his hand up. So Gandalf, you want to take it away?
Sure. Thank you. First up, thanks to Wolf for allowing me to join this discussion. Very honored to be here. And I'm coming in from more of the crypto native space. My experience or background is in NFTs and then more recently in the DeFi markets. And there were two things that I wanted to touch on. One was just a thought that I wanted to add to some of the comments that you guys mentioned earlier about RWAs. And then I had a question for the Republic team. The first thing that I wanted to add on was around how RWAs are, in essence, a bit of the next step in tokenization when it comes to both tangible and intangible assets, as well as just when we're talking about NFTs or excuse me, or just crypto tokens in general, in the sense that for the last number of years we've been exploring tokenization through these different token standards, etc. But they've really just been exploration. They haven't been solving real world problems. And that's where I really like the concept of the RWA, in the sense that it's taking something that works in the real world. You've got your assets, you've got your your shares, your stocks, you've got company portfolios, etc. And it's not trying to reinvent the wheel, but it's just trying to solve one portion of an issue. Like you were saying earlier about how it's opening up these investment opportunities to the everyday mum and dad and the retail investor, where it's generally speaking normally only for institutional investors or high net worth individuals, etc. And I think that's a really important point to touch on, is that we're kind of coming at this from building on the existing or traditional financial services and aspects. The question I had was in relation to Republic's note and then other services. I'm relatively new to the Republic product and the team. And in relation to regulatory variations across the globe, does your product take that into account? Does it solve that issue of I might not be able to invest in a particular stock market or area because of my geographic location or the regulatory infrastructure, not infrastructure, but the regulations that I fall under, etc.?
Yeah, so generally the US is the strictest of regulatory frameworks. So if you can get through there, you can get through just about anywhere. But there are other jurisdictions that have nuances, whether that's UK or Europe, which have separate nuances, Hong Kong, Singapore, etc. So, when we look at, particularly for the note, most of those assets, not all, but most of those assets are US-based assets. So they follow US-based securities law. As someone who's overseas, actually the ability to participate in US private markets is much, much easier, in fact.
Right,
so there's two types of offerings. Well, there's many types of offerings, but generally for private markets, you'll see two types of offerings, something like what's known as a Reg D offering, which is for accredited only. But that same asset could be offered in what's known as a Reg S offering, which is for international participants. And international participants don't always have to follow those same criteria. So they have the ability to, if they can get access to some of these things, can participate in this asset class occasionally. So anyway, it's a long-winded way of saying that Republic works in almost 100 different jurisdictions. We have offices all over the world. And as far as navigating this asset class from a transatlantic and trans-Pacific mentality, Republic is really the ones that are leading that charge and tip of the spear.
Yeah, very cool. And so as far as that goes, the transatlantic, trans-Pacific, just the global outreach that you guys have, does that dictate some of the assets that maybe you include, or some of the investments that maybe you do or don't purchase based on what fits the global criteria?
Yeah, I would say that's definitely the case. And, based off of where our footprints are, is certainly we lean into that area more, right? We're doing a really big RWA tokenization out of the UK right now. So that's going to lean on UK regulatory frameworks as well as US regulatory frameworks. If we're doing a big token deal out of UAE, for example, then we'll lean on VARA and ADGM frameworks in the same way that we're lean on the US framework. So, that level of legal dexterity gives us a really huge advantage over the rest of the market. Yeah, I usually say Republic is really a mix of two things. It's a mix of legal engineering and technical engineering. And the founder and CEO of Republic, Ken, is arguably one of the best securities attorneys in the United States. And if you are the best security attorney in the United States, you're probably the best security attorney in the world. And it's his ability to innovate on legal structuring and frameworks that has allowed us to be able to navigate that the way that we have.
For sure. No, I appreciate those answers. It's definitely something that I think the tokenization or the Web3 blockchain space really allows for removing and breaking down some of those barriers, so that really it comes down to the legal and the technical. And if you can solve those, which it sounds like you've got the right team to be able to do that, then yes, the world's your oyster, isn't it?
Trying.
Yeah, Jason, you got a thought here?
Yeah, I just wanted to dive a little deeper into the note. We track its trading activity on stm.co, and one of the things that we were exploring as we were onboarding it was the fact that's related to the Republic wallet. You guys have dividends that may come out to the Republic note holders as companies exit, right? So we'd love to learn more about how that interacts. How do investors interact with the Republic wallet? Their dividends. Can you just expand a little bit more about what investors can expect from participating in this unique asset?
Yeah, the Republic wallet itself is basically the connective tissue that connects a bunch of different aspects of Republic and Republic's partners, right? So the Republic wallet is integrated into INX, for example. And we built the Republic wallet, like most things at Republic, we built it because we needed it first. We have a tokenization platform and we have a big token sale platform, and we needed a place that we could drop in assets easily and not have to collect everyone's wallet addresses. And one of the issues for us was because we're chain agnostic, we can mint on 36 different chains, right? So I needed a wallet that was multi-asset. I needed a wallet that was non-custodial, and I needed multi-sig security frameworks built into it. And there wasn't another wallet out there that could support that initiative while also giving us our own provenance to be able to add chains as we wanted. So ultimately, we built the Republic wallet. We actually built the Republic wallet on a wallet infrastructure product that we built also called Wallaby, so that we could ultimately do wallet as a service for others in the future, which we are now doing. So once we built the wallet and we launched it, that gave us that connective tissue to be able to not only do our token drops and minting and distributions into that wallet, but also when there is a rev share or an event where we need to be able to distribute stable coins as a form of payment or remediation, now we have that feature also. So for example, when the note does its first distribution, when we liquidate some of our carry positions, then we'll be able to very easily identify where the wallet, where the asset is in the Republic wallet, and we already know that those individuals are KYC'd, and we have the ability to do the distribution directly into them. That's powerful for a lot of reasons. One, from an operational standpoint, it makes life way easier. For a user standpoint, it makes it very, very seamless. And from a financial standpoint, we have the ability to do microtransactions. Previously in TradFi, when they're distributing dividends and annual dividends, it's a very expensive process, whether you're distributing $1 million to somebody or $5 to somebody. But when you're doing it through Web3 standard and using a stablecoin solution into this wallet, it makes that extremely cost effective, which makes this model viable.
Makes total sense. Do you guys, so as we were kind of talking about earlier about, you guys are very global. There's multiple jurisdictions. And, to your point about regulation, in other jurisdictions, you can get very creative. And when I say other, I mean non-US. So are there any future plans for Republic note holders that they can expect, whether it's like diving a little bit more into the DeFi realm, anything that you guys are exploring on that end?
I think that the best ad related to that is we want to start looping in more of our Web3 initiatives and crypto activities into the note. It was something that we had to be very, very careful with when we first built the note 5 years ago. because the U.S. regulatory frameworks were not even remotely as comfortable with the asset class as they are now. And so now I think there's a lot more flexibilities around that. We're obviously the SEC and potential SEC changes that are coming will unlock more. And so ultimately, we really want to try to loop in much more of that activity into the note and the note performance. So I would say keep an eye on that, because that will fundamentally change how we look at the note going forward, and just the value of that asset in general.
I appreciate it. Happy to pass the baton over to anyone else that has any thoughts. I'm really excited to see you guys and IronX over at the Tokenize This conference and all the work that we've been doing together.
Thank you.
Alan, I'd love to give you the opportunity to jump back into the conversation or share some thoughts on what we've been covering.
Yeah, sure. Yeah, I think the Republic node. We're very excited to list it on the INX platform. It kind of gives a perfect example of what this technology and what this Web3 environment can enable. So it's like I was saying before. It's really like these kind of opportunities didn't exist before, that you could have a small little piece of a venture portfolio and benefit from 600 or so companies that are underneath it. But it's really just the start. And we see many different opportunities out in the space. So you see government bonds and treasuries getting tokenized is getting a lot of traction. A lot of that's thanks to BlackRock. And once BlackRock does something, all the other institutions kind of wake up and want to play catch up. So that's going to drive a lot of that kind of product into the space. Real estate gets mentioned over and over again. And there's a lot going on in real estate. There's many different companies that are doing a tokenized real estate. So it's a little more complex of a product, but real estate's multi-trillion-dollar markets in the world, and so it's just ripe for disruption. Stable coins getting established as a total anchor for everything, and you have the USDC of the Paxos, you have Tether, kind of riding this base layer that a lot of these assets can run on and pay dividends out of. Stable coins obviously here to stay. And like the USDCs and Tethers of the world have such a huge foundation now, so they've established themselves as that's going to be the anchor layer for a lot of these things. And yeah, I could go on and on. It's another interesting thing that we're seeing for tokenization is carbon credits. This is environmental. Everything is the focus of multiple countries right now. So carbon credits are an interesting thing that can run on tokens, in that every single party that is part of like a carbon credits ecosystem and is providing some part of the structure, production, financing, whatever, needs to be very transparent and needs to publish a lot of information that needs to be shared across multiple parties. And the carbon credits is a very interesting use case, because you can share all this stuff on the blockchain very transparently, at the same time moving carbon credits around. And so it kind of serves a couple different use cases at the same time. And so, bottom line, there's a lot out there. It's not that there's a lack of opportunity, for sure. So it's a matter of, grabbing the best opportunities and pushing the industry forward.
That's perfect. And David, you got any thoughts here before we keep rotating around a little?
Rotated around. I mean, I said, like, I think everyone's covered pretty much the entire. Carbon credits are interesting. I mean, you see a lot of wild innovation, and I think Jason mentioned it briefly. But what I'm excited about the most in real world assets is that DeFi integration, letting people, take loans or collateralize stable coins or create AMM dexes, automated market makers, for different types of real world assets. Because at the end of the day, like, tokenization is a upgrade on traditional payment rails, but I don't think it's enough to just swap out JP Morgan's backend for a blockchain. I think you need to create, completely new financial instruments, and that's where the DeFi RWA crossover comes in. So, that's particularly excited. I mean, people mentioned bonds, credits, all different type of asset classes. Once you wrap that up and use that, financialize that, use that to mint stable coins or to get a loan. Imagine you could kind of get a mortgage using your Tesla stock as collateral, or this. That's kind of that's where we're heading for sure. The fact that it's regulated means that you're not going to see innovation moving as fast as crypto, as you can't move fast and break things when you have to deal with the SEC and FINMA and the FCA and the FSA and everyone else. So that's why it's a little bit more deliberate. But eventually, when it happens, as they say, slowly then all at once, we'll see this like massive financialization, tokenization of everything.
Perfect. Hey, Cass, great to have you on stage. I'd love to turn the mic over to you for any thoughts or questions you have here.
Yeah, thanks for having me, Wolf. And good to see the Republic Crypto team on here. I know we go way back with some earlier projects, so always love the work that you guys have been doing over the years. On the topic of carbon credits, I think there's some underlying layers that sometimes we skip over. So I see the positive aspects of, say, Chia blockchain, right, where they're taking on carbon credits and trying to make this transparent. And I think there's much need for things like that to have the accountability off the Excel sheets and not doing things off the books. The problem, however, is the fact that we're still incentivizing using money for people to buy these carbon credits. And so what you have is larger entities and companies being able to still have a loophole by paying out of these carbon credits and still continuing to be bad actors. So that underlying layer that I would like to see is more on the side of environmental justice or having more penalties that are not related to monetization, where larger entities can't just buy their way out of those carbon credits. So I think there's a real opportunity for blockchain to bring that transparency on board, but just remembering that other layer of how do we kind of regulate these larger entities all the way down to even the individual, how regulating even individuals so that it's not just something we can pay out of, or there's a lot of politics behind the scenes behind carbon credits, such as oil and the play there, if you research that. So, a real opportunity, but remembering that it's going to take more than just incentives to get people to change to help the environment. And there can be plays to lean into environmental justice beyond just incentivizing good players.
Yeah, Andrew, you want to take that?
So what was it? What was the specific question there, Cass? Say
Yeah,
that
no
again.
question. Just great points on what you guys were referring to on carbon credits, but underpinning those problems that we have, that I see a real need that blockchain can bring the transparency, but just knowing that there has to be better ways than just incentivizing people that can pay out of loopholes, and also reprimanding companies that can get away with things like that.
Yeah, I mean the carbon credit system is not ideal, and for those that aren't familiar with it, basically, countries sell their the carbon credits they earn for not polluting to other countries or businesses that are polluting, and in an overall effort to try to create this carbon neutral environment, which is not really what happens. There's a lot of corruption in that side of the business, which is why blockchain has been a very interesting and potential disruptive force for it, because it creates a high level of transparency, public record, and makes it so it's very, very difficult to manipulate those credits, and where those credits sit, and what the real value of those things are. So I think we've seen carbon credits come up a lot probably the first carbon credit blockchain initiative I saw was probably almost a decade ago, probably 8 years ago. And it's still something that people are trying to push and move forward. I think the problem, and you kind of hit it on the head, is because it's really a financial product, and most of the people that are taking advantage or abusing the carbon credit system don't necessarily want it to be fully transparent. That it's been difficult to get that over the line. Another area that we've seen a similar problem in RWAs is around film financing. So we do tokenized film financing. It's an area on the culture side that I'm very interested in. But it's another weird scenario where people don't necessarily want all the finances to be fully transparent associated with the filmmaking processes. There's a lot of tax credit stuff that's done in there. There's really interesting manipulation of the waterfall. And so that level of transparency and that level of accountability really changes that model at its core. And so I think it's just going to take time in order before we really start to see the proliferation of that in that space.
Beautiful. Yeah, Kayla, jump in.
Yeah, so I have a question about the notes and how they work. So I was reading through your page and I saw somebody say, what is the best note that exit for the notes we can find with Republic? I think that's a pretty interesting model as a whole. So I'm kind of curious how your notes work as far as when you decide to sell them, when you decide to invest in them. Does that question kind of align with how this works?
Yeah. So as far as how we determine when to invest in them, I mean, that's really based off the opportunity that comes to us, whether that is through our retail platform, through our RIA and investment arm, with our SPVs and variety of different funds. So that's more opportunistic on that side. As far as when we exit our positions, there's a mix of that. So in some instances, we'll exit positions just if we feel from an asset management perspective that the timing is right. A lot of these things, if they're equity, obviously you're waiting for either some type of liquidation event or liquidity event, whether that's a sale or an IPO. So in particular with our space assets, such as SpaceX, Axiom, Relativity, and Firefly, we keep close tracks on when a potential IPO opportunity would be for those particular businesses, and that would signify some major exits for us and for the Republic note holders. We haven't wrapped in the crypto assets as much into it, but as we do, we have an asset management team, right, that specializes in in selling down Web3 positions. So they have their own strategies and systems and how we do that. So there's not a very extremely clear answer to that because it's all based on market conditions, timing, where the company currently is, how we feel about it from an investment thesis. We take stock of our portfolio constantly, and our treasury management team is always evaluating on a monthly, if not weekly basis, on what to do and how to manage our positions appropriately. And I think it's important to remember that Republic's upside and the note upside is all tied together, right? So we're making these decisions that are ultimately the best for the longevity of Republic, and thus the longevity of the note.
I love it. It's really interesting. I've never seen it. So my question would be, I'm reading this. I hate to be so specific, but it says Dapper Labs, the largest payment to note to date. If you find $510,000, exciting. So how would I find that in this note?
Find it in the filing?
Yeah, so it would kind of be like that's the distributed reward. Like, are you rewarding the 500 plus to the whole everyone who holds the note?
So I can't remember what we said the threshold at. I think it was 2 million. And I have to double check.
Yeah, it was 2 million. Yeah, I just read it.
So we haven't crossed the 2 million yet, but that's looking to be eminently soon. So once that crosses the 2 million, then that distribution takes place. So the first distribution hasn't happened yet.
That's very exciting. I'm really interested in this model. Very cool.
Thank you.
All right. I see the hand from Gandalf, but I don't think we've heard from Quigley yet. So going to go over to Quigley, hit Gandalf, and then I have a few topics towards the end that I want to make sure that we cover.
Hey, GM. Yeah, this is fascinating. Whenever Wolf was sharing the upcoming spaces, I saw this title and I was like, man, I have zero exposure, as a trader to RWAs. This is definitely a place I need to come in and learn. So I've been taking notes, no pun intended, on the products here, and it's really exciting. I have worked with a few teams that are doing carbon credits, and I think that's a very, very interesting topic, and a use case for this type of product. So I definitely look forward to seeing that. But what really got my attention here in this conversation that I hadn't even considered before, because I'm kind of like Gandalf. I came from the NFT sort of Web3 side, and then of course, the meme tokens have me all over the place right now. But there's always been things that I've kept my eyes on, but what I heard today that really has me like, oh my gosh, I need to like reconsider my daily what I'm doing every day here. Alan said something about drug discovery, and I hadn't considered that as a potential use case for an RWA. Because my day job actually is, I don't know, I think I told you this, Wolf, at one point. I'm a pharmacist, so I obviously deal with drugs all the time, and I would absolutely love to be exposed to those opportunities. So I'm definitely going to be, after this space, I'm going to be looking around to see what that's all about. Could you guys expand on that? Is there a place I could go look and learn or see what's going on in that world?
Yeah, I think I think the comment you're referring to was something I mentioned about like intellectual property and how you can like tokenize that. I think it kind of like speaks just overall to just the flexibility of tokenization, that you can just have a company that just segregates its IP in a certain drug process, and tokenize that to help finance the process, with the underlying investors getting a benefit if the drug progresses through all the trials and eventually gets made public and approved by the FDA or whatever the different organization is. So yeah, it just speaks to the flexibility of tokenization in general. And the drug trial and discovery and approval process is incredibly expensive, especially in the U.S. And the marketing that goes into a drug as well. And so it's just another opportunity to finance these processes, really. So and I don't know offhand of any kind of opportunity that's come to mind, but there's really it's one of the beauties of tokenization and what it can be used for, just as kind of a general comment.
That's amazing. I'm gonna definitely keep my eyes out open for that, and then also someone mentioned meme coins. I mean, I'm a degen, so what was that about? I heard, I believe someone mentioned meme coins at one point.
Oh, I was just saying that our Republic Digital, that asset management arm, is most likely spinning up a meme coin fund. We have a lot of investment theses around the meme coin space in particular, and the idea of a potential meme coin super cycle, and so we're putting together a strategy around that in a pool of capital to be able to participate in that market as we see it.
Well, yeah, sign me up for that too. I'm definitely on board with what you guys are doing there. But I'm gonna spend some time today because I was aware of the brand. I didn't realize there were so many layers to it, and so I'm gonna be digging through all that today. It's very exciting. I'm very very excited about what you guys are building here.
I appreciate it. Thank you.
A couple of quick things I want to mention before I go over to Gandalf. We haven't really touched too much on this, but there is a big Space Week giveaway that is going to be upcoming with Republic, and you're going to want to keep an eye out for a space that they're doing next week, and they're going to be giving away a trip to a rocket launch event. So pretty fun. Obviously, everybody's looking at To the Moon and Space Week. So I just went ahead and I pinned a tweet to that so you can take a look, and that is going to be an actual rocket launch event that you would be able to go to. So really, they're talking about on the verge of the space race, right? This is the era of new opportunities. Republic has Republic Capital has invested 90 million in space, and R-Note gets the share of the profits. And again, investors, I believe, can really feel like they're part of this monumental achievement in the space sector that's happening here. The one other thing I just want to touch on real quick was there's so much happening in the world of crypto, and it's interesting with the government, right? We're starting to see some pushback yesterday with Uniswap, but also some acceptance with these ETFs that are coming. And I think that if you're someone that's doing this in the regulated side of things, like a Republic, right, like an INX, you really are starting to see some fruit for your labors there as the years have continued to go by. Let's take one more hand here from Gandalf, and then we'll wrap up with some other thoughts from the team. Go for it, Gandalf.
Thanks so much. You've just given me another thing that I want to chat about very briefly. I guess the first one, which I think will be a faster conversation, I just want to ask the Republic team around, again, going back to regulations. So I'm involved in some of the working groups within Australia that provide feedback and advice for the government on digital assets. And one of the things that we have not really touched on is RWAs. And so I just wanted to hear from you guys if you guys have had any conversations with the government around bills or regulation. Is this something that's on their radar? What's the appetite that they have in general?
Specifically for the Australian government,
Sorry,
or
I guess US, if you guys are really focused in that area.
Yeah, the great thing about RWAs in the US side is everything we do at Republic is built on 1930 securities law. So RWAs are actually very easy to navigate from a regulatory standpoint because there's so much. It's a security, just plain and simple. And the way to handle and manage and sell and custody securities is very, very well defined. I think the areas where you're going to probably see more of the innovation and change is around how stable coins in particular will integrate with RWAs, like as a dividend solution, as just one example. And that's an area that's still very nascent. I think that we are using what we consider best practices, and being the good actors in the space that we are, we feel comfortable with our particular legal opinion on that. There is a stablecoin bill going through Congress right now, as well as a couple others that Republic is involved in. So I think it will be time ultimately to determine how that's going to look. But yeah, I think probably one of the best parts about RWAs is that it's much easier to navigate in the United States than anything on the utility token side.
Yep. Okay, that makes sense. And now going to the other question, which is more open to the entire. Sorry, did you want to add anything there, Dudu or David?
I think you're all good to go, Gandalf.
Cool. The other thing, which is this might be relatively off topic, but I just wanted to check anyway. If you guys are familiar with token bound NFTs or token bound accounts, I guess ESE 6551 is the one that came out last year, essentially allowing tokens to act as wallets or own their own assets. Is this something that you guys have looked into utilizing to kind of take this to the next level, as far as RWAs being held or owned by token bound accounts? And the one example of thinking here is something that I've explored with other teams in the past, the concept of using these token bound accounts as employee essentially profiles, and allowing them to be integrated with employee benefits and bonuses, which could flow over into shares and stocks and things like that. So I just was curious if that's been on your radar, if you guys have explored that, if that's something that is probably outside of the scope of RWAs at this point in time.
No, we've definitely looked at it. The bigger piece related to that technology is ensuring that you can properly KYC the people behind it. And I think that's still being developed, although I've now seen some iterations of that where I think that is in a place. And the idea behind that is that, like, all right, can RWAs and DeFi coexist?
Yeah.
Right. That's that's the real question. I mean, that's what you're really getting at with that type of a solution.
Mhm.
And I think the answer to that is it can, as long as there is some level of record associated with approved KYC frameworks or AML frameworks
Mhm.
with the participants. So I think there's ways to go on that,
Yep.
but that is a very top of mind topic for us and for a number of others. Yeah.
Yep. So are you guys looking into things like what's I can't think of the term for it, but essentially private KYC or your anonymous KYC, so to speak, with people
Yeah,
like
it's like on-chain KYC.
yeah.
Yeah, like on-chain KYC systems, attestation systems, um, pooled systems. There's a variety of options. The reality is, I think the way that the space is going is anonymity is basically going to get wiped out.
Yep.
I think that it's going to be very difficult to have anonymous wallets in the future. You definitely aren't going to be able to interface with anything that has on ramps and off ramps unless you're KYC. And so that's why the question is, okay, how does RWAs and DeFi coexist? Well, I think the real question is how does DeFi adapt itself to fit into an RWA world? And that's probably the better way of framing that question.
Yep.
Yeah, okay. I totally agree there. I mean, we're 24 hours removed from a Wells notice to Uniswap. Yeah, it's been the focus since FTX and 3AC, and that regulators and governments just want to totally do away with any kind of anonymous DeFi. So yeah, it'll take some time for that to calm down. Yeah, in the U.S. it depends on the election outcome, and but yeah, there's still we're still suffering from the FTX era debacles, and it's really thanks to the Bitcoin ETF approval and some kind of SEC cases that went in favor of the issuers or the crypto platforms that we've kind of seen a rebirth and escaping from the crypto winter. So thankfully for those things, yeah, we're seeing strength come back into the space. But yeah, the DeFis are they're continue to be a focus of regulators for sure.
Perfect. All right. We are a little over time here, so we're going to roll around, do some final thoughts and comments, but really enjoyed the hour. And a big thank you to all of our panelists for sharing their thoughts, questions, and insights. Alan, going to come over to you first. Any final thoughts you want to share on this one today?
Yeah, no, thanks for having me. And, look, INX has been in the space for 6 years, which is like eons. And we've interfaced with many, many different regulators in the space, many different licenses. I have an open door for anybody that wants to just ping me on any different platform, Telegram, Twitter, whatever, and happy to chat about stuff, or you can pick my brain, or I'm happy to give my opinion on anything in the tokenization / regulatory / legal space. But yeah, it's INX feels like we're in a great place. We've built this asset over the last several years to fit into exactly this kind of regulatory model right now, and so we're very excited about where things stand and kind of the momentum of the space. So thanks for having me.
Absolutely. David, anything else for yourself?
I just want to say that I'm very privileged and humbled to be on this great panel. It was an excellent conversation. I learned a few things. And yeah, as Alan mentioned, if there's anyone in the audience who, whether you want to interested in learning more about RWAs, or you want to tokenize something that you have, a business or an asset or a piece of property, don't hesitate to get in touch. DMs are open, and we love to just speak to innovators and founders and builders and see how we can make their dreams come true.
Love it. Thank you, David. Always a pleasure having you on. And Andrew, want to close us out with any final thoughts here?
No, just it's great to be here. I always like spending time with Alan and David. Please do go to republic.com/Space Week for details on the big giveaway that we have going on. That grand prize being that trip to the rocket launch. That is awesome, by the way. So that's not something you want to sleep on. If anyone has any other questions, please don't hesitate to reach out to us. I would say that we are hyper communicative. So if you whether want to talk about Note or RWAs or more Space Week stuff, don't be a stranger. Thanks, everybody.
Perfect. Well, thank you everyone for coming on this morning. Much appreciation to our lead speakers, as well as Cass, Kayla, Gandalf, Quigley, Kyle, everyone else that was able to join us this morning. It's always much appreciated. Thank you to the Republic Note account and WolfWeb3 for being up here. That's going to do it for this space. This was a recorded space, so you can go back if you missed anything. There were a couple people who came in late, I believe, and dropped some comments. You can easily go back and listen to this one. We'll have more spaces today coming up at 12 p.m. Eastern with our X Spaces crew. Should be a fun one. So thank you everyone for being on, and we should have another space, I believe, next week, again, with INX. So looking forward to everything that's happening. Enjoy the rest of your Thursday, everyone. We'll talk with you shortly.
On steel, as well as U.S. Steel. And then we're also going to talk with the former head of IBM, Sam Palmisano, about the right way to regulate generative AI. That's all coming up tomorrow on Wall Street Week at 6 p.m. Eastern Time.
All right, a lot to look forward to there. Our thanks, of course, to David Lustin. This is Bloomberg.
We as creators need to think about how to better use this new tool set. And starting small and not expecting that it will completely replace us is probably a good place to start.
In my view, AI will augment human creativity rather than replace it.
That is not to forget as well, AI doing good, democratizing education, offering people opportunity with lifelong learning.
So anything that can be automated, we will automate, but we'll continue to invest in talent and people.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, we have CarMax losing speed as it reports profit and sales that fell below estimates in the fourth quarter. The used car dealer citing inflationary pressures and vehicle affordability challenges as the main drivers for its disappointing performance. Next up, Rent the Runway back in fashion as it tops earnings expectations in the fourth quarter. The clothing rental company reporting that membership loyalty rose 10% thanks to improvements in its digital user experience. And finally, we have DoorDash getting an upgrade at MoffettNathanson to buy. The firm had previously downgraded the food delivery service because of concerns that the restarting of student loan repayments would have a negative impact on DoorDash. Just goes to show, never underestimate the spending power and the appetites of college students. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. I do want to take a look at markets at this moment because, again, it's a down day on Wall Street. You take a look at the S&P 500. It's down only slightly, about 0.2%, but you add it together, and the S&P 500, it's down about 1% for the week so far. That follows, of course, last week's decline as well of about 1%. So clearly, April not off to a great start for the big index, but of course, it was quite a start to the first quarter or so. But let's also talk about the NASDAQ 100. You have big tech up about 0.3%, really holding on there, even as, of course, you have the S&P 500 wobble. We got PPI this morning. It was a downside surprise coming in below estimates, but of course, it was still pretty hot. And you can see that sort of working its way through the bond market right now. The U.S. 10-year yield, it's up about 3 basis points. Of course, we're talking about a yield of almost 4.6% or so. So we're going to continue to keep an eye on that one. But coming up, an exclusive interview with the co-CEOs of KKR as they aim for $1 trillion in assets under management. That's next. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
DOJ or other authorities
could face bigger challenges. Britain's next.
It was going to keep Rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to Bloomberg Radio, Bloomberg Television. I am Lisa Abramowitz here in the KKR offices in Hudson Yards. I'm here with the co-chief executive officers, Joe Bay and Scott Nuttall, after their investor meeting. It was the first going back 3 years, the first in person going back 6 years. You unveiled some incredibly ambitious targets about growing the firm from less than $600 billion in assets now to more than $1 trillion in 5 years without growing headcount significantly in any kind of way. Why is it important to remain small with respect to the number of staff while expanding so dramatically when it comes to asset size?
Yeah, I think it's important to know what your North Star is and what your DNA is as a firm. A lot of what's created our success is our culture. Everybody's connected. People help each other all around the world. Ideas travel, relationships travel. That's allowed us to get to where we are. And so one of the things we're very focused on as we go forward is to make sure that we retain that. But also, as we've been building the firm, the way our business works, you add people before the businesses grow. And it takes 10 to 15 years to get to scale. And what we laid out yesterday is we have the people inside the firm. We've been building these platforms for the last 10 to 15 years and beyond. So the people are here, and we're starting to get to this inflection point. So that's what we're told.
And it raises this question, Joe, about how you maintain a sense of morale and people not feeling overburdened while also expanding assets. And I know that the people are here, but this is something that a lot of companies are grappling with right now, which is you want to scale up, you don't want to lose culture, you don't want to get too big, you don't want to have too many middle managers, and yet people are getting exhausted. So how do you prevent that kind of development?
Well, I think the reason people join KKR in large part is because it is such an entrepreneurial culture, too. We empower our people. We encourage them to work and collaborate together. So we don't believe in silos. We hate silos at this firm. We still operate KKR today, 48 years later, as one firm, one global P&L that everyone's paid off of. So that collaboration, that one firm, is really what the secret sauce is at KKR today.
You talked about really ambitious goals across 3 platforms. We can go over them. This idea of asset management, the insurance unit, the General Atlantic, and then strategic holdings, which you kind of described, I would just say, some people might say a mini Berkshire Hathaway. You might say that they want to be a mini KKR. But why is Berkshire Hathaway kind of what you're going for in terms of what this is?
Listen, I think strategic holdings is a segment that we've been incubating for the past 7 or 8 years. And Berkshire Hathaway is an apt analogy in the sense that we look at a lot of business models, why certain firms have been super successful over time. And there are a lot of powerful messages in what Berkshire has built. It's the power of long-term ownership of assets, great businesses, the power of compounding, and the real power of smart capital allocation within your business. That's what Berkshire really excels at doing. And our version of that in strategic holdings is we built a portfolio today within our core private equity business of 19 really great businesses that we expect to own for a really, really long time. And those businesses will start generating meaningful cash flow for us in the form of dividends. We started this business 8 years ago, and as those companies grow and deleverage, they are now in a position to start paying meaningful after-tax dividends. What we announced yesterday is that dividend stream we think will be $300 million plus by 2026, doubling by 28 to $600 plus million, and ultimately getting to $1 billion plus of annual operating earnings for us in that segment.
Yeah, and I'd say the background to all this is we're students of long-term value creation. And so when we became a public company in 2010, our market cap was $7 billion. It's now roughly $90 billion. And what we're focused on is how do we double that again and then do it again as we look to the future. And if you look at organizations that get above a certain size of market cap, their per share growth slows. The denominator becomes heavy. And so just like a lot of where KKR is growing today were seeds we planted 10 to 15 years ago, with insurance that we think we can double again from here, and strategic holdings that, to Joe's point, is going to have a very significant growth trajectory, we think we've created a model that as we look out for the next 10 to 15 years, we have a way to keep compounding what is now a large market cap at a very attractive rate and not slow down that growth rate. And critically, as part of all this, we've built it all, it's purpose-built, to be able to retain the culture. So we can have very few people in the firm, because we started this part of KKR with no new headcount. It was monetizing idea flow that was already in the firm.
So what are you going to do with that money? If it's kicking back all this cash, do you go out and buy some more companies? You can have 23 in the portfolio?
Yeah. Well, listen, a big part of our jobs in the next 5, 10, 20 years is how do we think about redeploying the cash we generate in our business, the capital allocation part of our job. What we talked about yesterday at Investor Day is in the next 5 years, we think we're going to generate $25+ billion of cash at KKR. So how do we redeploy that? Some of that's going to be to grow our insurance platform. Some of that clearly is going to be the right strategic M&A for us, as we've done in the past. A lot of that's going to be to grow strategic holdings, this new segment, and a lot of that's going to be for share buybacks over time.
What's fascinating to me is a lot of people in the industry are saying that private equity is not going to have the same kind of returns going forward. That the equities part of the composition isn't as lucrative just because of how high valuations are. There's so much money chasing so few companies. The exits are concerning. Are you moving in the opposite direction? Are you saying that people are kind of missing the boat a little bit here, Scott?
I think what we hear a lot of that, and it makes us smile. I mean, the business has continued to evolve. When Joe and I joined, we had something like 15 investment people. We now have hundreds around the world, and we have several different capabilities that we've built to supplement that. If you show up as just a financial buyer today, you're not going to be able to do what we do. We show up, we've got teams that are sometimes 30, 40 people, operations professionals, public affairs, people that are focused on sustainability, a geopolitical institute run by our partner, David Petraeus. I mean, you have to be able to think broadly. Henry McVeigh runs our macro and asset allocation effort. We built all these tools so we can show up and act more like a strategic buyer. So how do we invest in good companies and help make them great? That's the business now. And so it's a bit of a misnomer. We don't think of ourselves as a financial buyer anymore. We have to improve these assets materially and critically, because we're so global and connected, we can help them go global.
Joe?
And our private equity business, while we've been in this business for nearly 5 decades, it is not a mature business. We have doubled the size of our global PE business in the last 5 years alone, organically. So we have flagship products in private equity in the US, Europe, and Asia. We have a series of really successful growth funds in technology, healthcare growth, and sustainability, and the world's largest core private equity business, which is anchoring our strategic holdings segment.
You mentioned Japan. You talked about Japan a lot. You talk about Asia, but then you talk about Japan. Why is Japan so key to the expansion?
Well, Asia for us is really an area we've been building and growing for 2 decades now, since 2005, and an area where we have, as a firm, have a really, really dominant position, the largest alts manager in Asia today. So we've grown from 18 billion of AUM to 65 billion of AUM in the last 5 years in Asia, organically, to give you a sense of the type of growth. It's the fastest growing part of the world today. 60% of global GDP growth is coming out of Asia. The most exciting consumer trends are coming out of Asia. So it's a natural place for us to be focused as private equity, as infrastructure investors, as real estate investors. In Japan, in particular, is exciting. It's around 40% of our business in Asia is Japan. Just given its 2 decades of deflation, it's coming out of this long economic morass. And the implications for Japan are profound in terms of where savings are going, in terms of corporate governance reform, the opportunity for us to really buy great non-core businesses from big conglomerates. So it's a very target-rich opportunity for us.
Yeah, and it's not just in our asset management business. If you look at the life insurance and annuity market, in the US, it's a $4 trillion market. In Japan, it's $3 trillion. So it's a massive market across a lot of what we do. And so we see opportunities to expand in multiple parts of KKR in Japan.
A lot of people are focused on Japan right now. KKR has a more dominant position. There's also a lot of focus on China and what to do with that. And a lot of people are saying we're getting out. You do have a significant presence in China. How do you think about how that lives, given the geopolitics of the moment, which are highly uncertain?
Well, listen, our approach to China, I think, has been consistent since we started our business there. We have 3 offices, Beijing, Shanghai, and Hong Kong. So we are committed to that market. But the complexity of investing in China is obviously much higher today. Our focus over the last 2 decades has really been focused on the consumer segment of China. the growing middle class, the urbanization trends in that marketplace, and that's the sweet spot of the opportunity for us. So we've invested in retail companies, branded consumer goods, healthcare. We are not leaning into these high growth areas that are geopolitically sensitive, like semiconductors, like AI. So we've avoided a lot of the areas that are currently creating a lot of turmoil in the market, and we're sticking to our knitting, consumer services.
At a time when there's a whole lot of expansion. Before I let you go, I'm just curious about the fact that you guys have worked together for 28 years, I believe. Right. I'm just wondering what you guys do every day when you come in. Do you sort of have a routine? Do you check in with each other? Do we ask about each other's families? I mean, how does that work, given the fact that you guys work so closely and have for so long?
I don't think we have a routine per se. I think we've just been such big parts of each other's lives. Think of it as like a family member, how you interact with them. It's kind of a constant flow back and forth, but there's not a routine per se. Yeah. But it's just, we've been together more than half of our lives working together like this. So it's incredibly natural. We spend more time together than most families do, you know, so it's super easy. So we don't give a lot of thought to it. It's just how we operate.
Yeah, I've been trying to get you guys to talk about it, and you guys are just like, it's just sort of the way it is.
It's just
like
what we do.
Well, our offices are right next door to each other, so we just pop in and see each other maybe 10 times, 20 times a day.
I can just imagine your wives. There he is again.
Yeah, exactly right.
Joe Bay, Scott Nuttall, thank you so much for being with us.
Thank you,
here in the KKR headquarters. Back to you.
Thanks so much.
All right, and that was KKR co-CEOs Joe Bay and Scott Nuttall with Bloomberg's Lisa Abramowitz. A great interview there. Let's take a quick check on markets before I let you go. You can see the S&P 500 still down, not by very much, but we are looking at back-to-back losses on the big index. Of course, the S&P 500, it is still up about 8%, 8.5% so far this year, but that had been above 10% at one point. Haven't seen that for a while. The NASDAQ 100, again, holding on to gains, extending a little bit, up about 0.4%. And on the topic of tech, Bloomberg Technology is coming up next, but that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Amazon CEO Andy Jassy. He says the generative AI boom is going to be built on Amazon Web Services. We'll bring you the takeaways from his annual letter to shareholders.
Plus, technology heavyweights descend on Washington for the White House state dinner with big names like Jeff Bezos and Tim Cook attending a lavish event.
And OpenAI CEO Sam Altman pitches a global AI coalition on his visit to the Middle East. Next stop, maybe we see him over on Capitol Hill too. We'll discuss that and so much more throughout this hour. But Ed, we start on these markets. Up 1/4 percentage point. Currently, NASDAQ managing to pull itself off of its lows. This as we once again really tackle inflationary pressures, whether it's a PPI number coming after the CPI print yesterday, both showing inflationary pressures just are dialing up that little bit. And we're seeing, though, managing the NASDAQ to outperform as bond markets actually pull back a little bit. I'm looking at the 2-year yield. We're outperforming on the front end of the curve, whereas the back end, the 10-year yield, for example, yield's still pushing higher. But really the big move was yesterday. And looking at what's happening in the euro, it's not just all about the Federal Reserve, it's about global world banks at the moment, central banks that is, and we're looking at what the ECB said. Look, staying pat as many had anticipated in terms of interest rates, but signaling that inflationary pressures are dialing down across the Atlantic, and therefore could we see cuts coming? We're off by 0.3% versus the US dollar. Move it on, look at what else is performing versus the US dollar. Crypto, I'm down by 0.2% on Bitcoin at the moment, just sub that $70,000 level. But Ed, what are you watching on the micro?
There are a lot of stories to fit in today. Apple's a name that we're going to look at later in the program with Bloomberg's Mark Gurman. We're up 0.8%. Early unionization efforts are kind of the main headline, but there is a note from JP Morgan analysts that say that hedge funds are now looking at this stock and considering what happens next with artificial intelligence in the context of value add, iOS and the handset. Hard to know what the driver is, if any at all, but we're higher 0.8% and given its market capitalization, we always pay attention to Apple because of its weighting on major indices. There is an annual shareholder letter plus AI theme in today's show. I am very excited about it. JP Morgan is down 0.9%. Monday night, I know I wasn't here earlier in the week, put the shareholder letter out and says AI. And we're going to talk about the numbers behind that. I think it's really interesting. So too Amazon up 0.3%. Andy Jassy's annual letter. The focus about AI is interesting, specific to AWS. Amazon is going to be a facilitator, a place where AI is built by others, maybe not building so much generative AI themselves. That's a story you and I have told quite a lot in recent weeks and months.
We are long shareholder letters. Let's dig in with Poonam Goyal of Bloomberg Intelligence. And Ed just puts it so eloquently there. Ultimately, they want to be at the very heart, the infrastructure of generative AI. Yes, they will build a substantial number of Gen AI applications ourselves, but they're looking to others to build.
Yes, you're absolutely right. You know, right now, Amazon lags Microsoft when it comes to AI because Microsoft has access to the OpenAI. However, as they build these building blocks going forward, they can close that gap over time. So we think the investment is right. We think the time is right. And generative AI will not only help fuel the AWS business, but also its e-commerce marketplace business, where it will help drive sales higher.
Poonam, what we're talking about specifically is bedrock, I think, And you can go to Bedrock if you're a very large enterprise player or a smaller startup and build your own large language model. You can take advantage of a third-party large language model. Caroline and I have spoken to Anthropic, for example, Daniela Amodei, and she talks about all the business they're winning through AWS Bedrock. What I don't know is Amazon's cloud business, AWS, actually gaining new customers, gaining growth or market share because of their strategy with Bedrock?
Yeah, I think, over time they will gain new customers. It's just a matter of getting these large language models developed and them getting the customers interested. But we do think there's scope for Amazon to continue to gain in that vertical.
What's interesting is, well, Google's event earlier this week, cloud event, and they were really saying that it's startups that are coming to them for cloud. How much ultimately do companies diversify, not go all in with one player?
I think diversification will happen across the board. It depends on what you're using and where you want to be. Amazon has done a great job in attracting not just the startups, but also established businesses. So we think the scope is wide. We do think they're in the early innings of this. And we do think right now they lag, but that doesn't mean that they'll lag for a long time.
Let's talk about Andy Jassy. He comes from AWS. That was his world. But the story since he's taken the helm of Amazon has been about cost discipline. In fact, don't even call it discipline, Poonam. Let's call it what it is, cutting cost, lowering CapEx. And when I read the letter, he seems committed to that still.
Yes, he does. In fact, they've been highlighting since last quarter about the 45-cent reduction that they've had per unit in their cost basis, and they think they can press the pedal harder on that this year, largely as they basically streamline their inbound fulfillment and they parse out packages more efficiently to those regional distribution centers that allow for same-day delivery.
Poonam Goyal of Bloomberg Intelligence, one of our analysts that leads coverage of this stock, and we're really grateful to have you in reaction. Meanwhile, Amazon founder Jeff Bezos joined tech heavyweights last night at the White House state dinner hosted by President Biden for Japan's Prime Minister Fumio Kishida. Attendees included Bezos' fiancée Lauren Sanchez, Apple CEO Tim Cook, and executive Lisa Jackson. Microsoft's President Brad Smith was in attendance as well, and actor Robert De Niro, even venture capitalists, including Robert Stavis of Bessemer Venture Partners. You also had Jamie Dimon, Masa Son, and John Gray of Blackstone. And, Caro, for me, the story is pretty clear here. Japan important for technology and the economy.
And more broadly, for big get-togethers of some important players, no matter where they tend to be based. I mean, this is where some certain conversations are had, deals are done, how many are having intimate conversations with the Prime Minister of Japan. But more broadly, I liked his Star Trek reference as well. If you heard some of the commentary coming out of the leader of Japan, he was sort of going to go boldly where no one has been before in terms of deepening the US-Japanese relationship. But this is more broad, isn't it, as well? I mean, there's a delightful menu that they managed to be having, dry-aged ribeye steak. Not bad. But this is also about deepening ties, but not just from an economic perspective. We've got to think of this from a geopolitical perspective, and notably what's happening with the Philippines coming in at the moment, and indeed what this means for China-US relations.
Yeah, I go straight to China. When the CEOs turn up, you know that market is important, right? Whether it's for supply chain or the economy. Director, let's bring that menu back up. That is contemporary, modern American, Japanese fusion. That looks great. But there's also a political element to this as well, that Biden had a lot of big names in the White House in an election year, Karen.
Yeah, I think that is really notable, and ultimately trying to ensure that the economy is what Biden can hang his hat on as well. Many worrying about the inflationary pressures that were garnered yesterday, and indeed what this really means for Bidenomics and the lack thereof. But tech heavyweight really clear and present when it comes to relationships with the US and Japan. Meanwhile, coming up, look, Jamie Dimon was busy over there at that particular state dinner, but we're going to return our attention to what he was saying earlier in the week on his annual shareholder letter, but also
college in general worth it relative to where else you could go? Maybe go to a trade school and come out with little to no debt and still get jobs, and that ROI looks very interesting. I mean, how do you guys think about that?
Yeah, so we actually, like in our story, did look at what would the ROI be of someone who graduated from high school. So someone making $10 an hour would have an ROI of about $191,000 10 years after, when normal college graduates enroll. And to put that into perspective, the average ROI for all colleges was about $98,000. So you can see how, initially it might seem like beneficial, but that's because when you're going to college, you're paying for college, you're putting in that investment. But once you graduate, college graduates do tend to have higher earnings, so it does balance out in the longer term.
So Francesca, help me understand the different buckets that you guys looked at and sort of the data that you found.
Yeah, so we wanted to understand what types of schools were doing better than others, and so we grouped schools by as they do always. And then we looked at private elite institutions, which were a group of 63 schools that are any school that you would think of is competitive, selective, think Vassar, Oberlin, Wake Forest, those kinds of schools. Then we looked at public flagship institutions and other public and elite, other public and private schools. And what we found was that after you look at the Ivies, the private elite institutions and the public flagships kind of perform the same at the 10-year mark. And that was, I think, our most surprising finding, because we feel like a lot of people put a lot of emphasis on prestige when thinking about college, and we're kind of trying to tell them, wait, maybe a public college that accepts most of its applicants can give you that same ROI.
So how about, what's the impact, I guess, or on your ROI calculations from what major you take?
Yes, that's a good question.
Engineering, good. Business, I would think, good.
The same idea is like you go to Oberlin, it's a liberal arts education, right? Like that's humanities, psychology.
So how does that play into
philosophy.
the math, I guess?
Yeah, so we did tend to find that major plays a huge role in ROI. Schools where a majority of their graduates came from STEM fields tended to overperform well, and there are actually some surprise winners when you look at our ROI list. Schools like the Colorado School of Mines, the St. Louis Pharmacy Academy, and many more schools that have a STEM focus were doing just as well as some Ivies, or even better than other Ivies as well.
So what is it? I wonder if what this really tells us is that if you major in humanities, your ROI stinks. Like, is this like what we're learning? Unless you do that at an Ivy, because then you have the certain types of connections, et cetera, and you may get a better job. Other than that, is that the problem? Francesca's sort of laughing at me. I don't know what that means.
I mean, it's hypocritical of me to say I studied visual and media studies.
Girl, I was a theater director. We're all good.
But I guess if you just look at the data and you're paying a hefty sticker price for college, then yes, it's strategically the most, I guess, smart way to go about it is to study STEM, because these jobs put you directly into the labor market and are really high-paying careers. If you look further down the line, these liberal art colleges do tend to get better earnings, but it's more of a long run than it would be if you're like really want to see those earnings right away.
So you guys, go ahead, please.
Oh, sorry. One thing I wanted to note is that with the rise of artificial intelligence, there has been a lot of discussion about how the critical thinking skills associated with a liberal arts degree, might actually be more advantageous in the labor market later down the line, but we don't know what that is. So this is a snapshot of a point in time, probably the last 10 years. So
I see you look at like one of the schools, the big state schools, the University of Georgia. You think about a big school like that, one of the advantages is they have a big alumni network. But I mean, the state schools in general, how did they kind of rank in general? Because there's some really, really good state schools, whether it's Virginia or Michigan or any of those kinds of things.
Yeah, the state schools did really well. I think what's driving their ROI to be higher than many elite private schools is that they're just cheaper to attend. And at the end of the day, like Paulina mentioned at the beginning, paying $90,000 for college is just going to set you back in terms of ROI. You're going to be the earnings are going to take longer to level out, and so public schools in this instance tend to overperform because of that.
And one of the sources that we talked to went to the University of Georgia and is now working as a credit analyst at Blackstone. And one of the things that he mentioned was he knew he was someone who was ambitious and driven and was going to put the work in, that he had the same outcome as people who did go to these elite colleges. So sometimes it is very individual dependent if you're willing to put in the work and you're really ambitious.
Right.
Says the Duke graduate.
Yeah, very nice.
That's
No, that's you. I'm flying down this afternoon down to Duke. So,
but and that just makes the point that like if you want humanities, like maybe sort of the public institutions where you can get cheaper, but also get that humanity education. I'm wondering, and you're right. It all like the drive for sure. Like that's going to depend. That's why I keep telling my kid. Like I'm like it's okay. Like I know. But it's like grades are important for sure. You got to get into a school, but like your ability to be a human is also more important. She did draw the whole, hey, do I have to go to college thing the other night out of like nowhere. And I was like, yeah, you do. I thought you said it didn't matter. And I was like, no, it didn't. I said it didn't matter where you went. Are you guys going to do this for New York City public versus private schools? Because I would really appreciate that ROI, please.
Yes, exactly.
They're not even.
All right, so
I don't know if the data is available. So.
All right, what's the biggest surprise that you guys had from your work here?
The biggest surprise, I think that there's a lot of intangible benefits that people think of when going to a prestigious school. This alumni network, this idea that it'll open doors and help you, climb the economic ladder. And I think what was surprising is that people felt, even with all that and acknowledging that they did get those when they went to the prestigious schools, that, it's still the cost of that college kept them from achieving the things in life that they thought really mattered, like being able to start a family, owning a home, even being able to buy a car. One of the people we spoke with said his student loan payments have been more than his rent, and have been since he graduated.
Yep.
So it's
I believe it.
I'm going to have this conversation with my daughter about helping out with a home purchase. That's coming Monday.
Is that coming?
I think that's
soon?
coming Monday. She
Yeah.
asked me to go to lunch. So I think that's kind
I see.
of
Because
what
also,
that's about.
priorities change.
Yeah.
Like your priority that you're going to have when you're 18 is different when you're 30. Like
Exactly.
It's
What
a
else are we gonna
holistic
do?
thing. I love the story. I'm like all into
Yeah,
it.
great.
Thank you so much for writing
USC
it.
and Duke, so some pretty good schools there. You guys feel like it was good, worth it?
Yeah.
Yeah. See?
Yeah.
There you go.
They did pretty decent ROI-wise, so
Yes.
that was a relief. That was very
Okay.
happy
Phew.
with that.
All right, Francesca, thank you very much. Francesca Maglione and also Paulina Cicero, thank you very much. I highly recommend that you do private versus public in New York City. Thank you. Next assignment. Good job. You can check out that article. It's The Big Take. Definitely check that out. It is definitely worth reading. If you have a kid or any grandkids or anything, it is worth talking about. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are mixed right now. The S&P 500, 3 points lower, 51.56 on the index. The NASDAQ Composite Index, 65 points higher. That's up 0.4%. And the Dow Jones Industrial Average right now, 185 points lower. That's down about 0.5%. The economic news today, producer price index moderating on a month-over-month basis in March, rising just 0.2%. Year over year, though, it did accelerate as we look at the more policy-reactive two-year yield after yesterday's surge in yields. It is down 2 basis points today, right now at 4.95. Also got initial jobless claims continuing to flip-flop, the lowest since the week ended March 1st, but the outlook is clouded. And we get earnings starting tomorrow, and the financials, one of the worst performing groups, major industry groups in the S&P 500. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're doing that internet streaming thing, so you go to youtube.com and search Bloomberg Podcast, and that's where you'll find all the good stuff. Well, we are joined here in studio by Jason Kelly, chief correspondent for Bloomberg Originals and executive producer of a new podcast. It's called The Deal with Alex Rodriguez and Jason Kelly. On this week's episode of The Deal, Alex Rodriguez and Jason Kelly speak with U.S. soccer legend Brandi Chastain about private equity firm Sixth Street's sports investments and the Bay FC owners' hope for the sport. She also talks about if the world is ready for women's sports. Let's take a listen.
I honestly believe that part of the equation that wasn't in our control was the mass general public and the business sector not ready for women. Yeah. Not ready for powerful women, not ready for women with big voices who have grand ideas. We didn't have the deep pockets. And before coming here today, I think that's the one thing that kept coming into my head was I had $0 that I could be an owner with.
All right, very good stuff. Jessica Chastain with our own Jason Kelly. Jason, thanks so much for coming in the studio. Big commute from your desk. You got a guest with you.
I know.
Today.
I brought a buddy. I thought it was bring your former All-Star friend to work day.
Okay,
I left mine at home.
Is it? Oh yeah. Sorry, I remembered. I mean, I'm a good. So, yeah, A-Rod, my co-host, right here with me.
Awesome. Thanks for coming in, Alex. Appreciate it.
Great to be here. Thank you, guys.
You guys have had so many cool podcasts and episodes here, speaking to some really cool people. Jessica Chastain, I think for
Brandi Chastain.
Brandi Chastain,
different Chastain.
Yeah, just amazing.
Yeah.
Kind of when you think about 1999, the World Cup, ripping the jersey off and everything. Just that's such a big image. And you kind of thought, gee, maybe that would be the launch of women's soccer, at least maybe women's sport. I'm not sure we've seen it. What'd you guys talk about?
I mean, I thought it was so fascinating, Alex, because, she's an icon, right?
Mm-hmm.
I mean, when you think about, like, the people who have defined sports in our lifetimes, especially in women's sports, like, nobody bigger than Brandi Chastain. And the amazing thing was that this moment in 1999 was going to be, like, the takeoff for women's sports. And it's like, womp womp. Like, it just didn't happen. It actually failed twice, and now she's an owner of a team. I was fascinated by just kind of her perspective on all that. I don't know if you were.
I thought it was great, and if you see what's happened with Caitlin Clark now, we thought that was going to happen in 99, and it kind of stalled, as Jason said. But for me, was how she's kind of going through her journey from sports to business as a sports owner, and all the lessons that she's learned in sports, the hard times, the good times. She shares some incredible stories. But I'm really interested how her next decade goes because she's all in.
Can I ask okay, first of all, we should know, I know very little about sports, so I'm going to ask those questions.
But if you have a question about energy.
Oh, I'm power prices, you can come to me. But why is it so hard for women's sports to take off in a material way? Is it like the type of sports we play? What's the problem, Alex? What do you think?
Well, I think Caitlin Clark has captured the imagination of everyone. And I'm old enough to remember when the NBA was on, you watch the finals on tape delay, right? It was incredible, right? To think about that. And the amount of tens of millions of people that watch today. What Caitlin Clark has done is very much what I think Magic Johnson and Larry Bird did in 1979 when, Bird was at Indiana State, Magic was at Michigan State, and it was like these two Midwestern guys that captured America. I think that is now here, is true, the moment's right. I think post-COVID, the landscape of the world has changed, and I think it's been the perfect storm, and she's been the perfect ambassador. To have almost 20 million people watching, Jason, is incredible.
And by the way, more people watched the women's final this year than the men's final, first time in history. And that actually, I think, is one of the biggest points of this, is that there was long this assumption of like, people aren't going to watch women's sports on TV. And so they just didn't put it on. I mean, shockingly, a bunch of men made a decision that people wouldn't watch women on TV. And then what happened was they saw, and you've seen this in your investment work, Alex, what they saw was when they did put it on the air, people watched, and then it just kept building. And I think the other really interesting thing that we learned from Brandy was this idea that the investment wasn't there initially. I mean, those two leagues failed because the two previous soccer leagues for women in the U.S. failed because they tried it for like a year or two, and they're like, oh, that didn't work. Instead of, you think about the NBA, you think about the NFL, those were leagues that took decades to take hold. The MLS is in its like 25th, 30th season and is just getting traction. So part of it is just like putting in the time and the money.
Well, I think, as a former Wall Street guy, what amazed me about this transaction, you got private equity coming. Private equity is not in Major League Baseball, are they? Or
yeah,
NFL?
they are now.
They are getting there. I mean, this is a big thing that you're seeing up close and personal.
Yeah, I mean, these franchises have gotten so expensive. To think a guy like Jerry Reinsdorf bought in 1981 the White Sox for about $60 million, and 3 years later, in '84, he buys the Bulls with a guy by the name of Michael Jordan there for $19 million. It's incredible, right? And those franchises are worth close to 10 collectively today. So the world has exploded. So what's happened is individuals can't really afford to write checks for $1 billion, $2 million. It's hard to have that type of liquidity. So what the leagues have done is they've opened up the capital markets, and private equity groups like Arctos and Dio are now big investors, and they sit as LPs, while passive LPs has been an industry for the last 30 years has gone up and to the right about 15% a year over year.
And this is why, Jason, you were here.
Yes.
Because you have covered private equity for a very long time. You literally wrote books on it. And then you kind of saw a while ago, like, where the direction of travel was really going.
Yeah.
What's the kind of the return, like, what's the return like on these things? Like, what do you think?
I mean, TBD.
Okay.
A little
that was a
bit.
long pause, by the way, for radio.
Well, because we haven't really, we've seen a couple exits. I mean, so Dial made some money on the Phoenix Suns when they were sold for $4 billion a couple years ago. So that's been one exit. I mean, what's interesting is, so 6th Street, just speaking specifically about 6th Street, and, this is started by Alan Waxman, former special situations head for Goldman Sachs, was in a partnership with TPG. So they've invested $125 million. They led an investment for $125 million into Bay FC. I mean, that's real money. Paid a record franchise fee, $53 million just to buy the team. I mean, they're looking at a scenario where they can get a 5x, 10x. I mean, this is a long hold. So the franchise values, as Alex just demonstrated, think about, Jerry Jones bought the Dallas Cowboys for less than $200 million in the late 80s, early 90s, which, by the way, they said he was insane. That was a crazy amount. This is a franchise now worth $9 or $10 billion.
Alex, let's talk about ownership. You're part of an ownership group for the Minnesota Timberwolves, right? Talk to us about that experience, and I'd love for you to talk to you about, my personal opinion is, I'm concerned about the valuation of franchises. I'm concerned about salaries because it's all predicated, in large part, on broadcast rights.
Yeah.
And with cord cutting, I'm not sure ESPN's going to continue to write these crazy checks. So talk to us about kind of what you've learned about as being an owner there.
It's funny because one of my good friends and mentors is Magic Johnson. And of course, he played basketball for a long time, and he owns a baseball team. Yep. And I played baseball for a long time, and I'm part of the ownership group of the Minnesota Timberwolves and the Lynx. What I think is there's no question that the giant in sports in America is the NFL, right? And to think that almost 20 million people watch Caitlin Clark.
Yeah.
Those are NFL numbers on Sundays. I mean, that's the number one driver for all sports, and which creates a lot of people to be very bullish in women's sports. But going back to we have the Lynx as well. But I do think that the NFL and the NBA are global sports, especially the NBA. It's growing year over year. If you look at social media as an example, as a metrics, we're almost 10-1 to the NFL. We're almost 15-1 to Major League Baseball. So LeBron James, Michael Jordan, Steph Curry, these are global names. I think that is going to be a different landscape, but you'll have more contributors. Maybe you have NBC pop in, Amazon, Apple. There's a lot of suitors. It's not going to be the traditional. So ESPN may not write his biggest check, but is there? I'm not speaking for the NBA. I'm just giving you my opinion. That you may have a world where NBC may split the finals with ESPN and ABC. So I think you'll get to a similar result, just a different way.
So you said those words, and I knew those people. So I feel like I'm not qualified to ask this question. But then for someone like me, who's a newbie who maybe wants to watch some stuff, like I don't know. I need like a spreadsheet to like find out like what's playing where, when, what time, like Amazon Prime, Netflix, something like that. And I wonder if that's going to be a hurdle. Jason, what do you think to like?
I mean, it could be. I mean, and Paul knows this space better than anyone. You know, there's been sort of a fracturing, but now sort of a reconsolidation, it feels like, of how we're going to consume sports. I mean, you've followed this for years. You know that live sports, Alex knows it from being on television and being broadcast himself, people love live sports, and that it's one of the only things that actually keeps people coming back to live content. I do think, though, we are in this weird world where sometimes you don't know where to find it, and yet when you do, it attracts the eyeballs.
My New York Yankees off to a great start this year.
Yes.
What's your scouting
report? You could say our New York Yankees in this room.
Yes. Off to a great start this year. And what's your scouting report of them?
Well, I think the Yankees have done a bunch of good things this year. Excuse me. One of them is they've introduced baseball people back. If you think about the powerhouse of the Yankees, they've been built by great baseball people like Gene Michaels, Stick Michael, as they call him. You know, Lou Piniella, Billy Martin. They've gone away from that the last 4 or 5 years, and they've suffered tremendously. The fact they brought baseball people back in, they brought a much more balanced lineup, meaning, Alex, there's more lefties than righties. Historically, Yankee Stadium is better for lefties.
Really?
Last year, they had like 9 righties in the lineup, which is way too much. They've gone back to a much balanced lineup, and now they have the best 1-2 punch in the sport with Aaron Judge and Juan Soto. The challenge is, do they have enough pitching, is one, and two, have they cornered themselves by bringing in Juan Soto and not have a long-term contract?
Right.
When now, is he going to want the Ohtani contract for $700 million? And is he just a one-year wonder here in New York? I think he's going to have a massive year. The question is, can they keep him? Second question is, do they have enough pitching to win the title?
Well, let me ask you that question. We like to think, New York fans, that New York is a selling point. Everybody would love to be. If you can be a star here, you can be a star anywhere. And there's nothing better to be a star than New York City. A lot of players, I think they find it hard to play in New York. What was your experience coming to New York? I know you're a New Yorker, so you kind of know this, but some of the people you saw during your career.
No, Paul, you're exactly right. I mean, some people, you know, the kitchen's maybe a little bit too hot for some players. And you know right away, if they're uncomfortable, it's a different place. It's the biggest media market in the world. As they say, the pinstripes are very, very heavy, and not everyone can carry them. Juan Soto is obviously one that is going to play and play really well. Aaron Judge, the Jeters of the world, they're icons for life because they won here in New York. But some, I mean, they melt into the sun. I mean, you've seen a couple over the last 4 or 5 years that were a shell of themselves, and you quickly have to pivot and get them out of here.
One interesting thing on that note, first of all, we talked to Michael Strahan about that on a previous episode of The Deal. One person we are literally going to tape with today, it's one of the reasons Alex is in the building, is Stephen A. Smith. And he's actually talked about Soto and like the power of the pinstripes, maybe enough to lure him in to stay. So yeah, tune into that episode of The Deal coming up in a few weeks, because Stephen A., he's got literally some takes. That's his whole, it's his whole job. That's what he does.
And what a career.
So this is really cool. Like, what you guys do is super fun. Jason comes in and he talks about it. You can tell he's like totally digging this. What's it like to work with Jason Kelly? How do you manage that guy? Like, what is
the ego,
that?
the diva?
Alex, we already made a deal this morning because we are, you know, he's covered private equity. He's a great writer. So I say he writes and I use the bat. So I hit, he writes, and we make a good team. But no, Alex, in all seriousness, is really the intersection of Jason's career, mostly here at Bloomberg, and my career, mostly with the Yankees. And the fact is, what we're talking about is exactly both. And we live in a world where it used to be sports and media and culture. Now all three have come together. And that's what we try to take away. And then also a lot of lessons learned in this world of Shark Tank, where young people want to be more entrepreneurs than athletes. Right? And that's, I think we're serving up and teaching and hoping, inspiring through storytelling a lot of great
And I like what you guys do, kind of bringing sports, entertainment, you know, all that together. And we're seeing it actually now in college sports with the NIL, the transfer portals. A lot of these kids are able to monetize their value.
Totally.
But there's some downside to that, it seems like. If you talk to, Coach Jay Wright at Villanova, or maybe even Coach K, who I'm going to see today down at Duke, or some others, they're saying, boy, I'm not sure, maybe we've gone too far. What do you think, Alex, about what's happening in the college ranks about paying some of these athletes?
It's a very dangerous road. It's a very dangerous and very slippery. And the reason why I love that players are getting, the finances and all of that, but maybe there's a structure where there's more parity. Maybe there's a structure where kids don't get the money when they're not ready for it, and they get in trouble by not knowing how to pay taxes. And is this more of a liability than an asset? I'm all for somebody getting market value, but is there a world that we can, hold until they're 30 or 35 until they get the majority of that, where that money's compounding for them? So gift and the curse. And the other part is that I'm concerned is we want to teach. Coach K is one of my great friends and one of the great personalities in all of sports. You want athletes to be around Coach K for 3 or 4 years, not just one.
Great point.
So, and same thing with Calipari and all of that. So we want to teach these kids that, the power of restriction and to be able to wait a little bit before they get, the marshmallow, as they say.
Before we let you go, and this is a question we ask everybody, so hey, why not you? What are you going to buy now? What do you like?
This is a question we ask the portfolio manager.
Yeah, so let's ask you. So what?
You've got a lot of investments.
Yeah, so what do you like?
That is a great question. I mean, I'm so excited about the Minnesota Timberwolves and the Lynx. And we've done a lot of good work over the last 3 years. We've been in first place for most of the year, only 2 games remaining. So we're poised to make a good run, hopefully in the postseason. But look, I think you wake up every day, you're prepared, you're ready for opportunities. That's exactly how the opportunity of the Timberwolves came up and the Lynx. So the answer is, I don't know, but we're always looking.
What are you guys going to ask Stephen A? I can't imagine. This thing could get heated quickly. Stephen A.
What I'm really interested in with him is the business of Stephen A.
Yeah.
Because he's a game changer in so many ways. We both had a chance to read his book ahead of this. This is a guy who completely reshaped the business of sports media by sheer force of will. Got knocked down a bunch. He had a great mentor in Mark Shapiro, another upcoming guest on the deal. I'm just touting all of our guests here. It's what I do.
Shameless plug.
Shameless plug. That's my middle name. But, for Stephen A., I think we don't know where it's going to go. We know he doesn't like the Dallas Cowboys.
Well, he doesn't, and he does love the Yankees. And I just say in conclusion with Stephen A., it's really a story of rags to riches, but it hasn't been straight up and to the right. I mean, to think, most people forgot this. Reading his book, I just remembered, he got fired from ESPN. He had to go to Fox Radio, and then he's come back. And to think, not only is he going to be the first guy that makes over probably 20 to 25 million, but he's also could be the next Johnny Carson. Yeah. And he's built an incredible business. And I can't wait to ask him.
And Michael Strahan, talk about another amazing career coming in entertainment. All right, guys, thanks very much. Podcast. It's called The Deal with Alex Rodriguez and Jason Kelly. On this week's episode of The Deal, Alex Rodriguez and Jason Kelly speak with U.S. soccer legend Brandy Chastain about private equity firm 6th Street Sports Investment and the Bay FC owner's hope for the sport. She also talks about if the world is ready for women's sports. So take a listen to that good stuff. With our news in New York City, here's Michael Bart.
Thank you very much, Paul, Alex, and John. There's late word that former football standout O.J. Simpson has died. In 1994, Simpson was accused of and ultimately acquitted of the brutal murders of his ex-wife and her friend. According to his family, Simpson succumbed to his battle with cancer. He was surrounded by his children and grandchildren. Orenthal James Simpson was 76. House Republicans have sunk a procedural vote on the Foreign Intelligence Surveillance Act, or FISA. Bloomberg's Amy Morris reports from Washington.
Members of Congress and civil liberties groups have criticized the surveillance tool as sweeping up data from Americans, which the intelligence community can then search. But House Republican hardliners prevented debate at the urging of former President Donald Trump, who says the power was used to spy on his campaign. He has not provided evidence to support that. Now, this is the 7th time during this Congress that far-right members have tanked a rule allowing debate and votes on legislation. It is a sign of growing unrest as House Speaker Mike Johnson struggles to unite his conference. The FISA bill expires April 19th. In Washington, Amy Morris, Bloomberg Radio.
Ukraine says the Kyiv region's largest power plant has been destroyed by a Russian strike. The White House is announcing plans to close the so-called gun show loophole. Under the new rule, background checks will be required before anyone can buy guns online or in person at gun shows. Attorney General Merrick Garland addressed a plan in the video statement this morning.
Gun violence has devastated families across the country. For many, it has meant the loss of a parent, a child, a student, a fellow officer, or a friend. That is why the Justice Department is bringing every available resource and every authority we have to the fight against gun violence.
It should be noted that Michael Bloomberg, founder and majority owner of Bloomberg News parent Bloomberg LP, helped found and is a current supporter of Everytown for Gun Safety, which advocates gun safety measures. Finally, on the Masters, we've got a four-way tie for the lead, including Eric Van Rooyen, Taylor Moore, Danny Willett, and Bryson DeChambeau, all at 1 under. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John?
All right, very good. Michael Barr, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you find us here. Let's talk about the food and beverage business a little bit. Constellation Brands, they are a $50 billion market cap company based in Victor, New York, and they reported some numbers here today. So let's break it down with Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst. Ken, remind everybody what Constellation Brands is. What are the big brands that they have, and how's business going?
Yeah, hi, Paul. Well, Constellation Brands is well known for its line of Corona beers.
Nice.
And increasingly Modelo, part of that family. It also makes Woodbridge wines, High West whiskey, pretty much a portfolio of beer, wine, and spirits brands, but again, mostly skewed towards beer.
So how'd they do? Walk us through more stuff.
So the quarter, I think the backdrop, first of all, was for a slow quarter, for most wine and beer companies right now and spirits. Given some recent results from Brown-Forman and Duckhorn Portfolio, they're a producer of wines, where they're all saying, trade inventory reductions stemming from cooling demand across all alcoholic beverages was kind of the backdrop to this earnings report. So when it came out, it beat expectations. Beer sales were up 11%. Wine and spirits were weak, but again, this is mostly a beer company. And so that's why it was perceived very positively, because this was a dose of good news, an otherwise very cautious market. So the company's doing basically what it said it would do. It had good results for beer. It reduced debt some more. It's committed to expanding its big brewery operations down in Mexico, increased the dividend 13%. So from a shareholder point of view, they're doing the things they said they would do, and the beer results beat expectations, and that gave the market a dose of good news today.
Stock hitting a 52-week high today, up about 10.6% year-to-date, up about 19% over the past 12 months. What's the growth story here? Is this? Oh, I guess let's go another way. What's Constellation saying about the consumer in general? Because there's a lot of concern out there as we look at some of the big data coming out of Washington, D.C. about the consumers, inflation, and all that type of stuff. What are they seeing?
Well, they look at the paper also. They understand, the environment that they're in, that the consumer has definitely turned a little cautious here towards purchases that they can defer. I guess that's the best way to put it. Beer is, a relatively low price point product vis-a-vis wine and spirits, a high-end bottle of wine or high-end bottle of bourbon. You can maybe put off for a while, but, a bottle of beer or even a six-pack, whatever, you're not as prone to do that. Even though Corona and Modelo, command a very premium price, it's a premium product. So they're aware that they can't just keep, tacking on big price increases. They're aware of what's going on. But they see the consumer is resilient, particularly for beer right now.
So, Ken, when we get you on, we like to talk about all the things. And one of the things we like to talk about is weed, because you walk down the street in New York City, you get the wafting. I think it smells good.
Right. Let's clarify this, that Ken covers the cannabis stocks as well.
Yes.
It's not that he is
maybe does the
connoisseur of the weed.
Right.
He's not our
You're right. I
distributor.
did not frame this correctly. Ken, you're an analyst that also covers the cannabis stocks. When I walk around in New York City, I smell a lot of cannabis products. How are these companies actually doing?
Well, Alex, they're doing pretty well from a sales point of view, from an EBITDA point of view. But the taxation on cannabis companies is so onerous, and not very many are profitable from a GAAP accounting point of view. So if you're an investor in this market, you certainly have to be patient, and that's because you need some help from regulators from Washington, whether it's a reclassification from a prohibited drug like marijuana is considered today, or it's outright legalization in some states and so on. So you need some help from regulators to keep this thing going. So it's going at sales are, from an industry point of view, are moving positively as more states legalize. Florida, it's going to be on the ballot. Florida could be a $6 billion legal market, or about 3 times the size that it is now, in a very short order, if in November voters approve legalization for adult use in November. So it's moving positively, but again, from an accounting point of view, it's not looking as rosy.
So what's this? You cover a lot of the consumer companies, Ken, from the beverage companies to the beer companies and packaged goods. What's the sector that's doing the best here? Where's the most investor interest these days?
Good old soft drinks. Yep. Non-alcoholic soft drinks, Coca-Cola, PepsiCo, Keurig, Dr. Pepper, Celsius Energy. People love their soft drinks, and it's a very, very resilient market. It's doing well, whether it's a food service or it's take home for home consumption, doing very well, and that's where the pricing power is at. You're looking at categories like energy. Energy is no longer an upstart category. It's a $20 billion category. It's a big category, right? But it's still growing at high single-digit rates, and it's no sign of slowing down. Even the soft drink, the carbonated beverages, Coke, Pepsi, the products have been around a long time. I think they're discovering that maybe they were underpriced for a long time because they've been taking pricing up for a while. Consumers are not balking at all. As a matter of fact, those mini cans have far higher unit prices than the regular size, and consumers love them.
I like that.
So that's an area of particular strength right now.
Mini can's nice.
Yeah,
Then it doesn't get flat if you don't drink the whole thing.
Yeah.
Before I let you go, Ken, the non-alcoholic spirit thing, does that have real legs? John Tucker, don't say anything. We only have a minute.
I think it does. To a small audience. I mean, this reminds me of the Liquid Death water. It's basically spring water in a can. It's called Liquid Death. Yep. People like to act like, or not act, but they like to be social at parties, and it's a certain vibe that's given off if you're drinking a bottle of, plain bottled water, as opposed to something that looks cool, like Liquid Death, even though it's by and large the same ingredients inside. So the same can be said for non-alcoholic beverages. I make a little joke of this, but I think younger demographics tend not to imbibe in alcohol as much as maybe my generation did, and I think that's part of the attraction as well.
All right, Ken, we got to leave it there. Thanks a lot, Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst. I tried all that stuff because I don't really drink that much anymore, and then I'm like, why not just drink juice? And it's all that sugar anyway. Anyway, this is Bloomberg.
news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. Did they know something the rest of us didn't? United Health Group Chairman Stephen Hemsley and 3 senior executives netted a combined $101.5 million from stock sales that they made to 4 months leading up to when the public became aware of the federal antitrust investigation there. The sales occurred between October 16th. That's a week after the largest health insurer in the U.S. reportedly received notice of the Justice Department probe, and February 26th, the day before Bloomberg News and others published stories about the investigation. The stock dropped after the investigation was widely reported. But typically, a company's general counsel would declare a blackout period barring trading in light of a sensitive investigation. British autonomous driving startup Wave Technologies, that's W-A-Y-V-E Technologies, opening a research center in Vancouver. So this is adding its second location in North America to accelerate its growth. Now, if it's a British company, does it drive on the wrong side of the road? Autonomous, going up against the likes of Alphabet's Waymo. Wave's artificial intelligence aims to learn driving rules and patterns by itself so it can respond to new places in unpredictable scenarios as well. And solar eclipse news, the eclipse sold out hotels and Airbnbs all along the path of totality as tourists flock to see this celestial phenomenon. Early data on spending, foot traffic, and road congestion patterns suggest that not all destinations benefited equally. Syracuse saw a 28% year-over-year increase in spending at hotels and restaurants for the period from last Friday through Monday, and that's double the U.S. average, a change of 13.7%. And Syracuse could use it.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday Eve, everyone. It is Thursday. I'm Alex Steele alongside Paul Sweeney. You're listening to Bloomberg Intelligence Radio. We are live from Interactive Broker Studio right here in Midtown Manhattan. We are also broadcasting live on YouTube. We bring you all the top analysis with our top analysts. I got to find a better way of saying that. You like it? It works for you? Okay. They cover about 2,000 companies, 130 industries. We bring you all the news. We bring you all the data. But here's the headline. Let's be honest. The headline, O.J. Simpson, football legend, movie star whose acquittal for the murder of his white ex-wife exposed a racial chasm in the U.S. in the 90s, has passed away. He was 76, and the cause was cancer. This is according to a post by his family on his account on X, formerly Twitter. He said he died on April 10th, surrounded by his children and grandchildren. He had been a free man since 2017, when he finished serving a 9-year prison sentence for kidnapping and armed robbery in a case that developed after his acquittal for murder. But it looks like that moment, it's a moment.
Yeah, it is.
That defined the 90s, it feels.
Yeah, it defined the 90s, it defined like kind of news television, cable news television, kind of that, seeing the white Bronco going down the freeways in California. So yeah, for a lot of folks, that was, and for, people that followed his career as an athlete, it was tough to try to put those two together, those two situations, even though obviously he was acquitted, but just that whole two different aspects to his life for a lot of folks was kind of tough to kind of juxtapose. So, but then I forgot that he had actually gone to prison.
I forgot too.
Afterwards, so for I guess a 9-year prison sentence for kidnapping and armed robbery in a case that developed after his acquittal for murder. So again, seeing a lot of coverage of that today.
Yeah, and also just to remind everybody, so he had his first wife, Marguerite, who he married in 1967, and they had 3 kids. And then they divorced in 79, and then he married Nicole Brown in 1985, and they divorced in 92 after she had accused him numerous times of assaulting her. And if you recall, back in the day, his arrest for the killing of his ex-wife, Nicole Brown, and her friend Ronald Goldman, there was just mania about this case. It resulted in it was like a year-long trial. The judge and lawyers became like household names that you talked about at dinner parties. I was in high school, and we were still like super engaged in it also. And it was really centered around racial discrimination as well, became a leading topic of that conversation within the courtroom.
Yeah, it's just amazing. I mean, you had Saturday Night Live doing, skits on it as well. It's just such a topic of conversation right in the zeitgeist for such a long period of time. And it kind of just for a lot of people, that's how they know O.J. Simpson, as opposed to his Heisman Trophy winning days at the USC, and then again playing for the Buffalo Bills in the NFL. That's kind of what they know. So it's really just an amazing story. And anyway, Mr. Simpson dies today at the age of 76. All right, tomorrow,
yes,
you'll be working.
I will.
And you'll be following some bank earnings, won't you?
I guess some bank earnings, yeah.
So that means we talk to Allison Williams from Bloomberg Intelligence.
We'll talk to her for quite a long time. We get J.P. Morgan. I think we get Bank of America and Citi are also out tomorrow. They kind of change their days, but you definitely get J.P. Morgan, and that really becomes the benchmark, particularly as their trading unit and their investment banking unit just sort of kept crushing it. Well, definitely their equity trading unit and their fixed income unit kept crushing it, and then that really put the pressure on everybody else as well. So we'll be looking for that. It's always the expectations game. Yes, you do. Actually, I should point out that Bank of America is next week, but you get J.P. Morgan tomorrow. What's priced in, though?
Yeah.
Like, that's my question. And what's really going to wind up moving the needle?
Well, Bloomberg News had some good reporting earlier in the week, a piece out that maybe the net interest income, which the companies had guided very conservatively, because back when rates were lower and they thought rates were going to go down quicker in 2023, that maybe that guidance will be taken up, the net interest income for a lot of these companies. So I think a lot of analysts and investors will be looking at that. And then of course it's just good to get a sense when you talk to these CEOs of the big banks, because they touch all types of consumers in many ways in the economy, whether it's making loans, credit cards, all that type of stuff. And then, of course, Jamie Dimon in and of itself is usually some good theater. So we'll have all that coverage for you tomorrow. S&P 500 up 9 points. Balance of Power with Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Russia renews its offensive in Ukraine. Welcome to the fastest show in politics, as Russian missile strikes knock out the biggest power plant around Kyiv. And the UN's atomic watchdog calls an emergency meeting. We'll have the latest on this from Bloomberg's national security team, with Ukraine funding, of course, still up in the air here in Washington. President Biden preparing executive action on the border, but can it stand up in court? We're going to talk about the options with immigration attorney Leon Fresco at Holland and Knight. And on this PPI day, we spend time as well with economist Lindsay Owens from the Groundwork Collaborative. Analysis from our panel. Bloomberg Politics contributor Jeannie Shanzano is with us, along with Lester Munson at BGR Group. A lot to do after we check on Wall Street. Let's get started there right now with Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We are looking at a mixed Thursday here. Stocks struggling for direction. Wall Street heavyweights getting ready to report earnings that will test the market resilience this year. Right now, Dow Industrials, they are trading lower, down 78, drop there of 0.2%. The S&P up 10, that is a gain of 0.2%. NASDAQ up 118 points, up 0.7%. And after yesterday's rout, we do have small cap shares gaining today, with the Russell 2000 up by 0.4%. The 10-year 4.56%, with the 2-year now at 4.94%. Spot gold up 0.5%, 23.45 the ounce. And West Texas Intermediate crude down 0.8%, 85.53 for a barrel of WTI. Earnings season kicks into full swing tomorrow, with J.P. Morgan Chase, Wells Fargo, and Citigroup all reporting. In the meantime, the focus does remain on central banks. Jason Thomas is the head of global research at the Carlyle Group. He says the Fed is more likely to raise than cut.
We don't see any rate cuts. And then I think you can allow for a tightening of financial conditions that may eventually, by year end.
I ever would have imagined.
Yeah, no, me either. I was like, okay, well, hey, that's an interesting theory right there. Other interesting stuff that's going on, and I wanted to get your thoughts on this, Penny, and we can work around, maybe get some other thoughts. If people have like hot topics for today, definitely feel free to throw them into the mix. I need a way to like crowdsource hot topics. But Adobe announced today that they are seeking video clips to help train their generative AI model. And I've been seeing more of these video clips just getting better and better. There was one that went viral this week of they took the scene of, I believe it's Lil Yachty coming out onto the stage with like a mic, and they replaced it with a perfect like replica of the Joker just mimicking his actions, and it was just like a crossover of the video. And then I myself even paid. I signed up for an Adobe subscription this week for their sound and video cleaning AI, where you can plug in your video or whatever it is, and it'll just completely clean the sound. Action knows what I'm talking about.
Totally worth it.
Yeah, it's crazy. So this stuff just seems to be getting better and better. A little scary with the videos. I mean, there's another video that went viral about a week ago of a girl speaking and promoting a product, and the author was like, "Yeah, this girl doesn't exist. This is also completely AI." There was a post yesterday. Oh my God, the other post, man, we got to talk about this. There was a post that went viral, and I don't know if you could have pried this information out of me, but this guy apparently admitted in Miami that he's spending $10,000 a month on AI girlfriends right now. 24-year-old guy. To quote, "Some people play video games. I play with AI girlfriends." And so, yeah, kind of speechless, but I mean, they look absolutely real. Like if you just showed me these profiles, I'd be like, yeah, that looks pretty real to me.
What does playing with an AI girlfriend mean? What
No,
does that
Poppy.
include?
No, Poppy.
I guess you talk to them and back and forth, and I don't know exactly, but I feel like we're getting to a point where like I just don't think I can really trust videos anymore on the internet. I know we can already say that, hey, I can't trust them for a while now, but like they're really getting to the point where it's super hard to tell. What do you think, Penny?
Well, I mean, definitely we're entering the age where we have no idea if something is real. You used to be able to, for sure, imagine that someone on X was real if they posted a video of themselves, right? At that point, like a picture, hard enough to fake, but a video, it's for sure real. We're coming definitely to a point where that is no longer the case. So that's kind of scary. I do have questions about the audio cleaner though. Like I use CapCut, and CapCut has its own sort of options for cleaning up the audio that are pretty good. Is this Adobe one so much better that it's worth paying for a separate service for? And like, what makes it so good?
Action.
Yeah, I can definitely talk about this one. So they've had this out for over a year now, but it was like on a website and you had to have the Adobe subscription to do it. They've just recently implemented inside of Adobe Premiere Pro. So right within the actual software that you use, you click on a button and your audio gets uploaded and downloaded. So it does everything for you and you get to select how clean or how dirty the sound is. So usually I'm using about 70%. It'll clean up a lot of the audio in the background, but you don't want it to sound fake. So I keep about 30% of the background noise. Essentially, it will increase the volume. It will deafen anything that might be going on the background. Like I've done interviews in conference settings, and it sounds like I'm in a podcast room after I push it through this. It's incredible.
You ever use from now on, depending on how much you pay me, it'll determine how clean or how dirty I sound going forward.
You ever I think people are paying extra for you to sound dirty, Diligent.
Which
Action
one costs
CEO.
more?
You ever use DaVinci Resolve?
Yes, sir. Early on, I never got back into it. It's really great for color grading.
Do you like it better than like compared to? I just started my video editing journey yesterday. What tool should I be using?
So DaVinci is really good if you're using the Blackmagic Design stuff like the A10 Mini Pro. I have an A10 Mini, right? So I do have Resolve because I can import everything that I record right into DaVinci as different layers. It's just an easy workflow, but it's hard. Like that's the main thing. Like it's hard for you to pick it up. Like Penny using CapCut, that is the best thing for anybody to go out there and start using right now. Even the free version is worth using. You don't need to even pay for it for you to have like decent editing.
So if I want to do like color grading and stuff and cutting it up. Like I have like a video I just made where I have audio and video from a screen share, audio and video from the camera, and I need to like take out the audio at certain points. Is like CapCut have the ability to like you have multiple layers and you can delete the audio from certain layers. Like it's that you can do that much stuff with it.
Yeah, and it's so easy, Alex. Like, I mean, I'm not a pro video editor, so I don't know what I'm missing out on. but I didn't even watch any video tutorials. I just started like clicking and right clicking and dragging, and things just work, right? Like it's really, really easy. The designers of that software did a phenomenal job.
So I hated Penny. Like, so the difference between CapCut and like Premiere Pro and all these other ones are layers. I love layers. CapCut is an inline editor. So you just basically dump things one after the other. And yes, you can layer things on top of each other, but the way that it's laid out is more of an inline editing style. And it's not my favorite, but if I need to pop out a video and just get it out there. Like the best example for this is whenever I get like last minute, hey, I need to get a video out. I'll pay you $1,000 if you get me something within the next hour. Which happened actually 2 weeks ago. I'm not going to open Premiere and try to do all this stuff. I'm literally just going to go into CapCut and do some quick, editing and get it out. It's very easy for people that are used to doing TikTok as well, because it's a very similar interface.
Yeah, I love CapCut. I've been doing like these Brazil hybrid spaces, and you can use their auto captioning to translate the audio from Portuguese to English, and then add English captions to it, and it takes like 2 minutes. It's amazing the things that AI are supposed to do. And Wolf, I need to ask you, do you stream your spaces on other platforms, or do you I need to be able to auto record my spaces. The only way that I can go back and record my spaces is if I do a screen recording playback, which you're doing a double the time.
Do you need the video or just audio?
It would prefer the video, but if I can download the audio by itself, I'll do that.
Yeah, you can just go to spacesdown.com, and it's a 100% free Twitter Spaces downloader. You can just make an account, you plug in the link, usually takes maybe like 10-20 minutes, and it'll email it to you.
And what about the video?
The video, the only way that I know to get that right now is to screen record the video, because I don't think that there's anything else that's grabbing it. I don't even know if there's such a great purpose for having the video, but yeah, like right now, if you're familiar with like David Carbut, for example, who does all Farzad's super clips where he'll take like a Elon space or a Mario space and cut it down, he's literally just having someone go in, sit there, screen record, get it all. Now, I think nowadays, at least, you do have it technically on desktop as well. So maybe you can do it through desktop and screen record on there. That might be something that's easier to do. Oh my, you guys are bringing me back though. Throwback to the OG days, 2021 of Spaces. This is before they even had the ability to at all record. And everyone was like, I'd hit people up to come on Spaces, and they'd be like, I'd come on the space, but I don't just want to do something that's never going to exist anywhere else, right? Like I just coming up for YouTube. So I got an intern, and I literally had the intern that would come in and just sit there and record. And I had this intern record so much that it ended up just completely, all their storage on their phone was gone. I'm pretty sure, just like from the size of these clips, they were coming in and recording for hours on like an iPhone 8 or something, and just absolutely destroyed the phone, sadly. But yeah, it was the OG days. And then we'd take the clip and then we'd upload it to YouTube or whatever. I mean, I checked the other day, I have this like podcast feed. I have over, I don't know, 150 spaces that I recorded, clipped, uploaded. Yeah, like maybe like 50 people listen to each one. Like it was like, all right, we went through all of that. Yeah.
I'm trying to. Well, Penny and I were talking yesterday, the day before, about how we can bring in other people on the platform to make spaces, like on other platforms, to make spaces grow. And I think the only way that we'd be able to do that is if we have viral content that is exclusive to spaces, and people are like, oh my God, where did this happen? Last night I had a space with some Brazilian dignitaries, like representatives and senators, right, and major journalists. And so I think that's something that people would be interested in, but I just, man, like it's a 4.5 hour long space. So for me to get any good feed from it, I have to go back and screen record for another 4.5 hours. And then it takes, because I was thinking about the video editing aspect, then it takes another over 4.5 hours for me to dig through the space and pick out which clips I want and to edit it all. And so it ends up taking me like a whole nother day, maybe even more than that, to break it down into clips and do all that I want to do with it with the editing. So any way to streamline that process, man.
I recommend, do you know David Carbut at all?
I don't, but I'll get to know him.
Yeah, I would recommend hitting him up. He's definitely the guy for all this. His username's David, and then Carbut with 2 T's and then an underscore at the end. He is by far the best Spaces video editor that I've seen. Elon has retweeted a bunch of the clips and cuts that this guy has done. In fact, if you go to his pinned tweet on his profile, it's one of Elon retweeting it. So yeah, he's the one that I would check out. He makes them really good for YouTube. Ideally, what you want to do with Spaces is you want to do what's called a supercut. So there's a platform called, gosh, is it Descript or something like that? Yeah, it's called Descript. And essentially what you want to do is you want to grab that screen recording of the space, put it into Descript. Descript has an AI built in that allows you to cut out ums, ahs, silences, all those type of things, and allows you to really trim down the amount of time that's in the space. And then of course you can cut it into more clips from there. So if I was like, yeah.
What was the first site? Is it Spaces Down?
Spaces Down. Yeah,
And then
spacesdown.com. And then Descript. Descript you may have to pay for if you're trying to do a decent amount. It'll maybe let you do like 3 hours for free or something like that. But Spaces Down, by the way, is getting a lot more popular. I just want to give them a shout out. I have no idea who owns it, who made it. I'm not sponsored, but they said that they've already downloaded 45 million hours of Twitter Spaces through their website. So shout out to whoever built that.
There's already the ability to do that, remove ums and ahs and do supercuts in CapCut too, Diligent.
Yeah, but CapCut only does like 30 minutes at a time. Anything else more than that, it breaks. So.
Yeah.
And I'll second the recommendation of David. David's incredible. I've seen a bunch of the work that he did, and I did a consultation with him. David is also not free, though. So David is paid help for professionals.
He's not free, but if you're very nice, he might tell you how he does it.
What's his last name? David what?
Carbut. C-A-R-B-U-T-T.
Okay, thank you.
Yep. You can look him up. I see Penny and Lucas and a bunch of others follow him.
Now, Diligent, there is also a multi-stream setup, and I sent you this link, but I did this a week ago, and the spaces had 8 people in it. It was a low-key space, and I just wanted to test it out, see how a multi-stream would work. The space itself probably got less than 100 views, but the stream that I sent over to YouTube got over 700. So there's definitely a way for you to multi-stream things and take advantage of multiple platforms with this. It's just getting that set up. And right now, I am displeased with the way that the desktop version of Spaces looks like, just because it's not showing who's speaking exactly at the right time like it used to. So it is a little bit, iffy, I'd say, but it works. And if you're trying to get a bigger reach, it's the easiest way to go about it.
I want to
Diligent, if you need help like creating clips like that, just shoot me a DM. We can talk. I've been creating what I do, like I'll take the recording, right? Or like the audio recording and just put like PFP layers on like as videos instead of like trying to figure out who's speaking and all of that stuff. It becomes very easy. So shoot me a DM, let's talk, and I'll help you out with that.
Thank you. And yeah, so you guys are complaining about Spaces, but look what happened with Elon last night. That space crashed. Those Spaces crashed like 5 times with Mario.
Yeah.
Oh yeah. By the way, Mark Coleman said that there is a hot fix out today. They just released it, so go to your iOS app store and update the app.
I have the hot fix. I updated the app, and I think it was Ani speaking before you, Diligent, and I couldn't hear her. So it doesn't fix everything. Spaces are just so ridiculously buggy the past couple days. I dropped down in Diligent's Brazil space and came back up. It must have been like 30 or 40 times, because every single time I came back up, there was someone on the stage that I couldn't hear. Definitely looking forward to them cleaning that up. But Action, did I overhear you're using desktop to stream to YouTube and host the space at the same time, or is that possible to do on your phone? I think something like that is definitely what Diligent and other Spaces hosts want to do long term to get their stuff on other platforms. Like, why wouldn't you have it live on YouTube as well?
I'm starting to do more of that for sure. So what I do, I'm doing the hosting on my phone, and then I have my camera on me, and then I screen cap the spaces off desktop. So I have the best possible audio for myself and the speakers as well. So it's a interesting setup, but it works really really well. And to your point, Penny, I was there with Elon as well. That stage, and he explained exactly what's going on. The problem with Spaces is that all the data for the speakers is getting driven through the hosts, and if the hosts and speakers are too far apart, you end up having packet loss. And if when you have packet loss, it desyncs and makes those spaces crash. So like I was trying to like I was messaging Mario in the background. I was like, bro, stop making people co-host. Yes, your connection is gonna suck. It's gonna be terrible, but keep it at just your connection. Don't let the space die. You're gonna be basically sending everybody's traffic through your phone, and then just log in with another account somewhere else and do that as a speaker. Otherwise, yeah, it was just crashing because when you add co-hosts, you're basically sharing the load with the co-hosts as far as speakers are concerned, and that just causes even more latency and more packet loss. And I'm sorry for nerding out with everybody.
All right, let's take a thought from Kayla here, and then Alex, I got a question for you. Go for it, Kayla.
Yeah, so I mean, Action brings up a great point, and I think a lot of people forget that like all of this is used to train AI. I hate to go to that, but yeah, like I think we're training AI with Spaces, and I think people sleep on that. So I have no idea how to edit these videos like you guys are talking about. And to Wolf's point, we've been here for like 3 years now doing this stuff. And if you think about just how valuable that data is to train an AI to like upload this data from spaces to find the trends in spaces, that data is invaluable. I don't know if anyone's ever done that. I wanted to do it, but I have absolutely no idea where to begin. And I have tons of spaces that are recorded, but I wouldn't even know where to begin to like make this data usable. And I actually have engineered a bunch of data before. So I'm curious if you guys have any insight on how to engineer this data to upload it and make it usable for training AI, like Spaces
Are
data.
you talking about like transcribing like an audio space into like words and then
So
training an AI off of that?
more
Because I
so
know how to do
actually,
that. Because I know
really,
I can tell you how to do that. Yeah, it's
that
pretty easy
actually is
actually.
not something I even thought of, Lucas. But
That's
what
the
I
best way to do it if you think about it, because you're trying to train an AI, right? And sometimes it's not going to hear the audio. It's probably most time it's not going to hear the audio, but it will read the transcription very simply. So I'll tell you offline. I don't want to go into it now, but if you just use some AWS services, and you can actually transcribe pretty easily and pretty cheaply. And then once you transcribe audio with AWS, you can then fire it into AI to train. I'm doing it right now. That's why I know how to do it. Just an
Oh,
FYI.
thank you. So
Yeah, of course.
one last question. Like, do you guys think it would be valuable to have AI look at all of the different things? Like, think about throwing emojis. Like, we have a Spaces system where they track that kind of stuff. So I'm curious if in the future we're going to see like AI learn this stuff, how we communicate in Spaces.
Right?
Yeah, I mean, totally. It's beneficial, right? But here's the poor man's version of doing this. Grab those audio clips, add a black screen to it, upload it to YouTube, and download the transcript because they'll do it for you.
So yeah, that's a good way of doing it too. It sounds like very manual, but you definitely do it. I mean, that's a cheap way of doing it for sure. Like that's basically free. So yeah, actually, if you don't have a lot of money, that's the way to do it. But it's wicked cheap to transcribe audio because you're just pulling the audio, not the video anyway, even if it was video, and just transcribing it through AWS services. It's like freaking like 12 cents for like 10 minutes or something like that. I don't remember
Yeah,
how
and
much exactly.
that's basically what Descript is actually doing, and they're leveraging that type of technology on a software base where you pay a little bit more and they're making money on top of you.
Alex, I got a question for you because I don't know if you saw, they did add, I believe this was last week, the ability to host spaces now from desktop, but they're also still just having a variety of issues, it seems like, just overall with the entire spaces thing. So I'm wondering about them expanding to it. There's also a glitch on desktop. Don't know if anyone else has been annoyed by this, but okay, when you make a space on your phone, it only allows you to open that space within 30 minutes of the scheduled time. This way you don't accidentally open it at a different time, ruin the spaces link, and everyone that had a reminder. Now they have it on desktop. They do not have that safeguard. You cannot even click on the space to share it with someone else. I have to like make the space, take the link, text it to myself, right? That way then I can like pull it up from my text and put it into my thing. There still seems to be like all these issues. Elon's tweeting yesterday that space stabilization is a priority. Alex, when you tweet at Elon and tell him that there's problems
Whole
with the
shit's
platform, he
fucked,
tends
dude.
to
Everything's
respond
fucked.
and listen.
Everything's fucked.
So what are you going to tweet at him and tell him that we need this fixed?
Yeah, come on, Alex, fix faces.
It doesn't fucking matter. I don't know why they spend any time on anything but the features they currently have. Stop releasing new features. Stop releasing articles. Stop releasing video spaces. Stop releasing everything. Just fuck. Someone's calling me. Fucking Christ. Let me go on Do Not Disturb. All right. Stop releasing features. Go take every engineer that works for you, all 2.5 of them, and make them just work on the current things you have. The algorithm is fucked. The spaces are fucked. I do a space and it's now you don't even get the window, just a link. It's just a link on your like it's just an ugly looking link. You post live streams and spaces, they get treated like they're outside links and only 5% of your audience sees it. I'm bullish on X. I bet my life and my career on X, so it better fucking work out. But they need to stop. They need to stop releasing new features and just take all the engineers and put them on the existing product and make the existing product work. Stop making new product. Make the existing.
And by
product
existing
work.
product, he means spaces.
And by
And the
existing team,
algorithm,
he means the
spaces and the
3-person and a
algorithm, and
dog.
live streams, and just everything that they have released now, make it work.
But didn't Elon just say that they're updating the algorithm? What's up with that, Alex? Give us the alpha.
Here's the alpha. Nothing's gonna happen.
It's a vicious cycle. Alex, tell us about this new camera. Is it the move? I was taking a look, thinking about my video vlogs.
Yeah, it's sick. I'm having the worst time ever right now with it, but it's sick. So I bought this new camera. It's the DJI Osmo Pocket 3. It's awesome. It's this tiny little camera you can fit into your pocket, but it's like super high quality. And so I want to get into long form video. I want to get onto YouTube as well, and start creating more YouTube content. And so I bought this camera so I can go around and filming. I have a concept for the channel that I think is going to be really cool. And so I filmed my first video yesterday, which was awesome. It was awesome filming it. I go back and I watch the footage. There's a booger hanging out of my nose for the entire footage. I have to delete that, go back, film the entire thing again, sans booger, and then I start my video editing journey. I fucking download DaVinci Resolve. I go into DaVinci Resolve. I do like 3 hours of editing. I come on this morning. It says all my media is offline, and I Google. I'm like, what the fuck is this? And it's like, if you move your files around, it says it's offline. So you need to relink the files. So I relink the files. Nothing happens. It still says it's offline. So I'm like, all right, maybe I just need to reset this thing. I exit out of DaVinci Resolve. I go back in. Everything's gone. There's no project. There's nothing. I'm literally about to light myself on fire. I have to just everything I'm doing. I have to do it 5 times over. Everything I do, the filming, the editing, everything. I just have to do it 5 times to make it work. I'm about to fucking freak out.
Alex, you made a huge
What?
mistake. If you just posted the version with the booger,
That's what I was gonna
A,
say.
it would have been viral. And B, you could have saved all that time, done it once, bro. What's wrong with the
The
boogers?
boog
My
one would have
YouTube
been a good
debut can't be me
introduction.
talking with a booger in my nose. I just
But
It would
can't.
have been.
I can't
Alex,
do that.
I
What?
think it should be a booger. I embrace the boogers. I call it booger check. So, like, if I'm filming myself, and whatever's in my nose, because live streaming is just what it is, right? And so I just kind of like put my nose right up to the camera, and I'm like, "Are there any boogers in there?" And I'm like, yep, there's one on my right." And then I just address it, and then if anybody else addresses it later, then it's like I already, we did a booger check.
We call it bat in
Yeah.
the cave. You guys ever call it bat in the cave? Do I have a bat in the cave? You know what I mean?
Yeah,
Like
all the time. Of
it's a way
course.
nicer. It's a way nicer way.
I'm just saying, just embrace it. But I understand, Alex, and I understand the frustration of the long form content and the editing and all of that. I have lived because I put all my eggs in this basket coming over from YouTube. So I feel you.
Yeah, so I'm trying to diversify onto YouTube since I don't know I don't know what's going on in this platform right now. It seems like every other day something's broken. We're gonna try to make both work. But yeah, DaVinci Resolve. I'm about to nuclear bomb it from my computer and go into something else. I don't know.
Dude,
I
for what
seriously
you're
can't
doing,
believe I did this.
go CapCut. But I had a question about your video. Are you doing indoor or outdoor?
For this one specifically, indoor.
All right. So, biggest recommendation for the Osmo Pocket 3 is you need lots of light. The problem with that unit is that you only have a 1-inch sensor, so you need as much light as possible, right? Like the image quality is incredible as long as it's well lit. A lot of people try to go that route just because, like, oh, it's fine. It's really easy to use. The image is clean, and it is, but you need a lot of light. So the smaller the sensor, the more light you're going to need. So like I love Sony's because of their autofocus. So a lot of people have been going to the ZV-1, and that's a really good camera. But again, you still need a little bit of light there. It's a bigger sensor. It's almost twice the size of that, but you still need a decent amount of light unless you go like full frame, which too much money, not worth it.
Well, I filmed it indoors, and I don't know if I had a ton of light, but it looked good. The footage looks good in my opinion. I also I don't want to walk around with like I have a Sony. I don't know. It's the $1,000 Sony. Um, it's nice. I use it for my live streams and shit. But like I don't want to walk around with it. It's just
It's
I
it's a
don't know.
ZV-1 for sure.
Yeah, I just don't want to walk around with it. I don't know. I feel like it's just this thing. Like it fits in your pocket. It's so easy. I can bring it anywhere. And when you take it out, it doesn't look like you're whipping out a camera. And I don't know. Maybe I'm just a freak, but I just don't want to be the guy that's just whipping out cameras everywhere. Like I always judge that person, so I don't want to be that person. But this thing's like just small. I take out my pocket, can capture some footage real quick, and it comes with all these like little tiny accessories, like a tripod and things like that that fit into this tiny little bag, right? And I don't know. It's just convenient, and I'm looking at the footage. The footage looks nice. I don't know.
For travel, it's amazing.
You do want to be that guy out. Still want to.
You broke up there, Penny. Repeat that.
It's his iPhone.
It must be, but he said you do want to be that guy.
Yeah, I mean, maybe I do want to be that, but this seemed to work. I don't know. I shot the footage. I think it looks good. I think it looks good. I don't know.
Dude, with the booger thing as well too. Anything that's authentic
Whatever. I
and
like it. It's a
silly.
cool camera. The fuck ever. I don't know. But the concept of my YouTube channel is it's not gonna be highly edited. It's not gonna be super advanced. It's not gonna be this like totally complex. Like you see all these like people on YouTube now who are kind of in my niche, kind of like the business entrepreneurial content niche. And they use all this heavy editing where like their face is popping in and out and there's like all these graphics popping up and it's like built for these people with like super ADD, ADHD, and it doesn't feel very personal. It kind of just feels like a guru yelling at you with all these fancy graphics. And I just think that's super cringe and annoying. So I want to kind of do the same thing, but in like a really personal, like person to person type way where you feel like you're talking to a friend. And so I'm not going to use heavy editing. I'm not going to use fancy graphics and my head popping in and out and things popping up all over the place and crazy noise effects. It's kind of just gonna be like you're sitting in the room with me talking with me, and so it's also easier. So that's what I'm doing, and I just don't think I need like a $3,000 camera. I just something that just shoots 4K and looks decent, you know.
So you don't want your videos to look like pennies. I get it. But Gav, the host, has his hand up.
It's all good. I just saw a couple of hands up. I'm loving the conversation. Pop, you want to jump in and then we'll go over to
Well,
James?
Penny's is good. Penny's doesn't use crazy graphics popping up. It's just his face over green screen, which I like. That's like if I'm gonna do any editing, like that's what I'm gonna do is like my face on a green screen. The only crazy editing does is the sound of pennies falling at the end of everything, which I find pretty funny. But other than that, he doesn't do crazy graphics and stuff.
I think typically
Does
like
he?
that's
I
what
don't
I
know.
connect with. I connect with more than anything is authenticity. And I mean, yeah, I like that you're talking about
Poppy,
actually.
James, anyone, someone speak.
I don't think that you can hear him talking, Poppy.
Oh,
I don't
okay.
I don't think he can hear you. I think
Oh,
you're
I
just
don't
Yeah, I
hear
going off.
figured.
Poppy. No, I don't hear Poppy. Sorry,
It's the
Poppy.
it's
No,
the
it's all good.
classic. Okay.
I'll drop down and come back up.
Okay. All right, let's do that. All right, James, go first.
How's it going, Wolf? Alex, Penny, how's everyone doing? How's the audio? Good?
Pretty solid.
Cool. Yeah, on the topic of like videos, I learned a lot of kind of like photography from my dad because he has a Canon camera that's pretty big and takes like very nice pictures, and I learned from him. Um, I want to get into like I know he does like a lot of drone work. He flies drones in like areas in Boston that are like legal to fly, and takes a lot of very nice videos, high quality videos with the Phantom 4. And he also has like a smaller handheld camera. I don't know what the name is, but I think it's also pretty good for video editing and producing. Like it's like a 360 with the phone. I don't know what it's called, but Alex, I had a question. Are you doing like sort of like vlogging content or more like just day to day like casual filmmaking type thing?
I want to do something in the middle. I want it to be like helpful content, like here's how you build business, here's how you create content, here's how you grow, things like that, but in a vlogging style. So it doesn't feel like you're talking to like a fucking guru. Like all the if you go on YouTube and you find any of that content, it's all exactly the fucking same. There's these guys with things popping up everywhere and super fast cuts and like they all kind of use the same editing style, which I just find super cringe and annoying. I don't know. Maybe there is. I assume there's people out there that enjoy that because it seems to be popular and works well. I just have a thesis. I've always operated in one way, which is I just create content that I would personally like, and it seems to be working for me. And I just personally think all that style of content's kind of cringe, and so I'm just gonna do kind of vlog style. Like I enjoy like a nice personal vlog where it's just a person talking to a camera, no crazy editing. They just get straight to the point and talk to you like a human being, not like they're trying to fucking manipulate your dopamine hits with graphics and shit. So it's somewhere in the middle. It's somewhere in the middle of kind of vlog style where it's going to be personal, but also informative.
I think that's a good idea. Especially like if you, because I know you like you travel a lot to like Europe and stuff. That's a good. You can use the camera for like vlogging. I know a lot of YouTubers that do that,
Yeah, if I like
and they
mix
make it very
in,
cool.
if I mix in like information and things I'm learning just with like my personal life, I think that just is. I don't know. I think that's pretty cool. I think a lot of these like gurus are very inhuman. They're just very like I don't know. I feel like they're churn and burn. Like they just come out of nowhere. Like I have a lot of respect for like Dan Coe and Justin Welsh and all them, but it just seems like there's 1,000 of them and they all kind of do and say the same things and create the same content. And um, I think there's a personal element that's missing from a lot of that I'm trying to fill.
Alex, why are you trying to do guru stuff and not do comedy? I keep trying to tell you your algorithm shit. I mean, like, whatever, it's okay. But you are hilarious. Your funny content is 100 times better than your algorithm content ever is. And you need to lean in and make, whatever content you're making for whatever platform, you need to be going for sarcastic comedy. Screw this guru shit. There's too many gurus. Like anyone can do that. You're fucking hilarious, man, in a unique way, and you just need to lean into that.
Yeah, there's a few things there. First of all, I keep using the term guru because that's what I think a lot of these people are. Is they just kind of like information and then just feed it back to you, and like they don't actually. That's all they are. That's what my definition of guru is. I think what I'm going for is not guru. It's just me documenting the shit I'm learning as I'm building my shit, which I think is different than guru. It's just going to be, I think, a lot more personal. From the humor perspective, I agree. And that's where I think I have a lot of fun is the humor stuff. But like, I just can't think of, I can think of 1,000 lessons I've learned from building my business. I can't think of like a fucking comedic skit every day. My brain just doesn't work. I can't think of comedic skits every day, but I can think of different ways I've built my business. I can think of different ways I've grown my newsletter and grown my platform and earn, revenue things. I can think of 100 different ideas and concepts for that a day. I can't think of one of those
But
Apple Vision
you
Pro videos a day.
But Alex, you and everyone else can think of that. It's just not very unique. Whereas the funny stuff, man, it's killer. And it doesn't have to be Apple Vision Pro every day. And I understand it's hard. Like you can't be a 10 out of 10 funny every day. But I think if you're not incorporating that part of your personality into whatever
Oh, I
channel you're
am. That's
building
that's
on
why I
any
plan on it being
platform,
personal. Is that's it's me incorporating my personality. I'm not gonna like sit there and like be a fucking boring fuck. Like I'm incorporating my sarcasm and humor into it. It's just not going to be like these comedic skits that I do because I just can't think of. I'm just not an SNL writer, you know. But I can think of concepts for helping people build businesses, and I'm going to mix in my humor with it. That's what I'm trying to do with the concept, is make it very, very personal and very me.
I think the
You just better lean into on every opportunity being a sarcastic asshole. As long as you do that, it's going to be like way better than otherwise.
Man, he doesn't have to try.
Go ahead,
one of
Poppy.
one of the things I was. Can you hear me now, bro?
Yes, I can hear you now.
One of the things I was gonna say is, and I think it's
now I can't hear.
Oh fuck. Okay. Well, anyways, I
Go
want
ahead,
to address.
Poppy. I'll feed it
Yeah, I
back
want
to
to address.
Penny.
Yeah, I want to address Alex. So, anyways, so basically, what I think one of the cool things that you said was that you are doing something that you like to do and you're not doing it as much, say, for others. And I think the best type of like expression in art form is actually for the individual. So you do something that you love so much that you're then feeling good about sharing with others, and that makes it even more sustainable. But then it creates an actual authenticity to it as well too, which reaches people and creates more of an actual nurturing connection with an audience, not just something that is based off of like you said, the dopamine effect or the intrigue or whatever. Like intrigue is good, but not as much, say, the high consistently. People are going there for like, you see all those like crypto videos on YouTube and everybody does it, but it's just like next 100x, blah, 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 all those different things. It's like the cliche way to get people excited to come in and then, absorb content. But as authentic as you can be, that's what I was saying about like, you didn't hear me, but I was talking about like the booger thing or whatever. And it's just like the humor to like being real and doing things that are just like a little fuck up or whatever is like, actually reaches people quite substantially. And like obviously a part of your personality is like being super sarcastic and very outspoken and those type of things. So it's like, people think that's fun and I'll start drawn towards it because it's really real, right? So I think you're going in the right direction in regards to not doing what everybody else is doing and actually like being yourself as much as you can, and actually not making it as flashy, because I think you'll create more. Maybe the numbers won't go as high as some of the more flashy stuff, but I think you'll create better relationships and more real relationships with people that will last longer. And you'll be able to carry those maybe across to YouTube and then just continue developing those relationships. So it'll just be better quality overall. And I think you generally talk about like that a lot on your posts. Is you talk about actually making good content, not just content that's looking for numbers. So that's all I was trying to say. Is I think the authenticity is actually good to me. I appreciate that more than anything, and seeing a booger in someone's nose is fucking hilarious. So yeah.
I appreciate that, Poppy. That it means a lot. Yeah, I don't know. I respect the fuck out of Mr. Beast. I think he's maybe the best content creator of our time. I'm just gonna be straight up honest. I hate his content. Like I just the explosions. It opens up. This is what's gonna happen, and then the world explodes, and then his asshole explodes. I'm gonna create the biggest Lamborghini explosion of all time, and then graphics the Lamborghini's exploding. You're like, that drives me up. And again, I respect the fuck out of it. He's the GOAT, the absolute stone cold GOAT, right? For me, that's just not my that's just not what I want to spend my time consuming. I feel like my brain's melting out of my ears when I consume it. And so like I really believe the pendulum's gonna swing the other way. And like my videos will be straight up me sitting on like a park bench with my camera next to me. I'm just like talking into the camera on the park bench, and like that's it. And so I think just the pendulum's going the other way, and like I'm just gonna try to include as much of my personality into like that style keep it fun and keep it like personal, like on a park bench, but also keep it fun with personality. So I think that's a sweet spot that I'm going for. That I think the future's
Alex,
gonna
your
move towards.
videos, those park bench
Beast
videos have been
himself is moving
awesome.
away
Oh wait,
from the
can Penny not hear
screaming
me?
and crazy editing and going towards more slow storytelling and whatever. I think the meta is definitely going that way. Yeah, he was a kid making most of that content. He still is a kid. It's incredible to think that this guy is like 25 years old and he's accomplished as much as he had. But he's finally coming to like, bit of adulthood now and slow down. And I think his videos are doing better instead of averaging like 10 minutes. They're now 20 minutes.
Getting a little.
He's slowing things
Penny,
down.
You're
you're
rugging,
getting a
Penny.
little.
Yeah, Penny,
A little
you're rugging
robot-y.
hard.
Yeah, no, I was gonna just say that Alex, your videos have been pretty much on point with your personality, because some of the stuff that you do, it's it's like you're talking to a friend, just like you said, right? And I think those park bench videos without any kind of editing or explosions and stuff like that, it's perfect because you want people to listen to you and you have to develop your own style, right? So I think you should definitely stick to it. The only thing that I would add to it is like having like a one line caption on the bottom so people can follow along even if they don't want to listen to you. If they don't have the audio on, they can still at least like, like just keep watching it. I love having captions to like even if I don't want to listen, I can have that. But I think like that style that you're doing is absolutely perfect for you right now.
It's interesting too because Mr. Beast is looking for a different audience completely, and he does this balance between like explosive, like crazy, like what's the next big thing we can do? Drive this train off of the thing into a hole or whatever. But then he's like, one of his last videos was like, we're gonna build like a hundred wells or 1,000 wells in Africa with this money. And we're gonna give shit tons of money away. So he finds this like really crazy balance, but like your audience is quite a bit different. He's maybe not finding as much direct personal connection with people. Like you're spending time, and on X people are spending time interacting with their community on posts, right? I mean, at least people that are looking to create good relationships and then have people returning, subscribing for them and those type of things. So it's kind of like it is a different audience completely, and he does it based off of his personality. So it's like I think that people are drawn towards that, but I don't go back every single day and look at Mr. Beast's videos. Some people are, but I don't watch a lot of his content. I just know about who he is, right? But because also I'm on X, I'm seeing your content quite substantially, and I appreciate, even though we don't chat a lot because I don't talk a lot on X like in text. I see you commenting and actually talking to people and creating relationships, and it actually goes like a distance where people will stick around and follow you where you go, and then they'll actually absorb some of what you're putting across. And I think that goes for anybody really, is just creating actual good relationships where it can be a little bit difficult because we're in the digital space, but it's like being a good human even while you're in a digital space.
And Poppy, like to add to that, like there's always things you can glean off of any creator, and Mr. Beast has been really vocal about the things that work, the things that don't work. Like like Penny was saying, like people do care about content, long form content when it's meaningful, right? Like you can keep people engaged if you're having things blow up all the time, but he's even sick and tired of that. And one thing, boogers are okay, but don't talk about poop, because I heard an interview from him that it drops his views between 5 to 10%. So he doesn't talk about poop on his videos anymore.
Yeah, and
Hi
keep
Mona,
your.
good to see you here.
Oh, sorry. Hi, Mona. I wanted to say
Oh my
something
gosh,
really quick, but
I
go ahead.
I walked in and I hear poop and booger. Okay, carry on, carry on.
It was there especially for you. We were talking just because you showed up. I just wanted to quickly add that look, Mr. Beast, people are gonna watch him anyway. He knows that. Like he doesn't care about who's gonna watch him or not. His focus is to keep creating better videos and getting more new audience, right? So right now it really doesn't matter to him about like what to really do. His main focus is to get new audience. But I think when a creator is starting out, or especially like someone like Alex is starting to like create like a new avenue to his content, I think it's important to like develop your own style, because that's what, if you really look back onto what Mr. Beast did, he created his own style. The explosions, the loudness, and all of that stuff, that's his style, right? And people like him for that. We go back to watching Mr. Beast videos because it's Mr. Beast. Do I really go back to watch the explosions? No, I go back to watch it because it's Mr. Beast. And then the other one I think Poppy touched on was the Wells channel. It's I think it's because he's trying to promote his philanthropy channel right now, and I think that's why like that shift in content happened. But it really doesn't, again, like it really doesn't change his style. It's Mr. Beast regardless. So he really doesn't care with that. Yeah,
That's what actually that got me excited. That got me excited that he was actually taking his platform and going out and doing something amazing, but then still doing cool shit around it as well too. That's what was like, oh wow, I didn't realize this part of Mr. Beast. Well, I'm gonna have to stay in touch with this. Right. I'm not as stoked about explosions and all that crazy shit and him spending money on a bunch of stupid shit. It was more like, whoa, like look at this. He's going out and taking his platform and doing this. I thought he did that all the time, but maybe that's new.
No, he does. He has like 20 other channels. If you look at, he has Beast Philanthropy. He's been doing these videos, like creating, bringing electricity to villages, creating schools and things like that. You should find that channel and find that. But Kayla, sorry, I know you have your hand up.
No,
Hi.
no, it's okay. I've been thinking like just about what I'm saying because it's so valid to my point. But the truth is that Mr. Beast is falling off, and that's from an investor point of view because he can't transition to live video. His content just does not transition to lives. And what Alex is saying is true, whether we want it or not. The new tool is live stream. So when investors push a new tool, that's what they're doing. It's really not up to other people, even if you think it is. So that being said, like Mr. Beast has not been able to transition to live content because it's so staged. And even when it comes to paid ads, they just don't work with his content because you can see them, and the inauthentic vibe of that is just not hitting in the age of AI. And what's going to be good is like people like Alex just on live drinking a drink, being like, yes, this is a paid sponsorship. Here's my drink. I actually like it. I think that's the future, and Mr. Beast can't pull it off.
I have a hard time following that Beast is falling off, right? Like the guy's getting 200 million views for every video. His feastables are like
Okay.
sold out within days of whenever he puts them on
Wait,
shelves,
true,
and
true.
he's able to charge he's able to charge hundreds of thousands or millions of dollars for his ads, which he incorporates directly into his video instead of it being an ad of like, here, I'm going to show you a chocolate bar or whatever. He'll like launch a chocolate bar out of a cannon or something. It's hilarious.
Do
But
you
So
enjoy
I,
his
I,
content?
I don't
yeah,
think
falling off
Beast
isn't
is falling off
even though
anytime soon. Live is great, but that kind of produced, like no one on earth is getting 200 million live views. Like
but
it's
like
impossible.
falling off as in he's not authentic. Like falling off to me, but you're right, he does make money.
Maybe Kayla's actually shorting Mr. Beast and we're all going to be wrong. And then she makes billions of dollars from shorting him.
He's also
Here's the
actually
thing.
about to make a streaming. It's a streaming game show or something like that. And he's doing that with Amazon Prime, and it's coming out really soon.
Here's the thing with Mr. Beast is I'm not going to say he's falling off. I do think the pendulum is moving away from his type of content. But I don't feel like I know him, right? Like I watch because I get insane amounts of dopamine hits from watching fireballs being thrown at piles of cars and then trains running into it and then dynamite blows it all up, right? That gives you a nice dopamine hit, and then the captions are in a funny font that explode in your face and go all over the screen. And then the camera zooms in on someone's face who's going, ah! Right? Like that's while you watch the video. But like I don't feel like I know Mr. Beast at all on like a personal level. And so if he evolves and does something different outside these insane dopamine rushes of explosions and graphics and captions and fire, like are people really going to follow that? I don't know. My goal, I don't know if it's the right goal or the wrong goal, is to build as close to personal relationships as I can with my audience and viewers. I want to make it so that when I turn on a live stream, even if I'm doing nothing but just sitting there and chatting, that people want to tune in and like hang out and talk. If Mr. Beast does like a live stream where he just sits there and chats, I don't know how interesting that's going to be. If there's no explosions and Lamborghinis on fire and he's not giving $100,000 away to a random person, like are people going to watch? I don't know. And I think that building the relationship thing is a lot more sustainable. I think it allows you to do a lot more creative things. And if I want to, one of my life goals is to write a book. I want to write a book. And I'm sure if Mr. Beast wrote a book, it would do well. But it's just, I don't know if there'll be a global interest in that. I want to do many different things. I want to build
Definitely,
software, you
definitely
know?
people want the Alex Finn book more than the Mr. Beast book, for sure.
I agree with that. I think that for sure. So,
As
um,
long as there's a picture section of some crazy stuff from your life, then I think people will buy it.
I want it to be an NFT though, monkey.
And I'm not saying I'm Mr. Beast by any means, but my goal is I want to get to the Mr. Beast size, but also have like personal relationships. I don't want the relationship built on exploding graphics and like dopamine hits, you know?
Are you going to have 200 million personal relationships, Alex?
Yeah, I think you can. I think you can when you do things like live. Yeah, I mean, Mr. Beast doesn't have personal relationships with everyone. Dr. Disrespect is you create content and people feel connected to you, and I want to feel like people feel connected to the content I'm creating. Not they're sitting there to see, oh my, is he gonna explode a Lamborghini now? You know.
I still haven't watched any Dr. Disrespect after last time you mentioned him. I'm gonna have to look that guy up.
I'll send you the videos that turned me on to him. He's absolutely hilarious. But it's a specific type of humor. I'm not sure you're going to be into this type of humor. It's kind of like internet troll humor, but he's fucking hilarious.
I trust your humor, Alex, so
All
I'm
right,
sure I'll
good.
like it.
Do you think, Alex, that we're past the point of these new social medias popping up and really grabbing ground? Are we kind of like established now with, YouTube, Twitter, Facebook, Instagram,
No,
really
we've
being
been
like,
saying that for 20 years. There'll always be something new. People said that when Instagram came out, oh, Instagram's it. We don't need anything else. Then TikTok came out. Now TikTok is king. Um, I think I think YouTube might be the only one that's totally bulletproof as a platform. I don't think YouTube's going to ever go away. I think it'll always be the internet video uh, platform. I think everything else is recyclable. I don't know. We'll see. But there'll always be new things. You know, I think VR and AR will change everything, and you'll have like social media like custom built for VR and AR, and we can't even imagine what that'd be like at the moment. Thank you. And we can't even imagine what that would be like at the moment. So that's going to come. So no, as technology evolves, right? Like internet video, when Facebook came out, 20 years ago wasn't a thing. The technology wasn't there to quickly
that is
consume
going to be
internet video.
that is gonna be pretty wild when it's, I guess, like VR and it's basically like I don't know, like League of Legends or something brought into real life, and everybody's just in the town square trying to like sell shit in the middle. And yeah.
OnlyFans is for sure gonna push that technology
Oh
first.
no, they're gonna ruin it. It's gonna be. I'm just gonna try to walk around trying to get like my daily stock news, and it's just gonna be like my pussy and bio, but it's just floating in virtual reality.
This might sound crazy, but Fortnite might be the next big social media in AR VR. I wouldn't be surprised if Fortnite's one of the first platforms to take advantage of AR and VR, make it into a social platform, and that becomes bigger than TikTok and Facebook and YouTube. I wouldn't be shocked if something like that happens at all.
Interesting. What's up, Mona?
What's up, guys? Sorry I'm late to the party, but actually, Alex is absolutely right. I think it's going to be Disney plus Epic Game partnership. That's going to be the lower barrier to entry. But since we only have 5 minutes left, I don't know what you guys covered on deep fakes. You guys know, for those of you who know me, that's the area I talk about a lot. Right before we leave, I don't know if you guys know about this, but the OpenAI they came out with synthetic voices. Did we cover that? Did you guys cover that at all? Synthetic voices by OpenAI?
Not really.
Mona, we had you the whole time here on Spaces. It was just an AI version of you, didn't you know?
Why did you just blew my cover, bro? Thanks, bro. Thank you. But you know what? You're going to pay for that. Let me just cover this for you guys real quick. So OpenAI just came out with synthetic voices. This is similar to what you know from 11 Labs, except it's absolutely top notch, like high quality, but they're not going to release it because they don't trust that it's going to, they think it's going to go in the wrong hands. I want to play a clip for you, if you don't mind here, just so you can see how scary this is. This is a reference audio right here. Give me 1 second.
Friendship is a universal treasure. It brings joy, support, and laughter into our lives, no matter where we are in the world.
And here is the synthetic version.
La amistad es un tesoro universal. Aporta alegría, apoyo y risas a nuestras vidas sin importar dónde estemos en el mundo.
It will translate in Mandarin, German, French, Japanese. If you want to hear regular one more time, here's a reference audio.
Force is a push or pull that can make an object move, stop,
or change direction.
And here's a generated audio.
Some of the most amazing habitats on Earth are found in the rainforest. A rainforest is a place.
Just wanted to play that for you guys. They're not going to release this.
They already have something like this, though, guys. Like I've actually seen people using AI translated voices already, like from different languages, and they're perfectly like the intonation and everything are exactly like this. And I mean, these videos have been around for like since the middle of last year. People are actually converting their videos into different languages, and not only are they converting the video or the audio into different languages, the video actually converts and actually looks like they're speaking that language as well. So it's been out. Not to burst your bubble, Metamoto. It's
No,
just
it
been out,
has
and I've
been.
seen it. Yeah.
Yeah.
The big difference I heard here, Mona, is that the Spanish one you just played kind of had a gringo accent. So it's like that person was really speaking. Like that was the biggest takeaway from that audio.
I mean, 11 Labs has been doing this, but what their experts are saying is this is very, very precise with the inflections, the accents, even sometimes bringing emotions into the delivery. It's scary.
Yeah, and one of the things which I think it's going to actually be starting to be used for, which actually will roll us into our next space here in a minute, is promotion. I don't know if people have seen the deep fakes of Elon and others like promoting random stuff, Joe Rogan, but those things are going to get really, really, really good over the next year, and it's going to be impossible to actually tell the difference if we're being honest. So, Kayla, I'll give you the last hand. I'll give our co-hosts a couple final comments. I think most of our speakers are staying on for this next one, and then we'll roll into our next space. Go for it, Kayla.
Yeah, so it's really crazy because I'm glad Metamora mentioned it because it happened like a week ago. It is really new, but I was shocked that last week nobody really mentioned it. And we've had this technology forever. What needs to happen is that humans need to grow an eye for understanding the difference between that, and it's accelerating so fast that it's going to be tough. So right now with the Joe Rogan videos, I can tell that's AI. You can tell it's AI. The cadence is off. The cadence is what's crazy about these new things that I've seen with the new synthetic voices. There is no, because when you hear Joe Rogan talk, it's like, and then I went and it was wild. But this has no cadence issues. That's the one big differentiating factor. And my only concern about that is not us, because I'm not going to listen to an audio and buy something, but my grandmother would. My grandma's not alive, but if she was, she definitely would.
It's a great point. Penny, you got any other thoughts on the convo we've had here for the past hour?
I think these voices are pretty wild. I'm surprised actually that OpenAI is not releasing it more publicly. I understand that it's going to get abused, but the thing is, if it's not them, it's someone else that's going to release it sooner rather than later. And I would personally be trying to get market share if I could. Other than that, I'm working on getting Sahid to a Starship launch to Texas from Nigeria. My pinned post has that video. He went and got his passport recently. So if that sounds like an interesting story, follow along on my timeline.
Absolutely. And a reminder, everybody, to be following the speakers up here. Subscribe to those that have the subscription button on. Alex, I believe you have a sub-only space coming up as well. You got any other thoughts on the past hour?
No, it was fun as always. Keep making content that's authentic to you. The worst thing you do is just fucking copy other people. So keep doing that. And yeah, I'm gonna do a subscriber only space soon. So subscribe if you want that. And I don't know. Have a good day, I guess. And keep it fucking real. I don't know.
There we go. Absolutely. Always a good time with the X Spaces crew. I got a couple new co-hosts coming up on stage, but appreciate those that have been on here. And I believe most of our speakers are sticking around for this next topic, which I've been looking forward to this week because the whole we're going to be talking about the meme coin economy. And this thing has been on a bit of a wave, and it kind of got disrupted this weekend a little bit in my eyes when Solana went down. And I was like, all right, what am I doing here? But I'm still looking on my timeline, and we've got Ansem or Ansel or whatever the dude's name is. Just everybody's dropping their flexes nowadays and just staying interesting with everything. So wanted to bring up a couple of my friends over from team over at Raincoin. We've had them on before on some of our spaces for just a quick chat here to talk about. First off, they have some updates, perhaps some things that are going on by them. But I wanted to hear from them kind of on the bigger picture here first. We got Calvin behind the account. Calvin, you're a very adept trader. I think that you've been in the crypto space for a while. You've made a lot of money here. I want to hear from you. What stage of this are we in now? We had this rush, but there still seems to be tons of liquidity. Things are launching, Beanie's tweeting, things are pumping every day, like $50 million going in left and right. You have, Vitalik butter chicken coin, I think I saw yesterday. People are still very creative with this. I'm just curious to get your thoughts high level.
Yeah, well, I mean, historically, we've seen what usually happens is that there's a little bit of a push and pull between Bitcoin and the rest of the markets, and this also happened with Ethereum in the last cycle. And what happens is, for some reason, people like to stay in the layer ones throughout the majority of the move up, and then when it tops out, like let's say Ethereum starts stalling, then people start flipping their Ethereum into alts and whatnot. But this was a lot. This trend was a lot stronger back in the day because there weren't as many stablecoin pairs. Almost everything trades against stable coins now, but this is actually fairly recent. In 3 to 5 to 10 years ago, everything traded versus Bitcoin and everything traded versus Ethereum. And so when people sold, they were going back to Ethereum, and when they were just slipping back between the two. And so now it's a little different. When these meme coins get popping, what happens is people they have this kind of a psychological kind of I don't know if you call it just a behavior. I'll just call it a behavior where people feel when their bags are going up, they feel rich, and then they start looking around, and then they start spending money kind of more frivolously. And so I think this time around, as Bitcoin and Ethereum really get going, it's actually going to fuel the meme coin economy rather than take a back seat and wait around until the top happens and then do the flip like we've seen in the past, because there's more stable coins, and people will start throwing things around once they're starting to feel wealthy number wise. So I hope that makes sense.
Yeah, I think that's good high level analysis. Death Notary, you want to bounce off that? I think that they're able to speak. Told me they were in a meeting, but then they were out of the meeting. Okay, no worries if not. Action, I want to hear it from your end. Still actively trading right now? Have you taken a pause? What do you think of everything that we've been seeing in this ecosystem? I think you've been on some of my spaces with Braincoin too.
I'll be honest with you, man. Like, I try not to do two things at once. I'm either trading or I'm creating content or I'm brokering deals. It gets way too wild for me to do all the things at the same time. Especially meme coins, because if you don't watch it, you lose money, right? Like, I actually have a few of them that I'm not gonna sell. Like, I love what they're building, so I'm not gonna give up on it. So I'm just letting it ride. Like, I made some money from it, and I just let the rest ride. Like, I'm hoping that they do something with it. So it just becomes very hard for you to try to multitask, because it is almost like a full-time job if you're trying to trade. Is it profitable? Yeah, absolutely. There's a ton of money to be made, but you can't stretch yourself out too thin. Otherwise, you get in trouble. Toki knows what's up. He's like, hey, what's the contract? How can I sell this? I've gotten that message. Was it last week or the week before? You're welcome. He made money.
There we go. Death Notary, what's up?
Hey, what's up? Sorry, I had the dogs barking. Just to piggyback off Calvin's, I do think one thing that
On the back of an L1 blockchain. If the L1 starts moving, everything else on that blockchain will move. And this is happening especially now that everyone, like I say, now that everything's being priced in USDT, when they see, people aren't watching, before it was like everything was flat. Like as Ethereum went up versus USDT, nobody noticed it. But now, when Ethereum starts moving against USDT, all of the L2s that are on that blockchain, they're gonna see a lot of pumping and a lot of movement. So yeah, that's really a good point.
I want to pull in Lady Trader, who we've also got up here on stage. Get some of your quick thoughts on just everything that's been happening here in the world of crypto, these meme coins. I think you've been on one of my spaces with Raincoin too, if you have any thoughts there. Good to have you on.
Hey, thank you so much. So there's so much going on right now in the crypto world. I think the biggest thing that I'm seeing right now, which is really interesting in the meme coin world, is that some of the big launch pads are actually launching some meme coins, which is very, very unusual. We didn't really see that back in 2021, where you would have like a traditional IDO on a major launch pad, where you would see like a meme coin that's backed by, a major launch pad and some major VCs. That usually does not really happen, but I'm seeing that happening right now. Bluezilla, which is a pretty major ecosystem for Launchpad, they are actually coming up with a cat-themed meme coin, which is also going to be on Ape Terminal, which is another IDO platform that's doing really, really well right now. So that's happening. And then I know just through some of the connections that I have with some of the Launchpads, they are kind of like in stealth mode, creating some meme coins as well. Not like they obviously have separate teams, but they are supporting those teams. And I'm like, whoa, are these meme coins going to be on, now traditional launch pads? Is this actually going to be, going to become a part of the, the crypto, like main crypto ecosystem, where we won't just have those mainstream meme coins, but newer ones coming out with some major backing, which is very, very interesting to me. And then I think one thing that I'm really looking forward to this bull run, which I think I would say probably 95% sure. There's a 5% chance it will not happen. But I'm really looking forward to seeing an official meme coin ETF this bull run, right? To kind of give people another digital asset that is allowing you to diversify through mainstream means, and not necessarily for, basically if you are someone like who doesn't really have any exposure to crypto at all, and you don't know how crypto works, and you don't know how to create a MetaMask, you don't know Uniswap, PancakeSwap, all of these things, but then having an asset like that would give you exposure to that regardless of your your level of knowledge about it, right? Which I think that would be a huge deal for meme coins if that was to happen.
Yeah, Kayla?
Yeah, so I've been listening to the Raincoin spaces for a while, and what I love the most is where you guys are positioned as far as your community goes, because there's community and then there's an ecosystem, and most people don't get past community. But after community comes an ecosystem, and you guys, that's how you are surviving, which is very interesting, because a lot of these use cases, they rely on the community, but you guys rely on investors to spread this movement. So you have this ecosystem, which a lot of people don't have. How do you plan on leveraging that ecosystem, if you do? Because I know it's kind of an interesting conversation, because there's quote unquote no team, but at the same time, you've got an epic ecosystem that you can leverage. People can grow, it can bring liquidity. So have you guys looked more like towards grants, or just like the step after an awesome ecosystem?
Yeah, super, super awesome question. Right. So you're right. Most of these meme coins, they thrive completely on community. They almost, the community is everything. And then once the music stops, everyone really is kind of wondering what's justifying holding or whatever they're doing. And here, at Raincoin, where we already have a lot of these built-in incentives. So if, you'll have to check out our website and kind of figure out what Raincoin is if you're a little bit new. But what Kayla's alluding to is that we have created a lot of utility on the basis of like creating a store of value and something that has staying power and long-term credentials. And so right now, I've been doing a lot of work on awareness, but since we last spoke, probably a few weeks ago or whatever, I've been really working hard on figuring out how to put together on ramps and rails for DCA, because what makes Raincoin special is that it's scarce and it rewards you, and so it has a lot of these store value characteristics that you'd find in Bitcoin or in some of these other major coins. But it also has some of the more modern technology and some interesting staking prospects and things. And so I've been talking to certain influencers. I've been going down the road, talking to RIAs. I've been talking to exchanges to see if there's a way that we can create an automated method for people to, have $20 a month DCA'd into Rain on a monthly basis. And if we can create a foundation where the majority of our holders are DCAing into Rain over time, that's kind of the holy grail of kind of arriving in the crypto world, because that's what keeps Bitcoin afloat. People are always buying, whether it's a bear market or not, because they're connected through Coinbase or something where they have this steady buying base no matter what the market's doing. And that's my target. Like that's the strategy at this point. And so I'm really working hard to see if there's a way to do that, because I don't know about you, but if I was like an employee or something, and I had the option to put $5 per paycheck into a scarce asset that's earning interest on its own and has the fundamentals and all the things that have been built into Rain, it would be pretty cool. I would definitely be signing up for something like that. So
Yeah.
that's what we're
Well,
working on.
so one of my questions now that I have more clear idea of that is, if I wanted to, if I held Raincoin, could I tap into your community of investors, which you guys have leveraged really well?
As in, like in
Just
what way?
like, if I hold Raincoin, is there a way for me to talk to people who have invested in Raincoin, or kind of like connect, just because you have a strong community, but ecosystem, which you guys have now as well, that's what that is. It's like everyone's working together. So I'm curious, can I tap in kind of, go to, where can I find them?
Yeah. So if you go to our Telegram or mostly Telegram and Discord, there are most of the serious investors are there. And if you have ideas or business applications or anything where there's a chance to kind of collaborate with Rain in some way, there's a lot of eyes there that are interested in engaging. But yeah, it's pretty interesting. We've been slowly growing organically. I've been doing a little less of the kind of shill-based awareness and talking to more serious folks. And I've been really enjoying the conversations and the ideas and things that are coming out. So should be very interesting upcoming 6 months. I think there's a lot of growth that's going to happen here soon.
I have a question real quick for Cade, who actually joined us before I go over to Tokyo. I think it probably is a question for Raincoin. Cade, me and you definitely have been playing around in this meme coin world. What do you think that you have learned over the last couple of months as you've just played around with different stuff in regards to how to do due diligence, what's interesting, when to get in, when to get out, stuff like that?
To be honest, I had to be a lot more tapped in, like a lot more tapped in to not lose all my money. I lost my money like every single time trading on Solana, and it's just because I'm not tapped in on Solana the way I should be. And I literally it was just like terribly embarrassing. And then I'm focused on near, and I just like kept winning, not every time, but it was a lot easier because I was tapped in. And I watched a video from Alex Becker a few months ago, and he was like, if you go wide and you try and hit everything across every chain, you're probably going to miss every single one, but you're just going to tell yourself this must be the way. And then you'll just always stay broke. And I was like, dang, bro, he's just like diagnosing me, and he's like spot on, and I hate it. And so I was like, okay. He's like, just go deep, pick 1 or 2 areas, and just like learn everything about that, and then you might actually hit a double for once in your life. And I was like, okay, I'm down, and it works.
Yeah, that's a good point. Yeah, Toki, go for it.
Thank you for having me up, Kate. I definitely appreciate where you're coming from. Definitely can't spread yourself too thin across all the different blockchains. it's just so hard to hit them on the head whenever you're looking at so many different things. But I did actually have a question for Raincoin. And I'm not sure if this is even a plausibility, but you were talking about how at the end of the day, if you're just able to spend like $5 really quick and put it into one of your favorite coins, have you guys ever thought about something almost like the Acorn investing method, where let's say you're spending like $6 and so many odd cents, but you can at the end of your transaction up it to $10 and the rest of it goes into Raincoin or something like that?
Yeah, absolutely. In fact, we talked about the applications of trying to do that. The only thing that's stopping us is a USD on ramp. And so I've reached out to 3 exchanges that are USD friendly. And one of the exchanges we are, so the community doesn't know this yet, so I might as well just announce it here. But we are listing on a new exchange in the next week or two. And they do allow US users to KYC and everything else. So as we build these USD on ramps, these types of applications will be much easier, because once we have some rails and a way to do these types of connections, then those type of applications can come next. But yeah, it's fairly complicated. Doing something like that, like a Bitcoins versus an Acorns or something, where you round up and that dust goes towards buying crypto. If we could figure that out, it would just absolutely be phenomenal.
That actually is really cool to hear. If anything, that makes me more bullish on what these coins can do. Thank you, man.
Yeah. I actually kind of want to make one more comment before somebody else had their question. But it was kind of how to trade these meme coins. Meme coins, because there's not a lot of substance normally, you really are just trading the L1. A meme coin is almost a leveraged play on the L1. So if Solana is lagging, those meme coins are going to die. You got to be out if it's pulling back. But if Solana starts running again, you better believe that your gains will be multiplied when it gets running up again. So on Raincoin, we've built on Polygon, and Polygon's pulled back a lot, and our price has fluctuated, but it hasn't fully gone off a cliff. And I think we owe all of that to the fundamentals of what we've built. And so I'm expecting once Bitcoin hits its new all-time high and gets running again, almost everything will get hot again, and it'll be dartboard season. You can buy anything and it'll go. And I think that's where Matic will finally get its break, and then the stability that we've established in our market now, we'll start seeing some pretty good gains again, which will be cool.
See who else we got up here. Poppy, you deal with a lot of tokens, I would say both meme coins as well as some of the ones that are established companies and businesses and stuff like that. What's your thoughts on how things have developed over the last couple of months? Because you really see a lot of that liquidity behind the scenes as well.
Dude, it was actually so frightening that I couldn't, it took me like hours to convert coins on Solana over to stable coins. I was like, oh my God, like I have liquidity here. And like all of a sudden it's like, I can't even move it. I can't even protect it and stable it. And so that was like a big, reminder of how fragile this whole space is and how exploratory it is and how brand new it is. So that was kind of like, because it's been like euphoric, gains on Solana with these meme coins. And I've seen, some of my friends become millionaires, freshly minted from trading meme coins on Solana over the past 3 months, basically. And it's crazy to see. And then, okay, so, chasing narratives. So for example, seeing everything, switch over for meme coins, the meme coin narrative over to base, because what Calvin said was phenomenal in regards to trading the layer one, right? So base is getting a lot of attention. And so a lot of that liquidity started to pump over there. And I saw some of the channels that I follow that are pretty strong, like meme coin maxis, putting out calls and running projects and really like getting amazing entries. Like, my friend Moonpie, she got into like, Trump token, like MAGA at like 40K. And she, has a 7,000 or 7,500 X on MAGA. She's got multiple 5,000 X's from some of these tokens. So she's actively looking for 100 to 1,000 X's and entries on these type of tokens. And so when I saw her sentiment start to switch, because I don't have enough time, like Action said earlier, I don't have enough time to be in the meme space because it's so delicate, and it's quite like, it's so risky. Like crypto in itself is already risky, but meme coins are like the farthest spectrum of risk when it comes to the whole space. Like if Bitcoin is the least risky, meme coins are the most risky, right? And so, watching as narrative flows, where the attention goes, liquidity flows, right? Where liquidity flows, attention goes, vice versa, right? So the thing is like, I wanted to make the comment on specializing yourself. So I did a little bit of meme coin stuff, and actually it's so funny. The only meme coin that I really actually did very good on was a random, person jumping into the wolf space. Like, remember 4 weeks ago when Buddy, like Duckface or whatever his name is, jumped in, Big Duck or something, and was just like, oh, check out this meme coin. You guys don't know about it. And it was Bohm. And it was Bohm on day 2. And it went up to like 1.5 billion. But the point is, the only reason I did good on that is because I got in like day 1, day 2. And I mostly hold coins. So even though it 15, 20x and now is down to a 7 or 8x, I still watch coins go up and watch coins go down with meme coins because it happens in like a 3-hour period sometimes, or a 6-hour period, right? So if you actually want to do good on meme coins, you really have to get really good at doing meme coins. You have to get really specialized in something because, yeah, you can make those 100,000 X's 100%. And that's probably the place to do it if you're looking to do that specifically, because you can. But it's also incredibly risky and super dangerous. That's why a specialist in meme coin is someone that is literally the most degenerate human being in the space, that is going to be on their computer almost 24/7 and setting time clocks and getting all their applications in place. They know they're using like Photon, they're using sniper bots. They're finding the alpha channels that are good quality people that know how to make good calls, and they're making sure that they have multiple different wallets. They're making sure that they have all of their systems set up in place so that they can pull the trigger when that next one comes, that they're like, okay, this has a good narrative because Trump coin or Tramp coin or whatever the fuck did good on Solana, and now the narrative is switching over to base, and people are starting to launch that meme coin there. So it's like, okay, got to be the first one in, got to be within the first day or two. Boom, pull the trigger, and now I'm watching it. I'm making sure, okay, I have a plan where I'm at least going to take gains on 10 to 15 to 20x on this coin, right, and then leave the rest. Like, I've seen my friend, and I asked her, I was like, can you help me with the meme coin space? And then when she started to get into it, I was like, there's no way I can devote 75% of my time to this. I would have to become a complete specialist in that completely, because most meme coins are not like Rain Coin. They're not utility rich, right? I think that meme coins are important in their sense of culture, right? They like, if you go ahead and say you fade one part of a culture, one part of an industry, when you see people like Mero Nafal or Rand Nooners or other people that are some of the kind of like the fathers of the space that have such big presence in the space, having meme coin shows 3 times a week and covering what's happening in the space, right? In more of a neutral way, right? There's opportunity there, but no matter what, if you want to be successful in something, you got to be fucking good at it, and you have to be dedicated to it, right? So it's a different type of way of doing it. And so for me, that I decided pretty quickly that wasn't my dedication, right? That I couldn't spend that amount of time doing it. But if you do want to, if you really are interested, then you better be ready to give up the next 6 months to 12 months of your life, getting really good at something and really focusing very hard. Because yeah, you can make millions, but also you have to be prepared to lose a lot of money as well too. where you will get massive gains, but you have to know that it's possible to take $100 or $1,000 and get yourself back in place, right? You have to have a plan. It's all the same fundamentals for trading, but it's a lot more like a lot more degenerate. Like, and when we talk about degenerate, we're talking about like you're doing crazy ass fucking shit and you're on your computer all the time, making sure that you're taking care of things. You're tapped into all of the narrative things because literally the meme coin space is literally a wave of speculation and energy and culture that people are communities are following from place to place with their attention. And that with that attention comes liquidity. And that's literally what's happening. So to pretend that you can get into a meme coin and then step away from your computer for 6 hours and it's not already going to do its thing, you're going to lose your money, right? So just to be real with what my experience is and what my other friends who've succeeded at it are doing, 99% of meme coins are not utility based. They don't have founders that are going to stick it out with the community for maybe years on end, like Raincoin, like Polydoge on Polygon, like others. 99% of them are not like that. So if you're trying to make it in this, you have to realize that the term, like, and I don't use this very often, but it goes around a lot in the meme coin space and in the degen culture. People are calling each other degens and retards. It's a funny term that people are like, yeah, I'm a retard. It's like, ha ha ha, right? You know, you have to be prepared for what's going to happen because it's literally the fringe of a very speculatory, very what's it called? Risky space.
Before I go over to Kate, I want to get a lot of thoughts here shared. Go over to Calvin real quick and maybe talk about your approach to having to have that dedication to this.
Well, yeah, I mean, there's a lot of gems in your statement, Poppy. Well said. The funniest thing is that most people think that if they quit their job and they sat in front of their computer 24 hours a day, that they'd be better off. What usually happens is because trading is so emotional, people end up making you get faked out of your positions so easily, especially if you're dealing with really volatile assets. It's very, very, very hard. What Poppy, I think, believes, what I think he said is that you have to be so dedicated to educating yourself on what all these projects are, because there's a million projects that come out. And you know who makes the money? It's the one that's first. And so you have to be popular, which means if you're an influencer, you're going to have projects coming to you. You get first dibs on all of this, and then it goes out and you make money. So being popular helps. The other thing is that you just have to get lucky sometimes. You just have to take a risk, but there is a huge risk. When, for example, when base started getting hot, there was a thing on the news where there was a guy that was, let's see, he was essentially milking there was an automated buy on new base projects. So like somebody had set up a bot that if a new base meme coin or any kind of project showed up on the base blockchain, they were putting a couple $100 in everything. And so this guy created an automated bot that just created new base tokens, and they were just it was just to steal people. It was just to steal the money off of this thing. So he was creating like 15 or 20 new base coins every day and making $100 or $200 or $300 from the people that were trying to be first. And so there's a lot of insanity out there. And really, you can do it one of two ways. I mean, you can devote your entire life to learning every little thing, but honestly, by the time you hear about it, you're probably going to have missed out on the majority of the upside. Or you can kind of dedicate yourself to finding projects with staying power, and that's what Raincoin tries to be.
And speaking of Raincoin, I did also pin to the top of the space the contract and where you can find it so you don't get swept up in any scams or anything like that. That is the proper one to go through right there at the top. What's up, Cade?
Hey, so this is kind of well, I guess it's a little bit to do with what Poppy had said a second ago, but one thing I also learned from the trading the meme coins is you can make money on smaller chains with lesser known people. Like one of the things I saw with Wolf Web 3 especially, Cool Crypto. He's like a I mean he's smaller in terms of like the grand spectrum of like Web3 and crypto influencer people. He's got like 14 or 15,000 followers. He's relatively deep in his niche of like airdrops. He's got and dude, he's making like so much money. And I was like, wow, wait a second. You don't have to be following these like whoever influencers, like insert whoever, who are just posting all their gains all the time. At least for me, it felt like if you're not following whatever they're following or entering the cabals that they're in, you're just missing out on all the money. They have all the market share. But in reality, there's so many sectors within crypto, and so many of them are actually, I mean, most of them are losing money, but some of them are making like insane money. And I remember specifically a couple years ago, my friend was trading on the Elrond blockchain, and I was like, "Bro, who even is What even is that?" And he's like, "Dude, I made like 6 figures trading this thing." And I was like, "What are you talking about?" And he's like, "Yeah, there's this liquidity pool thing, and this that, and the other." And I was like, "Dude, I don't think has anyone ever heard of this chain?" He was like, "I don't know." And I was like, "Okay, so." That was something that was interesting to me because I do a lot of stuff on Near. It's a lot smaller than like a Solana right now in terms of liquidity and stuff. So a lot of it has to do with like market cap and getting in early on something. And so I've noticed on the meme coins, you're absolutely right. Like it's so emotional. I'm just glad that I've been beaten down and I have no emotions left and I have a hard stone. And and man, yeah, it's insane because sometimes I will either lose all of the money I put in or I'll 5x within like 13 minutes. I was in Korea doing ETH Soul covering the event, and I had bought into a meme coin at lunch, and by by like the end of lunch, I was up 5x, and I sold out, and then but the exact same thing had happened, the day before where I lost all my money. But it's the craze of meme land, and you can. But the thing is, you can risk a lot less liquidity, so that's kind of why I like it because I'm bullish on a certain blockchain, like Calvin was saying, I'm bullish on a certain chain. So let me dedicate a bunch of time and energy to what are the brands that are kind of building on that chain, who's got the market share. If it's a smaller chain, it's actually easier. Something like Solana, there's so many coins launching at once. Half of them are like these racist, out of pocket coins I can't even believe that people are buying into. I have no idea even what to think about that, to be honest. But yeah, I would love to know if anyone has thoughts on that part of it, because man, those coins they're crazy. There's a new coin every 6 seconds. One story breaks and 19 coins drop, and like half of them do well.
Actually, it's actually crazy because like I can't. Okay, so to comment what she said, and also back to Calvin as well too. Like dedication, I think, is the key in specializing and figuring out how something works, and then fine tuning that. And I know that a lot of people are be like, oh, you're talking about meme coins, but it's just like, yeah, you got to even be even more specialized and be even more on top of things if you're trying to like play in a space where you can lose it all or make 100 or 1,000x, right? So you got to be a little nuts, but you got to be like the best at it, right? But I think a lot of the time the way that this world works is like whoever has the most access a lot of the time gets the pie, right? And you don't necessarily like, okay, you could talk about access like, okay, Mario Nafal does a meme coin show, the Mario Roundtable or whatever, Monday, Wednesday, Fridays, and they they pump meme coins. Like they have a meme coin or two on each show. Sometimes they don't. And they like, I think meme coins are paying like 50 to 100K to be on these shows, but they pump them, they giga pump them like 300, 400X in the show. Right. And it's like the guys that have access to knowing about that token before the show starts, right? Before the show becomes live, right? So if you can somehow figure out, it doesn't necessarily have to be the most like cabal access, but if you can find good people, like I keep bringing up my friend Moonpie because she's an incredible human being and she's the most degenerate like meme coin trader and she's dope. She's got like 30,000 people. She doesn't have a massive following, right? But she has a Telegram group that is super her community. It's her fucking family. There's like 3,000 or 4,000 people there, and they follow her everywhere she goes, right? And they've been through the flames and the fucking everything for the past couple of years, right? So she's got it finely tuned in a way where she has access, and through her access, she funnels that access to her community, right? Because in the world where people that have capital or have access are going to get the best deals, and then the rest of retail is going to come in, you can do good for yourself if you are able to, find yourself into circles, and you can make connections and build networks and relationships and find people that are doing things correctly, and you can leverage that, even if it is on small chains. If you specialize on Near or Elron or, whatever, if you specialize in certain places and you do the work to find the people and connect with the people that already have the networks, and you can add value, whether it's with dollars or whether that's with skill set or whatever. Because like I'm an example with what we're doing, not in the meme coin space, but we're literally leveraging access from KOLs, investors, VCs, and giving our community opportunity for early stage entries into token deals, right? And anybody that connects with me or connects with our crew, they get access because they're nurturing the relationship, they're showing up or whatever. So I think the specialization and the dedication is super, super important in anything that you do. The consistency, like Calvin said, you don't need to be on your computer 24/7, but with meme coins, you're going to have to stick around and make sure if you put an entry in, it might moon in 2 hours from now, or it might moon in 6 hours from now. And if you can pop off 15 X's or 10 X's on $100 or $500 or $1,000 or $2,000, then if you can consistently do that, then that's okay, right? If you know that you're going to put in $500 maximum and you're losing 500s, but you're making 10 X's on 500s, then yeah, you can lose some, but you're not going into everything, right? So it's so funny to talk about this, but it's like the name of the space is the meme coin economy, right? And this is a big part of it. Raincoin is a very different story to what we're talking about, because they have a founder that is very strong and is going to stick around, right? Isn't just in it for the money, is in it for creating culture, creating community, and doing something amazing. He's a self-made man that doesn't need to do this, but is doing this because he loves it, that he's enjoying it. Right? These are major, major factors that aren't very existent in the meme coin space, and sometimes can be hard to find in any space where you have projects that launch that are NFT projects. People don't have money, but they have to source the money to make the project work. That's not the case in this case, right? When you can find founders that do good for themselves and can actually take care of things without speculating, then that's a massive thing. So this is a very different story. So I'm saying that because the meme coin culture is cool, but also this is a special instance of something that's really, really good to dig into.
Dang, thanks for the kind words, and you're spot on. In fact, I didn't I hadn't mentioned this because the last time we were on this Wolf space, one of the questions was, are there any touch points that are necessary from the team? So yeah, I mean, me and Adam, we created this thing, but what we've done is we've worked as hard as humanly possible to make this touchless, like that we can that we have no interaction with it. So we wanted to build something that just survived on its own. And since we last talked, the thunderstorm event that happens every night at midnight, where everybody gets an airdrop at midnight, that the ownership has been moved to a chain link relay. So the entire project is 100% decentralized now. So the thunderstorm event is now kicked off by Chainlink. It's absolutely unbelievable. So Raincoin is 100% on its own. It functions on its own. The founders, even though we're here and we're supporting and we're working on awareness and building and things like that, the protocol itself is exactly like Bitcoin. That the founder isn't necessary. It runs by itself. So it's a different animal. So I was just so excited about that when we finally did that, and that was only like 3 weeks ago or something. So huge change of events. I don't even know if there's another coin out there besides Bitcoin that is touch free, that just runs itself with no development team. Even Bitcoin has a development team, but I'm just saying, like, this thing is fully built, self operational, self incentivized. It's unbelievable.
Yeah, you guys have done a great job with outlining that. And that's why I thought this could be a fun one, because listen, there's only so many companies I want kind of leading a meme coin space with me, but I like the way that you guys have approached it. And I think a lot of people, we had like over 120 new holders come in from one of our spaces to check out Raincoin, pieces like that. I think, I see a lot of people that I follow following you guys as well now on here. So there's a lot of interest across the board. And I do encourage people to click into that account and check it out. I did see a couple more hands go up while you were talking as well. Kayla, you want to go first?
Yeah, so what Poppy said was exactly what led up to my original question. I think the meme coin scene is so intimidating compared to when I started to trade meme coins in 2020, 21. It's so much more intimidating now that the only way I would get in to a community for meme coin trading is if I knew the Raincoin team and I knew that they weren't here for, nefarious reasons. Because honestly, people can say they're not and they still are all the time. And it can be years and months, and very credible people can say that they're good. And we've seen this with huge platforms. Investors have the issue. So that all said, I'm not going to trade meme coins this bull run, even though I'd love to, because I don't have what Poppy's talking about. And I just think Raincoin is very well positioned for people like me who want to get into a Telegram right now, but I'm scared, to be honest. And here I am from 2020, 21, a little bit intimidated by these, high frequency trading algorithms and what we've got going on now with the bots front running things. I think the only way to get into trading meme coins is through a community like Raincoin. And so, after hearing you guys speak, that's where I see utility. And I'm super stoked for you guys that you've got a chain link connection. That's huge. I'd love to hear more about that. I know that's a little deep, but yeah, like I'm definitely going to join the Telegram, because I've been talking to a couple people on the back channel, like Poppy in Action, because they've got their hands dirty with the meme coin stuff, but it's still not enough unless you've got these Telegrams. And so if you've got the ecosystem for this, I think Raincoin is a huge alpha channel opportunity.
Go for it, Cade.
Oh, I thought Calvin was going to respond. Actually, this is also Calvin a little bit too, because I know he's a big trader. And I spent like a big part of last year during the bear market. I was like, there's not much to do, so I was like, okay, well, I'm going to learn how to trade. So I spent like about a year learning, and literally getting so obsessed, which is the only way I can do anything, is just to fall in and do everything and learn everything and ask every single question. And one thing that was interesting about trading some of the meme coins, some of the ones that have a little bit of legs, not the ones that just launched like 5 seconds ago, but the ones that people are like, okay, like Bonk, like Pepe, all these coins that people are like, these are going to be staples, whatever. Take that with a grain of salt. But what was interesting to me is that the key levels of support and resistance on the charts, even though institutions aren't trading, these memes, it's still like psychology. People get nervous around certain sell and buy targets because that's right where they bought. Because you can tell from the chart, it's clearly where a bunch of people either bought in or sold off. And these are nerdy concepts to the degens, but things like accumulation and like this bullish momentum or bearish or the opposite. Having this trading background actually has been pretty helpful. Maybe in some instances I've overthought something, or maybe I want to believe in something and I forgot this is like some kid in his basement who started a liquidity pool with like $18 and it just took off for no reason. And it does not follow 100%. But for me at those key levels, like things happen like right there. And so like when numbers or when the chart approaches a certain support or resistance, like my brain turns on. And a lot of times like a decision is made right there and I know that other people are making decisions. So if you're like a trader, I feel like you have a significant leg up. My friend Mike Nav, he's a big time day trader, or I don't know what you call it. Maybe a scalper is the right word. And man, he cooked during the NFT bull run like last year or in 2021. It was not even fair. It was so embarrassing how much he cooked. And I was always his exit liquidity. I found out because I just became friends with him this year. I was 100% his exit liquidity. And I was like, well, how'd you know? He's like, dude, it's just like the background of trading. He's like, I just understand how people are going to think before. He's like, they don't even realize that's how they think. And I was like, whoa, that's high level because yeah, man, like you just have that experience. Calvin, have you been trading? Have you been trading the meme coins? Have you noticed that your trading background gives you a leg up or not?
So I kind of have a personal rule. I don't trade anything that shows up during the bull market. I trade all of last year's stuff because at the bottom of the bear market, everything is absolutely gutted. Everything is just toast. And the meme coins from last year that absolutely had their 95% drawdown, those babies will do a 5 or 10x, and it's in the bag. And you don't have to worry about them rug pulling and disappearing on you because they've lasted 3.5 years. You know what I mean? So I want to be first, because if you're not first, you're last, and by the time you hear about it, you're last. You know what I mean? So that's kind of how I do it. And the holy grail in making the meme coin types of money out there is to be absolutely on the cutting edge. Like, everyone that's going to make money in the meme economy right now, they're already in. Like, nobody's going to come up with the next. Like, there may be one or two meme coins that just show up, but the majority of the run is done. Like, once people are like, oh, I need to be looking for meme coins, that's how everyone's making their money, then the ship is already off the dock. I'll give you one example. So back in 2017, they actually invented NFTs. There was Decentraland had created this world where there was every plot of land was an NFT, and it was all brand new. Like, this was brand new stuff, and I knew that it was brand new, and that was the only time I was like, okay, this is something completely unique. It's uncharted territory, and I went and bought as much land as I possibly could back in 2017. Well, it was like when Facebook changed its name to Meta, like, that was your top call. Like, you knew that was as high as it was ever going to get. Anyway, but I had bought, I think I spent $50,000 on those properties, and I had to wait 3 or 4 years still. But when Facebook did that, I was able to sell some for millions of dollars at that point. And it's because it was brand new. It was something that no one was looking at. It was something completely fresh. And every cycle has these weird things. Like, ICOs went through the fire, but if you were late on the list of ICOs, you missed it completely. It was the first ones that did it. And so a lot of the first meme coins that we've seen this season, I'm highly speculative that those will be the ones that are the biggest runners, and everything else is trying to be a copycat. And most markets don't appreciate a copycat. They like originals until the whole thing runs its course.
That, as an example, is amazing, because look at Pepe. Pepe actually was a special one during the bear market that popped off, because of, like, a incredibly culturally degen relevant dude that led the march, and is very, very controversial, and led the march, and but it popped off and people were really excited, but it was geared up to be an absolute toaster once the bull market came, right? And we see with the Pepe chart that its initial inception is just a tiny little speck in comparison to its, 5, 6, 7, 8x after that, right? So, looking at the Pepes, looking at the Flokies, looking at the bongs, looking at, like, some of the new meme coins, like Calvin's saying, for next run, I mean, you're eventually, when the bull market comes around again, you're going to see those massive gains pop off, because it's pretty similar. So I appreciate that perspective, Calvin, because it's actually, like, it's having strategy and preparing yourself and having control of your emotions and knowing that things might not play out exactly the same, but things do rhyme for sure.
Yeah, and it's just a lot easier. Like, nobody wants to dedicate every waking moment waiting for that one, like, 15-minute time span that your coin 5x's, and you got to be on the sell trigger or else you're going to miss it. Like, nobody can live their life like that. And if you kind of chill out, realize that, oh, I don't have to go from $100 to a millionaire tomorrow. I can actually take my time and do this the smart way. These 4-year cycles, it's like there's no other market that projects what's about to happen. And honestly, it is unbelievable that in crypto we have an established pattern where we all know what's going to happen. Like, it's just that half of us are too impatient to actually take advantage of it. You know what I mean? Like, you
Wait,
just
do you think, Calvin, do you think we're too, do you think possible it's just like an age thing? I don't know. I really enjoy these conversations because I'm 25. I'm pretty young and I really don't know things sometimes, or I feel like I do. And then
I mean, someone like you who's been trading for a long time, got some real experience, has had the experience of holding something for more than 4 months, and I'm like, oh wait, there's levels to this, you know.
Yeah, I
Yeah.
mean, I think it helps. Everyone, like if you're learning how to trade, first of all, you've got to blow up your account at least twice. That's just goes without saying. You have to make the mistakes, and that's why nobody makes any money in their first bull market. They get too excited. They think that anything they touch is gold because the whole market's going up, and then suddenly, without warning, the entire market reverses on them, and it doesn't reverse gently. It's unbelievably rough. Everything drops 50% in a matter of days, and people just realize, whoa, okay, I really don't have any idea what I'm doing here, you know. And I'm always preaching to people, slow down, you know, find things that have legs and be patient, because you'll make a lot more money, you know. There's two ways to make money. Like, well, there's two ways to beat the market. One, you can make slow consistent gains and outpace the market on average over time, or you can actually just hang on to your money while the rest of the market's absolutely crashing themselves, because people get so excited that they trip over their own shoelaces, and then they're on the pavement. And crypto, especially meme coins, they get you so hyped up, they get you so wound up. And you know what? Emotion destroys your money. Like, you want to destroy your portfolio, be emotional. In fact, there are certain people that I tell them, you'll never be a good trader because you can't control your emotions. For people that are like impulse buyers, people that want to have the newest iPhone, people that really are attached to just susceptible to marketing, those people are going to lose their money. And even if they have a couple of wins, they're going to be out of the game. And so after you've had that experience for a few times, it naturally slows you down. And then you start looking for things, you know, the people that are just bought Bitcoin and just held it for all these years, sure, they've gone up and down, but I don't think anybody's lost any sleep over it. You know what I mean? And that's kind of what we're creating with Rain. We're like, hey, not only is this something that's scarce, limited in quantity, but you're earning interest on it all the time. And so we want to create something that you can set and forget, and not have to, you know, be up at 4 a.m. waiting for the, you know, the spike that if you miss it, you've lost your portfolio. So yeah, it's a different animal.
Cade, it's been a minute since you said it, but when you were like, he was cooking, all I could hear in my head, just like in the back of my head. That's all that goes. Just going
Hey, we're
strong.
cooking.
We're cooking out here.
Dude, that was like, yeah, that was so unusual for a Wolf Financial space, hearing some type of audio like that. I really like where this is
I'm
going.
working on my background stuff. Just cooking here, as they say. Kelly, I haven't heard too much from you yet. Do you want to get in a comment here? We're gonna move into some wrap up in a minute or two.
Hey, yeah, it's interesting to hear what Rain is doing. I kind of look at meme coins as with a love-hate relationship. I feel like I see how they onboard people and I see how they get people excited. And at the same time, you can't help but see how many people lose money all the time. And there is like a gated information like layer that you have to have access to certain people and certain teams, and but at the same time it creates a lot of activity, which is good. And I think it's interesting what you're doing with Rain. And I see that I wasn't really into meme coins for a long time because I didn't understand really what they were. And I didn't really get memes, I guess, either. So now I understand that memes are like have social value, and meme coins are kind of a way to financially give that social value a financial value. So it has a purpose and it has a point. And I think it's cool to see what you're doing. And I like the decentralized aspect of it. And um, I want to see more of that. That's why I like Bonk too, because they're creating an ecosystem around the meme, and they're constantly doing things to make sure that this thing has some sort of ecosystem around it. And those are the things that are going to last longer and have more sustainability. So it's really cool to see what you're doing.
Love it. All right, we're gonna move into some final comments here. Got about 2 more minutes on the space. Death Notary, if you're still free here to speak, you got any other thoughts to kind of wrap this all up together on these thoughts around meme coins? Anything else on Raincoin?
I'm with Calvin on meme coins. If you're not first, you're last. My friends know that I stay away from a lot of meme coins because you do have to be up at 3, 4 a.m. to watch that pump. Usually is the time frame, and it usually only lasts about 14 to 21 days. And if you're not out by then or catch it by then, you might as well just forget about it. As far as big picture goes, um, obviously we're all waiting for halving. ETFs are definitely something to keep in your mindset as an opportunity. Analysts 101 in the financial world is follow the big money. So just always keep that in mind.
Perfect.
And get a little
And
bit of rain because interest every day, all day for forever. Like get a little bit, see if it's for you, and then accumulate as you need if you want.
yes, sir. And by the way, for my next space coming up in just 2 minutes here, we're going to be on Jordan's link, Ace the Kid. I see some of the speakers coming into the audience, so you can catch us there in just a second. We're going to be on Ace the Kid's link. Kate, you got a quick thought? I only have about a minute here.
It's only a 10-second. It's only a 10-second one. Calvin, dude, how you were saying about missing your pump? I just checked the chart, man, and I indeed missed the pump twice overnight. So I'm just gonna sit on my bag. It's fine for one of these meme coins.
Yep, meme coins converting investors to holders because they're upside down.
That's amazing.
Oh, keep in mind that Matic pullback affects obviously the rain as well. So keep that in mind for the bull run when Matic gets its turn.
True. Calvin, any final comment? I got to close this one out in about 30 seconds.
Yeah. So I just posted in the top there our link to the Telegram. I just wanted to invite everybody to come and join us and say hi and try $5 with the rain and see how the system works. Check out the website, raincoin.xyz. And we built something pretty cool. It'd be fun to have everybody come in, and it'd be fun to have some new voices in chat and all that good stuff. So thanks for having us here. It was awesome.
Perfect. Thanks so much to the Raincoin team as well as the rest of my awesome and amazing panel. Hope everybody in the audience is giving them some follows. I got another space coming up now. We're actually going to be talking about Smart Investing 101. That's coming up here in just a minute over on Ace the Kid TA space. I'll see everybody there. Thanks so much, everybody. Appreciate y'all.
Later, Wolf.